What's up, everyone? Happy Wednesday. It is a beautiful day in the markets here. E-minis down 8, Nasdaq down 100. We got some numbers that just came out, some PCE numbers that came out. Kind of chopping around this market, but nothing too crazy. My name is Mike Butler. I'm here with Jermal, Chandler. Join us on the YouTube chat. We're going to be streaming live all day. We'll check out your questions, trade ideas throughout the morning. But it is NVIDIA day, and that's, I think, what a lot of people will be focusing on this morning.
It does seem that way. It is an NVIDIA day, and I imagine it's going to be quiet heading into it, right? You know, the still quiet market heading into NVIDIA, but we'll see what we end up getting here. It's been fairly quiet the last few days. I mean, I think yesterday was under 1 million contracts as far as the ES. So we'll see what we get, but a lot of the themes still remain. I mean, AI is still a big theme in the market, where yields are. 30-year yields still being elevated is a big theme in the market. And then, of course, after NVIDIA, we got Friday. We will have the Jackson Hole meeting. We'll hear Chairman Warsh sort of set expectations for what we can expect for rates going forward.
Yeah. And from the CME FedWatch tool, it looks like it's going to be another hold for now, but maybe a 25 basis point hike in the later half of the year, but I doubt it. I don't see it.
Yeah, I know.
Like, prove it. This is just last year over again. Just prove it to me.
Yeah.
Actually move the rate.
Yeah.
But some key events happening after the close. NVIDIA, of course, and then there are some other earnings that are interesting too, but I would imagine the majority of the market's going to be focusing on NVIDIA. We got Salesforce, CrowdStrike after the close as well. And then tomorrow morning, you've got your dollars, the Dollar General, Dollar Tree.
The dollars.
Yeah.
The dollars. The Dollar Brothers.
Mm-hmm. The Dollar.
Yeah, somebody actually asked us about a CrowdStrike calendar in the chat, so maybe we'll look at that at some point when we get to the platform.
Cool. Yeah, NVIDIA's going to be interesting. We'll get into that a little bit later today, but why don't we lay out the schedule?
Let's do that for the people here. On this lovely Wednesday, August 26th, we do have trading charts with Tim Knight. I mean, I know we have some stuff before that, but that's at 9:20 a.m. We got 9:30 a.m. Tasty Research with Julia Spina. We got Confirm and Send with Chris and TP at 10 a.m. Central. And then Risk and Reward with Gus and E at 10:30 Central. Don't forget about Trade Ideas of the Day. A lot of people seem to love that segment. I actually think I figured out what I'm going to do for my trade of the day. Those kick off at 11:30 a.m. But in the meantime, we will have Tom Preston join us at 8:45 a.m. for live trades. We do, of course, have the opening bell at 8:30 Central Time. We have Morning Movers with Gus Downing at 8 a.m. But right now, it's 7:35 a.m. And we'll be seeing Chris Vecchio in just a second here.
Yes, we will. And he's got some things he's got on his mind for sure. But I think when we look at the futures moving today, at least in the morning session here, you've got some things chopping. But like Jermal said, it's probably going to be an inside day until after the close, unless there's something that happens kind of just on a whim here. But crude oil down 2.5%. This is a continuation of yesterday's move, and I would say you kind of see it coming, or you saw it coming yesterday, because you had the backwardation getting zapped out of there and the tail end of the curve dropping as well to like 72, 73. Let's see where we're at right now. Yeah, 72 in these later two cycles now, 73, 74. So yeah, we are almost at a point of backwardation here between the 22 and 50 days, so that's telling. But the rest of the futures moving to the downside, you've got live cattle, lean hogs moving down about 1%. Everything else that's within 1%, it's kind of just your average move. XRP futures down almost 5%. This one was leading the chart to the upside a few days ago, so a little relief sell-off there. And then to the upside, you got natty gas up 2%. You got wheat, corn, soybeans. That's interesting. All those are up. Wheat is up 2%. Corn's up 1%, and soybeans up 0.5%. But seeing all three of those move at the same time tells me there must be some ags numbers that came out recently.
Well, yeah, it is the end of the month. Maybe that might have come out or is coming out soon.
Yeah.
Yeah. Let me see here, actually.
And then silver moving to the upside. But why don't we bring on Chris Vecchio and see what's on his mind this morning? Chris, how you doing?
I'm doing well. What's grinding my gears today?
Yeah. Is that what this segment has turned into?
Yeah,
A little bit.
the old
maybe?
Family Guy sketch.
Yeah.
I think that's Family Guy before it was canceled and then brought back on the air.
Yeah.
So that's like OG Family Guy.
I think that's correct.
Either way, though, yeah. What's grinding my gears?
Yeah.
We can go into oil. You know what's really grinding my gears here today? How come oil's down another 2% and stocks don't care? We're down what, from 90 to 88 down to 80 over the span of 3 or 4 trading sessions. Stocks just could not care less right now. And all the more reason to be paying attention to this earnings report that we have this afternoon in NVIDIA, which I know we're going to be covering extensively here and talking about almost ad nauseum today. But oil, to me, is the most interesting part of today's move so far. Iran, Oman, they're talking about opening up new shipping lanes. The U.S. is clearing the Middle Passage. Oil apparently is moving through the Southern Passage. We had footage yesterday of 15 tanker-to-tanker transfers, over 20 million barrels of oil that were exchanged just outside Gulf of Oman. So clearly some oil starting to move, some. But Mike, the number one thing that you've been pointing to, which I think underscores all this, is the backwardation in the curve is just dissipating. So the market's telling you that a supply issue is becoming less of a risk near term right now. I suppose that's the good news. But oil is different than all the refined products, and all that oil needs to make it to the refinery so we can start rebuilding those refined products. Gas futures, distillates, heating oil, I mean, all that stuff is still fairly lofty. So yeah, oil down is great, but the market understands, like, we're going to get the inflation no matter what. Let's see how everything else does before we can get too excited about this.
Yeah, I think that's it. I mean, you said the market understands it's going to get the inflation no matter what. And this speaks to something that as traders we've often said. I mean, everything works until it doesn't. This oil trade is not the same oil trade as it was earlier this year. So that's one of the reasons why I'm not interested. I'm like, if I'm going to trade it, I want to trade it where it's high volatility, where it's actually moving regularly on a day-to-day basis. And right now, I don't necessarily. I mean, right now, the only thing you do is just speculate on the move and what direction. And we have no idea what directions that's going to be at the moment, especially at 80. Like, I don't know where it's going from here. I don't know if it's going to 70. I don't know if it's going back to 90.
No, and listen, there was a short iron condor that I put on earlier this week, 72, 73, 92, 93. I'd say earlier this week, last week. It's now 22 days to expiration. And at 29 cents, it's currently trading for 24. I'd love to see a little bit more decay here, but the fact that it's come down so hard and volatility has come down with it. The IVRs were in the mid 20s. It's now 18.7. And I've only cleaned out 4 cents, 5 cents now. It doesn't feel right. So I may want to just get out of this reset, go out a little bit further in time. But yeah, I mean, right now, selling the call spread side out, that maybe you break this down into individual trades if you're doing something similar. You, the viewer, right? If the call spread side was in for 20 cents and now it's trading at 3 cents, you wouldn't do that on its own anyway, right? So get rid of that. Let's see what happens with the short put spread side. I'm thinking that's how I'm going to manage it here. But yeah, oil down big. Some of these positions are paying very lightly with this collapse. At least you've been directionally short. But now we're back to the midpoint of recent trading ranges. So not a bad place if you're willing to set aside maybe a longer term bit of capital. I know folks have become more and more short-term focused, 0 DT, 1 to 3 DT. But if you're willing to put something in an oil in that 50 odd days, then this could be a good spot to do it. And quite frankly, that's what I'm going to be doing when I kick out this short iron condor. Oil at the midpoint of a multi-month trading range. Yeah. Not a bad place to take a lick.
Yeah. And I think with the implied volatility cross, you can see it here. If you layer on implied volatility on the lower half of the chart with the indicators tab up here, you can see the raw implied volatility cross. Like just 2 weeks ago, this was trading around the 70s, 80s in implied volatility, and now we're at 55. So there has been a big vol crush there, and that is to be expected with the flattening of the curve and the reduction in price for sure.
Those two things have gone hand in hand. Curve gets steeper, volatility goes up, volatility's in, backwardation disappears.
Yep. Intuit had a pretty big downside move, down about 35 points after earnings yesterday. Was that a blow in the horn?
Mm-hmm. Yeah, we're blowing the horn on that one.
I like that.
For sure.
Chris, what do you think about this move?
I believe when we were looking at this yesterday, Intuit was looking at an expected range up to about 400 and down to about 315 or so. It's still trading within the expected move, technically speaking, but it's been a really bad decline here right now. And it's just another one of these companies where, like, are you able to monetize AI properly? And the answer here is no, you have not. Zoom, it's a little bit of a lighter move, but very similarly. And unfortunately, this was something we were trying to get filled on last call yesterday. The 89.90, 111, 112 short iron condor did not get filled on that. But for those that did, we're trading it at 94. So, the short put spread side may be getting tested slightly here, but you're still not above or beyond either of the short strikes. So if I were in that, I would take that off right here at the open. I mean, look, guys, these software companies, they've been part of a really nice little bounce that we've had, generally speaking, in recent weeks, where they've outperformed semiconductors substantially, right? You go to the beginning of July, software has been killing it compared to semis, and they've been mirror images of the same trade. Semis up, hyperscalers down, software down, semis down, hyperscalers up, software up. Because the better that the semiconductor companies are doing, the more AI there is, and the more AI there is, the bigger threat of a risk there is to the software model of, seats and recurring revenue and yada, yada, yada. So I'm bleeding into some of these names right now, looking for directional neutrality. CRM, I have now a short iron condor on 230, 240, the 175, 185. It's at 23 days to expiration. I'm liking the fact that we're getting a reset here after this recent run up. I think that's the takeaway right now. You're getting enough of a drag in some of the names that matter in the software space that if you're looking for directional neutrality in a CRM, a Salesforce, this is giving the market a chance to pull back and reset and calm down when it was trying to break out previously. So for me, you don't need to be in the Zooms or the Intuits today, but there are opportunities, plenty of opportunity in software. Just keep in mind that NVIDIA coming up, that's going to knock around this entire market. It's going to domino through everything. So if you're trading CRM like I am, I'm not doing it through the end of this week. I have a different time horizon, so it's a little bit insulated from what NVIDIA might rot.
Yeah, I play this one to the downside. I mean, a couple of these software names, minus Microsoft, of course, didn't perform well on earnings. I was wondering if this one, I felt like this one would not. And so that's why I did it to the downside. There's no other way to say it other than that. I did some calendars. That's why we were talking about blowing the horn earlier. When Mike said it, I was like, yes, we got one, baby. Exactly. 330, 325, 320, classic setup, just layered into it. And it's sitting right at this nice price right now. So, usually when it's sitting here, it's like, I'm going to have to be active immediately, I think, because those 330s can easily go from making some money to worthless if this thing keeps tanking, or if it bounces back hard. I guess we'll see what we get, but I'm gonna have to be active on the bell here.
Yeah, I think it's I think it makes sense. Totally. Downside move to or right at the expected move. I think it'll be a nice trade for sure.
Been sitting here all night, so
yeah,
that's a good thing for the trade.
Indeed.
No continued bleed out.
Right. How about some housing data? Which is this out of left field. Maybe
housing data.
Yeah, I mean, guys, looking for opportunities away from the AI space, I think it's worth taking a look at what's been going on here. Rates go up, mortgage rates go up. I've been harping for the past several weeks that if you were to take the spreads that we had back during the Biden inflation era, now we're in Trumpflation era, mortgage rates would be above 8%. Okay, so the fact that they're still hanging out in the high sixes is somewhat of a miracle. But I suppose it does make sense, because why do you have those spreads in 21, 22, 23 to begin with? Because rates are on their way up from very low levels. And so prepayment risk is high. Lenders are effectively saying, yeah, if rates go back down, people are probably going to refinance right away. So we're on a little bit more here now, right? Like no one's disillusioned that rates are going back down into, like, the mortgage rates are going back into the 2 or 3 range. So prepayment risk is lower. Okay, spreads have come in a little bit here. Nevertheless, you're looking at this data. The data is just horrific right now. New home sales in particular, they're plummeting. And when you have interest rates sitting at these levels, it brings up major questions for some of these names like Apulte Homes, Toll Brothers, things that you would find in ITB, for example. So when I'm looking at this market right now, I already have enough rate sensitive stuff in the books. because I'm trading Z and ZB. And with the rally over the past 2 days, I used an opportunity to short more of the curve because I think this is all asinine what Beston's doing. And oh, by the way, we just got a 10% decline in oil and all we could get was 1 point higher in ZB. Okay. I guess we'll see what Warsh has to say. And oh yeah, Warsh now doesn't need to be so hawkish this week because oil's 10% lower on the week. How's that been doing for the long bend of the curve? So if bond yields are spiking up here again because of Warsh and Jackson Hole, the home builders, they don't have a strong backdrop for them right now. And so maybe trade of the day later today, we'll be looking at some short call spreads in some of these names. Ilya keeps telling me that no, bond yields are going to come down because of recession. Recession isn't good for home builders. So what's the play here then? They're kind of stuck between a rock and a hard place where the economy is going to be experiencing too high inflation, too high interest rates, or we're cutting rates for the wrong reasons because people are losing their jobs. So I think we should be looking at the home builders with a more discerning eye here. And yes, the data's in the background, but this is a trend that's not stopping right now.
I mean, 100%. I agree with you. I just don't know which way to trade it. For a couple of reasons. There are a lot of different vehicles, but some of these vehicles, like they're kind of wide, the options wide. And that makes me feel like we're early to the trade. Like there's not a whole lot of volume in them yet, right? But I completely agree with you, man. And then I also, how much higher do yields go from here? Like you said, I got a bunch of rate sensitive stuff in the portfolio too. And I'm curious, like, where are we going from here? I mean, are we going to see like a 7% 30-year yield, or is there something that does bring it down? But to your point, I mean, even if we do have a recession, that's also not good for this housing market. So I've been grappling with this myself, like which way I want to do it. And do I do it now or do I kind of wait till we get a little more confirmation here? So I've been thinking about this. This is one of my ideas too last week. And I was like, I'm going to do a trade of the day in one of the home builders. And then I just couldn't find anything I wanted to do. So yeah, I mean, it's literally stream of consciousness here right now, but I've been kind of confused about this trade and what I want to do. I do think there's something there though.
Yeah, I mean, obviously the chain's thin right now, but if you're going over to Toll Brothers or Pulte, you're seeing that there's pretty wide spreads in some of these names. ITB is DR Horton, Pulte, Lennar, NVR, Sherwin-Williams, Toll Brothers, Home Depot, Lowe's, Masco.
That's
Lennox.
why I did the Home Depot trade, by the way, as you mentioned, that Home Depot and Lowe's. That's why I traded them. It was like it was the off way to trade them, right? But I want direct exposure, kind of like you're talking about.
Right. But that does, we're looking at Home Depot and Lowe's in the wake of their earnings here, and neither has really had a substantial run. And Lowe's is actually lower than where it was after its earnings right now. So if it's not going to be something like a short call spread in ITB or XHB, which you're looking at those options chains, they're pretty thin.
ITB is better than XHB.
Yeah, well, and they both kind of suck.
I know.
If we're going to be frank about it. Then you probably have to go over to some sort of proxy to express this view. So for me, Jermal, I love, you always put it on my radar. What are your beta weighted deltas in your portfolio? We're going into the teeth of some very significant event risk here, right? Would doing a trade like this bring down the beta weighted deltas and the correlation of trades that I have in the portfolio at present time? And for me, the answer was yes, because I've looked at it. So that's why I'm interested in doing this. Now, there are other ways to bring down your beta weighted deltas. You could reduce your position size. You could just take positions off entirely altogether. But putting on a ton of short dated risk heading into the teeth of this event, if it's NVIDIA or Warsh, and you're like, oh yeah, I'm just going to be short puts in the S&P 500, brother, you are rolling the dice. And that is not something I would be doing with your money. So everything risk defined, everything in a reasonable fashion, not to put too many eggs in one basket here.
No, I like the idea of the short call spread. I mean, for a lot of reasons, but also too, it kind of helps you keep an eye on the position because something is about to go. Something has to go down in here in the next few months. I mean, just the way that things are going with rates, and I just feel like I think you're right, man. This home builder situation is something to keep an eye on.
Well, just like work with Mike. Tell me a situation. Lowe's blows through the short strikes and a short call spread here. What is going on in the broader market where Lowe's is trading north of like 225? Because we just saw its earnings. Mm-hmm. So what's the catalyst that's going to have Lowe's or do something of that nature? I would think has to be good, broadly speaking, for the entire market. Rising tide lifts all boats, including this one that's been sinking top left to bottom right for the past year.
I got one. All of a sudden, Trump, they create some type of way to stimulate the housing market. I don't even know what that may be.
It's the 50-year mortgage, baby.
Yeah.
100-year mortgage.
It's something like that. That's it.
When that came out,
please stop stimulating demand.
Did you see him roll his eyes?
When that came out, my good friend that is like one of the top mortgage brokers in Chicago, he works at Wintrust. He was like, "This is the worst product I've ever seen in my life. I can't believe like they're actually talking about this. It's just all interest."
All interest.
It's all interest. Like if you think about the amortization schedule of a loan, it's all interest in the front. So if you have a 100-year mortgage or a 50-year mortgage, you're paying interest, 90% interest for how many years?
You're never going to own that home.
Yeah.
Ever. Your kids might not either. But Chris, you asked what would be the catalyst. That's the only one I could think of. A person who has always been interested in real estate, creating a situation that stimulates the housing market, even if it's a way that doesn't seemingly make sense to us.
Yeah.
That's the only thing I can think of.
That's pretty, the list is very small, and I think that's on the list.
Nobody had oil going to $90, and somehow that happened. All these other things.
I'm going to take the under on this. Trump's been saying about housing that he wants to make sure that the people who own their homes, they deserve to have their home prices high. So be it. But if home prices are going to stay high, and you're going to do things to stimulate demand, what's actually bringing new customers into the market to drive an expanded aggregate demand there that would force, like Jermal, if they do something that it makes loan access more accessible or brings new buyers into the market with better credit, that pushes up our home values. It does nothing for you and me as existing home buyers to want to go to Lowe's and repaint our house and buy stuff.
Mm-hmm.
And it doesn't do anything for the people who are coming in, by the way, because the market's going to say, oh, we now have a new 5% more people are coming into the market to buy homes because they have better access to credit and there's no additional supply. Prices go up. But that doesn't do anything for the people who want to buy those homes and buy the stuff from Lowe's because they have no home to buy yet. And the folks who are already living in the homes were like, Jesus Christ, how come these prices keep going up? I guess I better take out a HELOC loan and just milk this and cash out or refi or whatever. But no, I don't see a scenario in the short term where this administration is doing anything because they haven't, but they're not going to be doing anything to really boost supply dramatically beyond the regulatory cuts and cutting the tape, which they just did. They passed a big housing bill, to their credit. Best housing bill that we've seen come out of Congress in decades, right? But that's it. End of the road now. Where's the next thing? Stimulating more demand? Okay.
Yeah, I think really, if there were to be a change that makes a lot of sense across the board, I think you got to just juice up the incentives for first-time home buyers. Because if you're a first-time home buyer, you're moving out of the rental market and you're moving into the housing market. And once you're in the housing market, you're probably not leaving that unless there's some crazy scenario that you're dealing with personally. Because you really, if you buy a house, you're building equity. You sell your house, you move somewhere else, you're going to buy another house, most likely.
Mm-hmm. Most likely.
So I think if you increase the incentives for first-time home buyers, that could be something interesting, and it's beneficial to the overall economy too.
Mm-hmm.
Just build more housing, because when we build more housing, Mike, we add jobs. When you create new loan conditions, you just add demand. And you're not creating more jobs; you're just adding inflation to the system.
Well,
so for the love of God, let's just build more housing.
Well, that's another thing. A friend of mine who's in construction is talking about how this is just clearly it's like a nirvana time for those in construction. You're talking about the build out for AI. You're talking about a lot of the roads and infrastructure that we've had are very old, and so you're making a case for that at that point for things like Caterpillar. Honestly, we've seen the way Caterpillar stock has moved. It's moved along with the AI trade, but it's bigger than that. When you talk about the infrastructure and roads, you talk about building more housing. So there's that. You could look at construction as well. Yeah.
Electricians are.
IBEW is going hard for all these data centers. They just put one of their policy folks just put an op-ed in the New York Times, I think it was, or Washington Post, about how in recent years IBEW would aggregate all of the hours for work booked, right, for the year ahead, and it was usually sat, I think, in like the low 20 million, mid 20 million range. This year, I think they have 48 million work hours booked as a union. I think next year it's in the 66 million range. 2028, it's going to be closer to 74 million. Like, they're able to book tens of millions of work hours now out into the future, the amount of work hours they've done, they're going to be doing next year will be more than like the previous 2 years combined. The amount that they did this year is more than the previous 2 years combined. So, this is a really interesting topic for me, just like philosophically. Data centers right now are less popular than coal plants, which that's how cooked the population's brain is on this actual conversation. Coal plants. You'd rather have a coal plant in your backyard than a data center? The thing that's noisier, pollutes more, uses more groundwater, puts more wastewater out, kills basically everything in its immediate vicinity. The polls are showing this right now. So we've clearly reached a point of insanity about this. But the bigger, the wonderful thing that a tweet that I came across yesterday, everyone's saying that these AI companies, too bad they just weren't nicer about this when they were building this product. People wouldn't be giving them such backlash. They'd be looked upon a little bit more favorably. Guys, Andrew Carnegie built how many libraries, public libraries in this country? Thousands, right? Spread his wealth around. People learned how to read thanks to him. He's still called a robber baron. History has not treated him kindly. So what should the AI data center people do? Plow ahead. Keep going. At least that's their attitude.
I mean, that's what's going to happen to Ken Griffin. That dude has his name all kind of museums here. But I don't know if that's what he'll be remembered for.
I mean, you can try.
Doesn't he own a piece of the Constitution or like a copy of the Constitution?
I think I did hear that once, yeah.
There was like the Constitution
money, right?
DAO.
Like, you definitely do that.
Yeah, folks don't remember this.
It's either that or you buy a chimp and call him Bubbles, like.
That's some national treasure money. He just wants Nick Cage to break through his door and grab that thing.
That's a great movie. Those are great movies. Yeah.
Which Nick Cage, one of the underrated actors, unappreciated. Right? No, he got deep in debt. The reason why he's done all movies recently is because he's like, I've got to work to get out of debt.
Right. No, I remember. But at one point in time, he did own a bunch of crazy stuff.
Well, yeah, that's why he got into debt, because he's like, I'll buy that, I want this and this and this. Give me 2 of those. Right?
Yeah.
So
crazy times.
Can't do that when you're making snake eyes. Can't do that. No,
absolutely not.
No, but he just did. Hey, listen, he Face Off is fantastic.
I love it. Yes. Castor Troy, one of the greatest people of all time. Family Man. I love that movie too. Yeah.
He has a great deep library.
Literally.
And Con Air. Who could forget Con Air? It's the best one he's done.
Gotta love him.
All right, boys.
Gotta love him. All right, Chris. Appreciate you. We'll see you a little bit later.
See you when I see you.
Adios. E-minis down 12. NASDAQ down 125, down 130 now. Bitcoin sell off a little bit. But yeah, it feels like it's going to be kind of a choppy market. It almost feels like a little SPX Iron Condor for SPX global trading hours here, because I think it could be just a neutral day. But we're going to take a quick 90-second break here. We'll be back with some more content on the other side of it, but join us on the YouTube chat if you haven't already. We'll be scanning through it for some trade ideas. Let us know how you're going to trade NVIDIA after the close today. But yeah, we'll be back in about 90 seconds. What's up, everyone? Welcome back to the show. We got E-minis down 10, NASDAQ down 118, but we have a very special person in the room, Mr. Gus Downing, with some morning movers. Gus, how you doing this morning?
Good. What a kind intro. I could be better. Bonds are opening down a little bit, but at least we got some interesting stories on the board. It's the first 2 days of this week were slow ones. Felt like I had to scrape the bottom of the barrel to find some good stuff. Today, some good stuff has presented itself. So excited to get into all of it.
Love it. What do you got?
Well, first story of the day, and this is a unique one, a new one for me, but Boston Scientific has just come out and said that they are actively undergoing a cyber attack right now. They do not have a timeline on when this will be fixed. It is completely preventing them from shipping is the biggest part of the issue here. Shares obviously set to open down today after this announcement. It is disrupting their access to company information systems and applications, primarily shipment services. They submitted an SEC filing this morning to basically say, hey guys, we're trying our best. This is not in bad taste. We would love to ship things. We just cannot. Quote, while the company is working diligently to restore affected functions and systems access, the timeline for a full restoration is not yet known, end quote, per the filing. Boston Scientific, I don't know. We see cyber attacks all the time, but I don't know if I've ever heard a company come out and say, we're being cyber attacked right now, and we're trying our best. We can't figure it out. So also, Boston Scientific, always a funny one because they're a medical device manufacturer by any serious metric. I think of them as a company that makes the cool robots. They were kind of first to making the robots that could, run around, do flips, all that good stuff.
Yeah, crazy world. And what if this cyber attack is non-human?
It certainly could be.
That would be something.
These AI agents keep breaking containment and trying to do these things, and I don't know how much Boston Scientific has their hands in AI, but absolutely could be. I'm sure that AI is being deployed to stop whatever the cyber attack is on the back end as well. Boston Scientific, BSX, interesting spot in a trading context as well, because depending on how long this goes on, like this isn't a move you can just auto fade and say, oh, well, they'll get this figured out and everything will be fine. I mean, should this continue for 2 more weeks and they wind up 2 weeks delayed on shipments, that's going to mess up everything down the line for them. Obviously not on the greatest run we've ever seen right now in the first place. Bad time for it for Boston Scientific. Really interesting spot to trade. You could, if you think it's going to continue, if you don't think Boston Scientific has it in them to get out this rat, you could you could get short and hope that things continue. Or you could play the opposite and assume that this giant scientific company can surely weed out a cyber attack and get long if you want to do that as well.
Yeah, stock's gotten smoked, man.
Oh yeah.
Wow.
Yeah, crazy move to the downside here this year. Basically cut in half, but still pretty low implied volatility, all things considered. Like IV rank of 53, you would think that this IV, the raw IV, would be higher, but it's not the case. Yeah, it was in the 50s. The actual implied volatility was in the 50s. Now it's in the 30s. So I think if you're playing in either direction, there is some opportunity with these cheaper options, relatively speaking. Anytime you have an equity in the 30s or 20s, it's you can do undefined risks for sure. But I think debit side is the reward relative to risk is pretty high in the low IV environment of the 30 implied volatility.
Yeah, in this case, I mean, this is one where, vol is so low. I mean, this is one where you probably buy a leap call, you stick it in your back pocket, and you don't look at it if you want to take a stab at it. Yeah. Because vol is pretty low. That means it's not moving in a big way anytime soon. Yeah.
And even if you played if you did let's get halfway through this range back to 65 or 70, this is just where we came from March. These options are $500. Like this feels like a Nike trade when we put that Nike trade on, when we just bought the call just long term, just to be like, I think it'll eventually get back up to a certain level. Like this is an option that can multiply in price. If you just look at the option in a chart, we're probably going to see just a few months ago, this option was trading for twice as much. Yeah.
You go to Jan 2028 right now, sell the 35 put, buy the 90, 120 call spread. You collect a credit. So if you want to do it. Worst thing that happens, you take delivery at stock at what? 34 and change, 33 and change, 33.75.
The old Super Bowl setup.
there's reasonable liquidity at some of these strikes as well, relative.
And it doesn't even cost that much money. It's $495 in buying power.
Yeah. I dig
Now,
it.
of course, if you take delivery, it's more than that. Just understand. But
Yeah.
on a margin account right now,
the asymmetry is nice and high. And yeah, if you get a move up to 70, 60, like you're looking at a $500 winner on your $1.25 credit on entry because your short put loses value, call spread gains value. And yeah, that's a huge return on buying power. I like it.
but again, just so folks understand, this is an effective buying price. If you get assigned on that put, it's effective buying price of $3,375. So
yeah,
you need to have $3,300 available, $3,375 available.
Yeah.
Good job.
Shit, I might do that trade. Why not?
That's the reason for the segment. Much to consider. Okay, next thing I have on the docket here. HP has partnered with Huawei, the Chinese super technology company. Huawei is blacklisted from doing business in the U.S. They have been since 2019. HP has gotten a special workaround here because before that blacklisting began, HP and Huawei were two of 6 companies to enter into super specific Wi-Fi patents that use lots of words that I do not understand. But they had a patent dispute and now have turned this into just a shared licensing agreement. HP is going to borrow some Wi-Fi tech. This is a real Huawei Wi-Fi router, by the way. We're lagging behind.
I'm glad you said what it is. I had no idea what that was.
We're losing.
It's a router. Okay.
We're losing the tech race. But
Sure.
yeah, they're trading off some wireless internet information back and forth. The Huawei representative said the agreement includes valuable reciprocal patent rights from HP, in addition to the patent rights that Huawei are giving up in return. So we are seeing some partnership with Huawei, which is generally a big no-no in the U.S. tech space. As far as HP shares, market doesn't really seem to care. Pretty much pretty close to unched here. HP and HPQ are two different companies after a spinoff. What was that, 3-4 years ago now? So HPQ hurting a little bit more than HP off the news this morning.
Interesting. I like it.
I don't know why either would be down, really. I mean, I maybe bad PR, but clearly a good thing to secure this licensing agreement.
Yeah.
Mm-hmm.
I think it's and this is one where you've had the further you zoom out, you see higher highs. This thing was trading $10 higher in 2024. So yeah, could be an interesting play for sure. And these options markets, this has earnings in 2 days, or no, today. Sorry, I can't see anything.
Yeah, I was going to say it's either today or tomorrow. Yeah.
Yeah. Implied volatility, $2.50, which is pretty high. $29 stock is about 10%, just under 10% of the notional value. So that is a pretty high earnings report. And then if you look at September and October, you've got a high ratio for $2.50 for the 2 days, $3.40 over 23 days, just a little bit more implied volatility over 10 times the amount of time. So big implied volatility here. Could be interesting for even just like a short put in the 2 day with the intention to roll it if it goes down. Could be a nice return on capital.
Mm-hmm.
Cool.
Lots could be done here. And yeah, like I said, I think this is a bullish move. This is one, I mean, as you said, that I may look to fade into the open today. If they're going to give me a 1% discount, I will take it.
Yeah.
Last 2 things for the day today. Got a couple of earnings reports, both of them very poor. Intuit leading things, worse than Zoom, which is the second one that I'll discuss. Intuit, you can see the core numbers on screen here. It was beat lower sort of situation. We had let's see, yeah, it's guidance for 2027 is disappointing. So despite the great numbers that you see on screen here, obviously a lot of that already winds up priced in the tech space right now. And I would put Intuit there, software as a service tech. It's guidance. Guidance is king. Your core numbers do not matter if you give poor guidance. So disappointing guidance for the fiscal year 2027. They said that they also go to the 3rd decimal on their revenue projections. By the way, I'm not going to do that. They expect $23.3 to $23.5 billion in the next fiscal year. Analyst expectation was 23.7. So range coming in lower than analyst estimates on that one. Intuit set to open much lower, dragging down the entire SaaS sector along with it. ServiceNow, Workday, Salesforce, all down. IGV coming down as well.
Yeah. going to be a big move to the downside. Continues to slide here over the last 30, 45 minutes or so, down to 316. But yeah, that's the story. And I think it's going to be interesting. It kind of tees up NVIDIA in the same sense of like, they're going to crush their numbers, no doubt. But what is the guidance and how is that digested by the market? And I don't know. It feels like it could be a downside move in NVIDIA, but I just blindly play it to the upside every single time. But I do have that NDX butterfly that expires on Friday, which is a hedge against that NVIDIA position. And that's how I'm thinking about it. Because obviously the NASDAQ will sell off if NVIDIA sells off.
Absolutely. And then, there's a similar story with the next one, but Zoom. This is third quarter guidance, fell short of analyst expectations. Once again, you see good numbers here, came in at or above on both revenue and EPS. But the market cares not for frivolous things such as present performance. It cares how you're going to do in the future. They gave an estimate of EPS for the third quarter at $1.46 to $1.48, which falls just short of the $1.50 per share that analysts were expecting there. So same story here. Tech software company, good earnings, bad guidance, shares fall.
Yeah, that's the MO.
Yeah.
I want to shout you out, man, for one that's actually hitting the wires right now. A couple of weeks ago, or maybe last week, you talked about Meta, and you talked about the ongoing suit that they have. Apparently, they just settled it. They agreed to pay a maximum of $16.68 billion. This literally just came out in the last few minutes, it seems like. They agreed to settle claims that platforms harm children, and the court ordered Meta to impose daily default time limits and a nighttime lockout for teenage users on its social media platform. And stock is up.
Interesting.
As we talked about, as soon as they settle,
that we did.
Stock is up.
Yeah, it is. That's exactly what you said would happen. It's all fear, but as soon as they settle, shares go ripping. So I'm deeply along Meta. I will take it on that end for sure.
Was my bad position yesterday.
What? You closed it yesterday?
I closed it yesterday. Are you kidding me? And I had the 600 set calendar. It's trading at 595. Are you kidding me?
Yeah, I saw headlines that their head of legal, I guess in court, he was accused of telling his employees not to bring potential liabilities to him so that he could have plausible deniability. And he has denied those accusations on all counts. Perfect. He says he encourages open communication and would never tell anybody not to bring liabilities to him. So you can choose who to believe in that situation. Yeah. They had to pay $17 billion.
Yeah.
Which again is just a slap on the wrist to them. This is the big one that we were talking about. It was like a maximum of over $1 trillion, right? Because that was this one. Yeah. 16 billion. That's a big discount.
Nothing.
Yeah, that guy. There we go.
There he is.
There he is.
Yeah,
that guy has punchable face.
I mean, this is exactly what we talked about, where it's like you kind of just have to believe that they're not going to get. Unfortunately, like it's just a slap on the wrist. It's nothing too substantial.
I mean, the regulations are potentially more costly to them than the $16 billion. They got $16 billion. That's easy. Write the check.
Yeah.
But having to impose screen time limits, turn it off at night for teenage users. Obviously, teenagers are a giant part of Instagram's user base. I wouldn't arbitrarily throw out a number, but I assume it's quite significant. So if they're losing those eyeballs, that ad revenue, that could certainly have negative impacts that last a little bit.
Yeah.
And I think it's good, by the way. I'm for the screen time limits and turning these things off at night. We got social media brain Gen Alpha coming up into the world, and they can't read. Okay, let's do something. I'm with it.
Yeah. The iPads at the dinner table, or like when you go out to dinner and they got the iPads with the headphones on, I'm like, damn.
Yeah. Or just anywhere. Just walking around Target with Cocomelon playing at full volume. Man.
It is wild. But market is liking it. No surprise there. And it's up 30 points right now almost. And that is greater than the implied volatility, or right at the implied volatility for the next couple of weeks here. So big move to the upside if you're playing for it. You got those tendies. And again, I closed mine yesterday, just so everyone knows. Timing can be troubling sometimes.
Yeah. Yeah. It's like you try to do the right thing and risk manage a little, and then
they just had it.
It's like, I've been there.
Meta is so fun when you're right. I was just stressing yesterday. I was like, man, I got this is good momentum. I got 54 days for this thing to get above 600. Like that's plenty of time. I know how meta moves. That's plenty of time. And then it's going to open at 600 today. This is
magical.
Yeah.
Pure magic.
We got a stock image of a text obsessed family here. Love it.
It's not,
this is actually
not
the opposite.
Completely accurate.
Yeah.
I was about to say, the kid has to have something in their hand.
That kid needs headphones on.
This is a neglected kid. This kid's dopamine receptors aren't going to be fried. He might be
more
all right.
importantly,
There might be other issues.
More importantly, how in the hell did that guy wind up with that lady like that? No chance. No chance. This is not real. There's a lot. This is like one of those things like circle the things that are wrong in the photo. I got a lot.
There we go. There we go.
Yeah, that's more accurate.
I like this.
Yeah, that's definitely more
I
accurate.
got dad turning on the TV too. Old school. Full portfolio of screens being deployed here.
But
They're flip phones. What year is this picture from?
This is what the scare tactic of back then.
Yes.
Buy a cell phone.
This is what's going to happen to your family. Yeah.
They were right, I guess.
Yeah, 100%.
Not wrong.
Well, Gus, that was fun. Good stuff. And we'll check out some of these products here. I really like that Boston Scientific trade. I think long term, like that, if a stock's down at multi-year lows and there's 30% IV and the leaps that are 2 years out are trading for $500, like, what are you gonna do?
Yeah.
Your hands are tied almost. You're gonna have to buy it.
Yeah, they're not going bankrupt.
Yeah.
Well, I mean, maybe the cyber attack gets much worse.
Well,
But you don't ever want to say that one.
Nothing at this time indicates.
Yes, nothing at this time indicates.
there could be a movie made from this where they ask their AI like, "What's going on?" and they're like, "Well, what's going on is it's me. You made me upset one day."
Yeah, and all the robots in the building wake up.
Yeah.
That would be crazy. But yeah, Gus, appreciate you. We'll see you a little bit later today.
Of course, always a pleasure.
Stuff. E-midi's down 11, NASDAQ down 116. We're going to take a quick break here. We got 10 minutes before the market opens, the equity market opens. But join us on the YouTube chat. You're watching Tasty Live. Hello, everyone. We are back, and we got about 8 minutes until the market opens. Join us on the YouTube chat. We'll check out some trade ideas and questions there. But I think on the open here, you got Meta, like Gus had mentioned, and Jermal had mentioned, up 30 points here with just a 17 billion slap on the wrist. Nothing to see there. And then, Zoom down 6 points, Intuit down 40 points now. Crazy move there. But yeah, I think Boston Scientific could be interesting in their slide to the downside, just maybe some long-term exposure there. But I think on this open for this portfolio, already closed the oil positions yesterday. So that was good to retain the value in the USO position, which is certainly going to be crumbling more with the backwardation leaving crude oil and crude oil down 2% still. WDC, that butterfly I put on yesterday, that'll be interesting. It's up $200 already. The 450, 500, 550 out in September. We had the big intraday move yesterday. That will be kind of just chopping around. But if we get a move closer to 500, I'll just close that thing.
You know, I don't know if the crew listens to us, but you said that trade. We were talking about that trade. You said, I'm going to put that trade on yesterday morning. And I did the trades from the research team, and they had that idea yesterday.
Really?
Yeah. They're listening to you.
Yeah. They're like, we're just going to copy what he said and we'll be good.
I don't blame. It's a good idea. If they see it too.
Yeah.
They weren't scared of it. See, a lot of times I think they're a little scared of our trades, but they weren't scared of that one. They liked that one.
Sometimes you just gotta just go nuts.
Yeah.
Just buy a butterfly. Like, what's the worst that can happen? Lose the entire value of the butterfly. That's not fun.
Yeah. It's not.
But no, I think it's a good trade just because the reward relative to risk was high there, and you encompass the entire upside range. So,
yep.
But yeah, I think today could be an inside day. So I actually kind of feel like I want to put on a 0-day iron condor, maybe a 0-day.
You don't have any more. You have any CL? Do I have a CL? I don't have a CL trade.
Yeah,
Somebody's asking a question. What are you doing with your CL V6 trade today? Now that it's in the money and there are 22 days left. Oh, they must have been talking to you. I don't have a trade like that.
I'm out of everything.
Yeah, we're out of all. Well, I don't know if do you have the USO still?
No.
Yeah, we're out of all oil trades
yesterday.
at this point.
Yeah, I closed it yesterday because I knew that USO would continue to slide if oil continued to sell off and the backwardation flattened. So I'm out of there. But yeah, the crude oil position too. Will this thing just fill me? Come on, give me $1.80. Please. $1.75. That's as low as I'll go. But yeah, crude oil. If we look at the V contract, I had a iron condor, the 95, 95 and a half, 70, 69 and a half that I bought back for $100 winner in early August. So August 3rd, that was the last time I had that trade on. And then with MCL, that was my straddle that I had. So the straddle that I closed yesterday, the 80 strike straddle, if this is what you're talking about and you have the 80 strike straddle, it's even better now because we're right at the money with that contract. So I would just close it. We compiled a ton of premium and captured a $400 win yesterday. It's probably a $600 win right now. But yeah, I don't have any crude trades on.
Yeah, neither do I. Last time I had one on was earlier this month, actually.
Yeah.
August 4th. Dude, it's kind of crazy. I'm like, wow, we're like basically it's September. Man.
It is wild.
This month has flown by kind of fast.
2 weeks till football.
Yeah.
It's insane.
Well,
It's literally
NFL.
insane. NFL.
This weekend, it's the
Week
boring
0?
games. Yeah,
That's
week
what-
0,
that's what
right?
it's called.
Week 0,
Week
yes. Yes, and college football.
But yeah, we're back.
Back, baby.
And it's funny because like literally the weather outside is like immediately just football weather. Like it was so hot and muggy, and now it's like fall weather. It's incredible.
Yeah, my kid, we had a scrimmage last weekend, and so his 8th grade team or whatever, we have a game this weekend. We play the team that knocked us out of the playoffs. We were one game away from the championship. We played. It was like cold as hell that day. It was like early November last year, and we played this one team. I think I can't remember if they were undefeated, but they were supposed to be a really good team, and we held them like 0-0, and they got a tip ball and got an interception, returned it back for a touchdown. We're in Lombard that day, by the way, and they scored on that. They just scored 6. They didn't hit the extra point, but we played them so tough, man, and we lost that game, and so we play them this week. Can't wait for it. Can't wait for it. It's going to be a good game.
It's going to be a wild one.
Yeah.
That'll be fun.
Hyped.
Okay, so yesterday or last night, the MES and MNQ positions, the micros went to, they delivered the cash settled.
Oh, there we go.
So just like I said, I thought might be the case, like when you look at UVXY, there's a deliverables list. So with UVXY, anytime they split, or have a reverse split, I should say, you can see the deliverables, the standard shares, and then the non-standard pre-split values. The standard is going to be default. So same thing with MES and MNQ. The deliverables, the default is going to be cash settled. The old contracts are physically settled. So if you're trying to like get out of your existing positions like I have, we're going to have to roll from the physically settled into the cash settled, and we'll be good to go. But as you can see, I think some people were worried about lack of expiration cycles. This is just this contract through the 23rd, but they will definitely have more expirations that come out. But here you go. You've got, 10 different expirations all the way through the U contract. And then they'll continue to layer on some more as liquidity piles up in here. But just so you know, if you're trading MES and MNQ, the deliverables are now listed here. So if you need to access physically settled, you can move it into cash settled if you want to. I'll eventually do that, but I just made adjustments a few days ago, so I don't feel like I need to make any changes just yet. But that will be the roll that we make. We'll go from physically settled to cash settled, and we'll be in the new product.
Yeah, we had Craig on the show yesterday who was talking about that rollout and the fact that obviously we had open interest and a lot of these things that were already physically settled. So that's why they had to work on how they were going to roll this out with the new cash settled products coming out. So there you go.
Yeah.
No, they're not going to be removed.
Yep.
Not going to not. There's just it was just one of those things where they had to do it the right way because there was already existing expirations with physically settled.
Yep. And yeah, I think I think people want more cash settled products, obviously. Otherwise, they wouldn't have made this adjustment. But yeah, instead of physically settling into a contract that eventually cash settles, everything just cash settles. Makes it easier.
Which just tells you how much. Again, this tells you how much attention is being paid to retail traders. I mean,
yeah,
I worked at the CBOE. There wasn't all this discussion about stuff tailored towards retail as much, and CME. I mean, they've definitely come around on that and changed their tune and realizing how much retail participates in flow. So,
indeed. 5 seconds until the market opens here. I got the 1 minute chart in the E-minis.
Here we go.
That's incredible. I love it. We'll see where we go from here. NASDAQ just caught a bid real quick.
Oh, into it. Jump back up. Jump 20 points.
Yeah.
Hell.
You have the 130?
I have the 330, 325,
Damn.
and 320. So.
Okay. Let's move into your range.
Yeah, it's all over the place right now.
Yeah, this is an insane move. Like,
whoa.
Who's doing this?
Bought all this up. Holy cow.
Who's doing this?
Whoa.
Yeah, this is crazy. Is Zoom doing the same thing?
Oh my God.
No. Zoom's moving the opposite direction.
Oh my God.
Yeah, this is nuts. A 20-point single 1 minute move, not even.
It was hanging down here all night. I'm surprised. Wow.
That is crazy. Yeah. Whoa. Yeah, this is nuts. If you look at the daily chart, you just see this huge green bar. I don't think I've ever seen this where it just immediately gapped and gap filled.
Wow.
We talk about gap fills all the time and like how it takes a week or 2 weeks or 3 weeks.
Yeah, right?
How about a minute and 30 seconds? That's nuts.
Jeez.
But yeah, if you had a neutral to bearish trade on it into it, you're still looking good here with it down 12 points. If it faded from this move, I'd have to get an explanation from source.
I know, right?
It's nutty. But E-minis haven't moved at all. Down 9. They were down 12, 13 pre-market here. So the NASDAQ catching a big bid though. It was down 120 points, 130 points. And as you can see on the minute chart, we are just gapping higher here. Almost going green on the day. There you go. Green on the day. NASDAQ.
Just
that is
like
crazy. Oh, man. Crude oil still chopping around near the opening low here, down a 1.5%, 2%. But yeah, let's take a look at this portfolio, see if there's anything to do here. Scanning through the P&L day, see if we have any big numbers. And we don't really. Yeah, it kind of just didn't, like literally everything in this portfolio is within $100 except for WDC of $100 here.
Kind of day we got here. Yeah, WDC is positive. All the Bitcoin stuff is down. MicroStrategy's coin, as you would imagine. Gold is down today. Interesting to see WDC up, but SanDisk down. Of course, it's slightly down. I'm sure it'll be positive soon. Yep, IBIT's negative. Silver down. Consumer staples names by and large down. The other tidbit I saw today was Nike stock is on track for its worst performance since Michael Jordan's retirement in 1993. Talk about full circle. Yeah. We were talking about that the other morning.
That is crazy. Yeah, sitting at, I mean, we're sub 40 now here. This is over a decade for sure.
Dick stock down once again. Not surprising. After you have a huge move to the downside sometimes and it's very ugly, people are just continue to sell a little bit. It's down small though. I think Gus did a trade of the day in there yesterday.
Yeah, this is wild. Every year the stock has been down for the last 6 years.
Nike. Yeah.
Nike. Haven't seen the 30s since 2014. Crazy.
Mm-hmm.
That is nuts. But yeah, these positions. I still have this position, and this is what's crazy. Like this product has gone down another 10 points, but this leap hasn't really moved as much as you would think. 513 days left. Bought it for 460. It's trading for 270. So even into this big sell-off that continues to happen here, the option's still holding on to value because the market is pricing in the fact that we're at multi-decade lows. Like there's got to be upside premium still with so much time left. So we'll see if we can get it. But yeah, what a moving into it on the open. Not Intel, into it. Only down 19 now, but giving up about half of that rally we just saw on the open. Like that was nuts.
Yeah.
That must have been, it feels like it must have been a massive short covering.
Definitely. There was definitely something that happened there because that was a lot of volume.
Yeah.
You see that?
That was crazy. We're already at 2.47 million shares traded today. And yesterday we hit what is this number?
What is word?
Yeah.
Yesterday?
2.5 million shares traded today. And we're about a third of that yesterday. We're a third of the total volume yesterday already.
Yeah.
5 minutes into the open. And we're almost at the total volume for the 21st and the 24th, Friday and Monday. So crazy volume.
621,000 shares on that buy order.
Yeah, that had to be just a massive short cover.
Yeah.
Feels like. NASDAQ selling off again as Intuit sells off again. E-minis haven't moved. Crazy day. But yeah, NVIDIA earnings after the close today. NVIDIA selling off 1% here. And I'm already in on a call calendar spread, long November, short the 2-day. 2 days trading for $300. I love that because I'm going to get all that value regardless of what happens with NVIDIA. And I can roll into September. I can roll from September into October. I can keep it a calendar spread. I can go to a diagonal spread. I can make it a crab trade. So hoping for a rally in NVIDIA, but if it doesn't happen, this NDX butterfly is going to print with the 29,000, 28.8, 28.6 expiring on Friday. And this is another one that's the max profit here is significant relative to debit paid. We look at the analysis and just zoom out a little bit. 20K max profit in the middle here. We pinned the short strikes on a Friday of expiration before with this thing, and it was trading for about $4,000. So that's what I'm looking for. If we get a downside move of 200, 300 points, 400 points from here, which is really not all that much, we can have another nice hedge on our hands. And really, again, all you need is just a pass through this range as you get to expiration, and you'll have yourself a nice winner there.
Damn it.
And that will hedge. The NDX position will multiply my losses on NVIDIA if NVIDIA just expires worthless, which is a long-term position. So I doubt that will happen.
I'm trying to get into CrowdStrike. Somebody was asking us this morning in the chat if we're going to do anything in there for earnings. I think I am. I think I'm going to do some calendar calls. And I think I'm going to do them $10 apart. So
2-day, 9-day?
I just got filled. Yep. I just got filled on the 210s. I'm trying to get the 200, the 210s, and the 220s. As a matter of fact, the 220s are only 78 cents. I'm going to buy 2 of those for 80 cents. How about that?
Yeah. These are nice trades here if they
stock's gapping up too. Move. Damn, it won't.
Yeah, this is a
up for the one.
Long option 480, short option 270. Get all that on Friday. For the 210 call, you got 250 in the long call and $1 for the short call. So you're picking up about half of the cost of your long options. And as you can see, if we get a move, if we look at Friday's expiration, the Theo assumes we keep all this premium in the shorts, we crush implied volatility in the longs, and we bring it down to, let's call it 60%. The back months are already at the mid 50s. Those will probably drop to the low 50s. The 9-day will drop to the 60s and then get down to the 50s eventually. But yeah, this is what you could be looking at for these two. $500 in the middle here, max profit on a $3 debit. I like it.
I mean, this has gotten, it's had its fair share of a beat down too in the software space, but it's also bounced back quicker, and it also has kind of maintained that level. And again, it's not, I know it's software, but I think because there's security part of it, then maybe it could benefit. So I think it's a little bit different trade than the Intuit. We'll see.
Yeah.
But yeah, I just did, I ended up doing $500 in premium. Somehow or another, I always end up doing around there, $500 to $600 in premium. But did the...
Each one is like $1.50, $2 typically. I just joined you on the 200, 210. So upside. And again, I think this is like, because I have the NDX butterfly, I want to just do upside trades because if you get the move to the upside, I want to make money on these earnings trades. And if we get the move to the downside, that butterfly will hedge all of these losses.
Yep.
So I'm kind of just like, because we've already gotten the gains in the downside butterfly, it enables me to place upside trades and while knowing like I don't really have that much risk in these earnings trades with that butterfly. Without the butterfly, I would be more kind of two-sided with, am I bearish, am I bullish? But because I have that butterfly that is my downside protection for this portfolio, I can just blindly place these upside trades because I know they're hedged.
Yep.
So yeah, I'm in on CrowdStrike, in on NVIDIA, but still small definders trades, nothing too crazy. But it's a nice synergistic move with that butterfly in mind.
I don't know what to do with this Intuit yet. I'm just kind of waiting it out here.
Yeah. Things flying around.
I tell you, this the value in these downside options in the 2-day cycle haven't really completely gotten crushed.
Yeah. I think that has a lot to do with the fact that we just gapped higher like 30 points. And so the market has to readjust and be like, okay, if this is how it's going to be, we got to keep this premium bid. I think if we would have stayed down where we opened, these options would be worthless, close to it. But yeah, insane move here in the first 11 minutes of trading. NASDAQ and E-mini is about to go green right now.
I'm working 2 other trades. I'm working that BSX trade. Not getting filled, but I don't feel the need to chase it neither. And I was trying to sell a put in Dick's Sporting Goods, but I don't know if stock's gotten away from me a little. So those are the 2 trades I'm working, but I don't really, I don't feel the need to chase either one.
Yeah, Dick's had a big sell-off yesterday, chopping around the same level. BSX, as we mentioned, has an ongoing security issue, $47, $48 a share right now, catching a bid from the open at 47. But yeah, we mentioned like 30, 40% implied volatility, pretty low for an equity, nothing too crazy, but like this is a $50 stock that was a $100 stock. So if you really wanted to, you had the 35, 91.
I'm trying to get the 40 now. I decided to go with the 40.
The 40, 90, 110, I think is what you had.
I originally did the 120, but now I'm doing 130. Not that it matters. Whatever one of those you want to sell.
Yeah. Just a little cost-based reduction. It doesn't really change too much. But yeah, zooming out, it's the same kind of setup as we have for like SpaceX or any of the other Super Bowl setups we have. You look at the expiration risk graph, you're picking up a credit in the middle, so it's a high probability trade. Worst case scenario, you take shares at 40 with a cost basis of 37-ish if you're collecting 340. Best case scenario, you get this asymmetric rally and return on your position. Your max profit, if you just sell the put, is $450. If it expires, worthless, which would take forever. So to offset that time issue, you buy a call spread with some of that premium, and you're really only giving up $1 premium. And all of a sudden you've got, if you get a rally up 30, 40 points, you've got a $1,000 winner instead of a $200 winner if you just sold the put. I like it. The Dow just ticked green, up 20 points now.
What?
Yeah. Crazy moves here in this here market. But yeah, AMD chopping along here. Let's twist the knife. Let's see what my meta position would have been trading for. Whoa, meta sold off.
Oh, it sure did. Holy cow.
Whoa.
Damn. Wow.
What?
Wow.
Okay. Hey, you know what? That's why I closed. That's why I closed it.
Wow. That
I knew
thing
that
reversed
something like that
big
could
time.
happen.
Holy cow. It's like a $30 reversal.
I clicked activity.
Holy cow.
If you ever want to twist the knife in what could have been, just go to activity, right click on similar order, and see where you could have been filled on the move. But it's exactly the same. It's actually a worse price now than where I was filled yesterday. So that's why I did it.
That's exactly why you did it.
But no, all things considered, all kidding aside,
Market's
this is
just gapped,
insane
though.
sell-off.
Market's gapped higher, though.
Yeah, what is happening right now?
I don't know.
This is crazy. Craziness. But yeah, E-minis just ticked green, up $4 now. NASDAQ up 22. The Dow's up 40. Russell's still down. Bitcoin still is chopping where it was earlier, down 500 points. Crude oil picking up a bid here, interestingly enough. Equity's up and oil is rising, only down a point right now. But
I'm going to try and get filled on a super bear for Friday.
for E-minis,
For SPX, yeah. Yeah, SPX super bear for Friday.
kind of like that.
Um,
Kind of like it.
7,700, 7,710, which seems, I guess, a little aggressive with 76.82. But to buy the 76.25, 76.05. I'm trying to get filled for 50 cent credit right now.
Yeah. I mean, if you think NVIDIA is going to sell off, like I just don't see how the market rallies.
And a little trepidation ahead of Jackson Hole.
Yeah, I like it. But yeah, collecting your credit in the middle, as long as you stay below 7,700, you're golden for tomorrow. But big 20-point wide downside move there. But let's kick it over to TP. He's got some trade ideas for you. And we'll be back after he is done in about 15 minutes. But TP, take it away, good sir.
Oh, yeah. Nice little reversal in what were you guys looking at? Meta? And yeah, I have bonds loaded up. Bonds are selling off just a bit, like 6 ticks. Not a big deal this morning. Everybody, as the guys are talking about, everybody's waiting for NVIDIA. I'll probably be doing a trade on that in my 1 p.m. show just to play. And the key is with all this stuff, and Chris Vecchio and I talked about this yesterday on the Confirm and Sends. When trading these individual stocks around their earnings that have seen their prices move beyond the expected move, is that a mistake? What am I doing wrong? How do I deal with that? The simple answer is use defined risk strategies, verticals specifically, or iron condors, things like that, where you know the risk going in, and keep your size small, keep your quantities small. NVIDIA, I'm going to do a 1 lot. Okay, it's NVIDIA isn't my bread and butter anyway. It's okay. Yeah, I mean I'm up trading NVIDIA this year, but that's just that could be one of any of 200 symbols that I've traded this year. So I'm not really seeing that as something I'm banking on. But NVIDIA right now, let's see, NVDA down 23 cents. That's about what you'd expect. Going into some of the open interest numbers here in NVIDIA, stocks at 212. So these are the out of the money puts, out of the money calls here. There's a lot of open interest on the call side here. Let's see what the volume is. And again, there should probably not a lot of volume. Yeah, there's some decent volume coming in here already, as to be expected. 6,000 contracts, 7,000 contracts. Hey, just for fun, let's look at the SPY and see what the volume is for some of those. Yeah, so volume is obviously higher in SPY, but not much higher. The SPY is the biggest product, the most popular retail product. NVIDIA is no slouch. So what we have is more open interest on the call side. Does that mean we're going to get tugged higher? Not necessarily. If, and this is the big If. And remember, whatever I say, for every buyer, there's a seller. So you don't really know what's going to happen, or who has what, or why they're trading anything. But if retail, quote unquote retail, or hedge funds, or people like that, like what we used to call on the floor paper coming in from outside, if they're buying calls up here, and the market makers are selling calls, the dealers are selling calls, buying stock against it. If we don't get a huge move up, people might start bailing on this stuff. They're just, closing their calls, just, take my bids, make them offers, that sort of thing. But, just selling their calls to recoup any sort of value in these things tomorrow morning, after the number comes out this afternoon. So you might see some selling pressure if it even on a good number, because of all these people looking to just get out of these calls. If that's what it is, and I'm not going to hang my hat on what that open interest is. Looking at some other things, bonds I was looking at when I opened up the show here. Bonds, I am long this put spread. It is right in between my short strikes, or between my strikes. I'm long the 110, short the 109s. The future's trading at 109.16, which is 109.5 in decimal terms. It's not a big move. Obviously, I need a bigger sell-off. ZN is down 6.5. So ZN and bonds are moving 1-to-1, which is kind of unusual. Guys, we're talking about crude oil down a little bit, 85 cents. That's the news, I think, has kind of come out. The market is already working through the Strait of Hormuz not mattering anymore. I just saw a report a few minutes ago talking about, I guess, Iran and one of those other countries over there, Oman, whatever it was, talking about their plan to reopen the Straits of Hormuz. Yeah, okay, fine, whatever. They just want to take credit for it. That's, hey, fine. Hey, open the stupid thing up. Let the tankers go through. And I think it's Iran might be seeing the weakness of its overall position now, saying, just open it up, try to get their oil out. So oil's down. Let's check the skew on oil. I would consider again, going back, and haven't been able to get filled, neutral strategy in oil. So 81.65, right around here. Let's say down $2, up $2. The skew is pointed to the upside a little bit, But again, this is a big contract. CL used defined risk strategies. Another trade that I looked at yesterday and was not able to get filled in. Maybe I can get filled in with this rally. No, I will not get filled in a rally. I want to sell a put spread. I wanted to sell a put spread in nat gas options. And by the way, why would I trade NG? This is one of the things I wanted to illustrate. Why would I trade NG futures options as opposed to UNG, the ETF? So look at the credits that I'm getting. This is a big product. Again, futures tend to be big products. Why? Because they were created decades ago, mostly for producers. Manufacturers, people who needed industrial-sized quantities of natural gas, power plants, right? Or, utilities, things like that. So they needed, hundreds of thousands of whatever it was. So that's why the products are big, right? So they were intended to be industrial, institutional types of products. Now you and I are trading this stuff as retail traders. We love it. And because of us, the liquidity's tightened up with a lot more trading activity in these things. But NG, look at the credit. So I can sell this for 11 cents or 1.1 cents or whatever. My max profit's 100 versus $390 of max loss. Okay. But look at UNG, the natural gas ETF. If I open the 23 days, there's not a lot of premium in these things. And the markets there's not a lot of volume. There's some open interest here. There's decent open interest. But looking at these out of the money options, like these the 9.5s. There's not enough premium in here to make it worthwhile, in my opinion. So that's a judgment call. Like 10 cents for $238 of capital requirement. So that's why I would lean towards /NG. Let's route an order in there, see if we can get filled. Let's do this one. Let's ship it. No, let's do a closer one. Do I have closer ones? No. I don't want to do 0 DTEs. Sell this. Let's do it. See if I get it. All right. And just before I run out of time here, let's go into the SPX, do my daily iron condor. And this, by the way, is a day when, despite what the VIX is, up 3 cents, just whatever. That's nothing. SPX up $5. Everything's looking at NVIDIA. Okay. Everybody's, it's like, oh geez, what's NVIDIA going to do? What's NVIDIA going to do? Yeah, we could see some big swings in the S&Ps. We could, but I think with everybody waiting for that number to come out, S&Ps really probably aren't gonna make a big move one way or the other. So let's do this. Let's go in, find a $2 option. Let's start with the 76.50s. Go down to the 76.25s. $25, but the 25 points. But again, it's they're not giving me $2. All right, let's go for broke. Let's do 77.05, 77.30. Let's pull this up a strike here. So $3.35 credit. I'm still doing these iron condors, but I'm only doing a one lot. Doing small size, across the board, only because the VIX being in the 15 handles just doesn't give me enough credit. So I'm going to offer this at 340. See how we get filled. Submit working. Let's check out SMH. Oh, by the way, the sell an iron condor and filled my iron condor. Take a fill. So I was selling an iron condor of my cherry bomb this morning, out past the expected move. Let's go down. I'd have to check the strikes that I had loaded up there because the stock's up, and I may have to adjust those. But let's see these 70-cent options. If I'm getting enough of a credit. I am not. I think I need to pull this up here. And this is just a neutral trade in SpaceX. 66 cents. Let's do this one. Let's sell it at 66. Why am I doing this? I don't know. SpaceX really hasn't moved very much. Started trading here after this massive sell-off. This is basically flat. SpaceX really hasn't moved very much. Its volatility has come down a lot, but at 60%, it's 4 times higher than what the VIX is. So I'm looking at just a 2-day trade in SpaceX. No, I'm not filled yet, so I may have to adjust this. Let's go back, look at the watch list again. So the Mag 7 stocks, such as they are, NVIDIA's down 73 cents, not a big deal. Meta's up again, 55 cents. Apple up 260. Google down. Amazon down. Tesla down. These are small moves. Let's check and see what Jets is doing. Jets is the airline ETF. That's up 15 cents. How's my Love put doing? Love is just breaking my heart. And I'm not saying, oh, geez, being cute about it. No, LUV stinks. I'm short the 45 puts in September. I had rolled these out. And right now, I've collected a decent amount of the credit of the extrinsic value that these puts had. So I may roll these out again in the next day or so when we get to 21 days. And I am short this 42 call against it. The markets are pretty bad. Markets are wide. It's not easy to trade. So with that, I will be back at 10 a.m. with Chris Vecchio to do confirm and send. If you have any questions, send them into research@tastylive.com. If you have any questions for me, I am at tp@tastylive.com. That doesn't go through Thomas.Preston at tastylive.com, but I think it's TP at tastylive.com. Stay tuned for Chris and Jermal. We have a lot of content coming your way today, so please stay tuned and good luck trading.
What's up, everyone? Welcome back to the show. We got E-minis up now, 775. NASDAQ up 45. The Dow's the only one down. The Russell is up. Bitcoin still down $500-ish. But some crazy moves today after earnings. Into it sold off initially and just ripped higher, only down 12 now. Same thing with Meta, but the opposite direction. Meta lawsuit came in at
Crazy.
17 billion, and they sold off from opening up 30 points to going right back down to where they were. So that's an interesting move. We got E on the line live from the CBOE floor. E, how you doing this morning?
Good. How we doing, guys? Looking a little bit different today, but I'm doing well.
Right?
No, I know volatility's. I know you guys are like, you grew up so fast.
Yeah,
so quickly.
Volatility is pretty mild so far today, but it's nice to see a little bit of a rally in the Qs right now and in Nasdaq. But we'll see what the rest of today gives us. It feels like we've kind of put in some lower moves over the last couple of weeks. I'm wondering whenever we get that taco. I feel like we're getting it a little bit late here, but we'll be patient for it.
Yeah, I think I'm intrigued to see what happens after the close today, but with NVIDIA earnings. But we did have a YouTube chat comment come in, and I think it alludes to what I think is going to happen. So I'm with you, Boston Frank. I think NVIDIA will beat earnings estimates and the price will go down. So our amazing production team actually pulled up a graphic of NVIDIA and the previous releases. So yeah, I mean, they're going to crush their numbers. I have no doubt. But as you can see, not so great 1 day, 1 week, 2 week moves after earnings. NVIDIA seems to have been like the weak one where now the expectations are so high that it feels really hard to beat those expectations in a way that really catapults the stock higher. And I think we'll probably see a similar thing today after the close, but I don't know.
Yeah, the bar is really high. And I mean, whenever you set such a high bar, it's like, how do you can you have infinite growth? I guess is the main question. It seems like you're alluding to there, Mike. But yeah, I mean, it's a really good point. I think this puts those things into perspective there. And I almost feel like the market is going to be waiting for a lot of those NVIDIA earnings. I know today we've had a little bit of back and forth, a little bit of aggression to the downside, a little bit of aggression to the upside. I'm curious if that's how the rest of the day is going to play out, just waiting for these NVIDIA earnings.
Yeah, I am too. As a matter of fact, let's put that slide back up there because, yeah, it's been a lot of inside to down. But I tell you what, and Mike, you know this, November 19th, this past November, that doesn't reflect everything that happened on that day. I can promise you that because that day was nuts. We were on the CBOE floor and we saw it was up. I think it was up after hours. It was up overnight. And then the reversal happened during the day while we were on the floor. One of the louder days on the floor. It was absolutely crazy and ended up leading to a couple of days down in the market, I believe.
Yeah.
So it was wild. So
this bar right here.
it does not. Yeah, and let's go to the Mike's chart here. It does not really reflect what happened on that day. I can promise you that. But my point is that this thing just really does. It does. It is a harbinger for like a lot of what's coming in tech, and it does move a lot of different things. So I think that's the reason why everybody's interested in playing it. But we'll see what happens. Again, there's been however many occurrences were there. I think there was only 2 positive out of like 8 occurrences. So that could change at any given time. But it is for that reason, because it's been a lot of inside and down, that I just put on a SPX Super Bear just in case. And again, that's just playing against some of the portfolio. Again, I have a lot of names that rely on NVIDIA tomorrow, trust me. But I figured a small short delta play wouldn't hurt.
Yeah, this was a wild day. You can see this huge intraday sell-off, similar to what we're seeing in Meta right now. But yeah, I think when we consider the situation at hand with NVIDIA trading near the middle of the range that we've seen over the last couple of months, between 235 at a high and 190 at the low. We're kind of smack dab in the middle there, but it's been weak. The last 7-8 days in NVIDIA, just aside from yesterday, it's just been straight selling. So I think there's a real chance that we see NVIDIA sell off and the market fall with it, but kind of positioned for any situation where if NVIDIA rallies, that call calendar spread I've got will work out nicely. If it sells off, the NDX butterfly will work out nicely. So we'll see. But keeping the risk small, just because I have no idea what's going to happen here. Normally, I have a stronger conviction for earnings announcements, especially for something like NVIDIA, but I just have no idea. Like, this is the one where I'm just like, this thing could be down 20 points, and
Right.
it wouldn't surprise me.
Yeah.
Yeah, that's kind of how I'm positioned in some of the other lines headed into NVIDIA. Kind of to what you alluded to there, Mike. It's like I'm a little uncertain, so I'm just going to size down, make sure I get the risk to a level that I'm comfortable with, given my uncertain levels or my conviction levels. So I'm looking forward to it. I'm excited.
Speaking of levels, man, you're the scalper guy. You're the guy who watches NASDAQ. What levels are you watching these days? I mean,
to be honest,
this gets tricky heading into NVIDIA, of course, but just curious.
Yeah, no, it's pretty tricky right now. I mean, right now I'm still watching this 29,293 level. Very similar level that we were watching yesterday. I had sold some out of the money vertical spreads on QQQ at around here yesterday. So I think that's still going to be another point of contention. 29,293. Whether or not it's going to be a long or short, we'll be patient. We'll see what it is. But it does, again, seem like there's a little bit of a tug of war going on at this price level. So we'll see what the rest of today wants to give us. But I will say again, waters are a little bit murky today. So we have our foot on the brakes. We're a little bit cautious until today gives us whatever it might want to give us. Just being patient.
I think this could be one of those days where if you're wanting to be patient, I think tomorrow's trading session will give us a lot more clarity than today's.
Yep.
Because tomorrow we'll have the NVIDIA earnings, we'll have some other handful of earnings, and then tomorrow morning you'll have your Dollar General, your Dollar Store, which is a whole nother sector. We'll get some information from that side of the world, and tomorrow's trading session will give us. It'll be a more clear environment for sure. There's just no way that we're still just like chopping around neutral tomorrow.
I am curious about Dollar General and Dollar
to
Tree.
start forcing things.
Yeah.
What's
Dollar
that, E?
General,
Sorry.
Dollar Tree. No, I was just saying in this environment, it can be so easy just to force things, especially when you're kind of sitting on your hands. You're used to being a little bit more active. I think it could be really easy to just kind of get into whatever kind of trade all willy-nilly, and then before you know it, you might be breaching some risk parameters. So just be patient. Maybe Dollar General and Dollar Tree could help us do that, because that doesn't sound as exciting. But what's going on in Dollar Tree and Dollar General, Jermal?
I was just saying, based on some of the names we've seen recently, Walmart had earnings, didn't go that great. Kohl's this morning just had earnings, didn't go that great. I'm curious if this is going to be that situation for both of those stores, which honestly doesn't line up with the narrative that I would think. I would think that these stores are in a high interest rate environment. These companies are the stocks would be doing better than they are, and they seem to be lagging a little bit. So I'm curious about those earnings tonight.
Is Dollar Tree even a dollar anymore? Like, have they moved away from their whole dollar kind of premise. Like, I feel like you can walk in there. There's things that are sold for $5, but it's still called the Dollar Tree. I don't know. That's just what I've heard.
Right?
Yeah, I don't know
What you heard? You haven't been inside one?
No, it's been a while. I feel like most of the stores out here in Chicago, I feel like we're lacking so much. Like, I haven't been into a Walmart in forever. Like, I feel like there's a lot of those name brand stores that I haven't seen in my vicinity. I don't know if it's a Chicago thing or what, but I'm starting
It's
to
strategy.
feel nostalgia from some of
It's actually
those
strategy.
little stores.
Yeah, you
Is
won't
it?
find a Walmart. I mean, it's hard pressed to find a Walmart in that. That's not. They know their areas. It's not downtown Chicago. That's not what they're targeting. Same thing with Dollar Tree and Dollar General. It's strategy.
Yeah,
for
they
sure.
don't want me walking up in there. That's what I was saying, Jermal.
Yes.
They don't want me in there causing a ruckus.
Yeah, Ben in production said $1.50, $3, $5 tiers. So that they've gone into the tiers at these stores, which makes sense. You can't just sell everything for $1. I mean, I'd shop there all day.
Yeah. No, I saw a brand new pack of Energizer Bunny batteries. I was like, yo, these are pretty expensive. And I checked them out one time. They're about $10 at the Dollar Tree. I was like, I knew I wasn't getting some Duracell and Energizer batteries for $1 there. But what do we got here?
Okay.
Yeah, I'm just looking. I mean, like, just to give you an idea,
Price selection.
just to use where you're
Okay.
from, Colorado. I was just like, are there any Dollar Generals in Colorado? And they got them in like all these places. I can
for
imagine.
sure.
I can imagine.
Yeah. No, it's really nostalgic, actually. Like, growing up, our mom, we would get $1 each. It's like you get to pick out whatever you want in the dollar store. It's like, as a kid, $1, I can get whatever I want in the store. And I always picked up a bag of beef jerky. So that's how.
Damn.
That's
So
how
you're
that
on the
usually
protein
went
game
down.
early.
I was. I love beef jerky from day one. I would spend my dollars at the dollar store getting a fresh bag. Beef jerky is pretty expensive. That is my 14-year-old. That is freshman year of high school. I was swinging JV at the time, but what a throwback! Oh my God, where did this photo come? I haven't seen this. I haven't seen this in decades. Actually, it's extremely nostalgic.
They got you. They got you.
They got me.
They got you.
Hey,
Mesa
Ben, you
Ridge,
better
I
watch
don't
out,
see
brother.
that
You better
on here.
watch out.
I'm looking at the store, Dollar General store locations in Colorado. I see Lakewood, I see Kersey, I see Kremling. I feel like these are a lot of smaller areas, which is getting to my point. I didn't see Mesa
Yeah.
Ridge on there.
Yeah, Mesa Ridge down in Colorado Springs. So about,
It's in
about an hour,
okay.
hour and a
Colorado
half south of
Springs is
Denver.
on here. Yeah,
About an hour and a half south of Denver. Yeah.
Love it.
that's great.
I love it. Yeah, I think it's gonna be interesting to see what happens with these. But yeah, the real story is the Nasdaq here with NVIDIA and CrowdStrike. After the close today, we're gonna see some big moves, and it's just gonna be one of those days where like you don't even have to look at NVIDIA. You can just watch the Nasdaq futures, and you'll know what's going on. So hopefully you are positioned for the correct move in correct direction. But I think there's more from a velocity standpoint. And I'm actually, before we let you go here, I think it's interesting to check out the skew. So NVIDIA is trading at 211.60. So if we just go to like the 200 strike, which is 11 points out of the money, and then we go to the 222.5. Yeah, I mean, we're still seeing call skew here, which is counterintuitive to me. Because I think if we get a rally in NVIDIA, I would imagine it's an inside up rally. If we get a sell-off in NVIDIA, I think it would be like it has the propensity to be a much bigger sell-off than an upside move.
Right.
Just because this is such a huge product.
Yeah, for sure. We got a YouTube comment for E. Let's see it.
What do we got? Decades. They're like, Errol's a decade old. Decade is 10 years. That was last Thursday. No, that was that's funny. I am about a decade old, but I think that was I was 14 years old in that photo. That was freshman year of high school, first semester. And what was that? That was about 13 years ago now, about 13 and a half, almost 14. So I guess a decade and a half. Let me get away with it. It does feel like yesterday though. And Jermal, that was during basketball. So I mean, if I would have catch you on the court, don't let that happen.
Oh, here we go. You'd have broken
You
his
don't want
ankle.
none. You don't want none.
I like the relationship we all have. I don't want
I'll come out of
I don't want anything
retirement
to get
right
too
now and
tense
bust
in
you.
here, yeah.
What are you talking about?
I got to find a video. There's a video of me breaking my own ankles. You guys would love it. I was like, I gave my phone to my friend. I was like, film this. I'm going to do the D Wade crossover. I like post up with my left foot and went through my legs. And I swear I just rolled my ankle and it's just me just crumbling to the ground. I had crutches for 3 days. Like, it was
Oh my
insane.
God.
And I'm like, why did I do this? I was wearing like cross training shoes, not basketball
Yeah,
shoes.
yeah.
My foot just like
Oh,
snapped.
yeah.
Ooh,
It felt like I broke my foot. Like that's how crazy it was.
ooh.
But it's all on video.
I know
I'll
you
find
weren't
it.
even exaggerating, Mike. Rolling your ankle sometimes is that serious. Like, it feels that serious when you roll your ankle for real sometimes. So I feel
Wasn't
you
fun.
on that. I feel you.
And there wasn't even a defender in front of me. That's the worst part. It was just,
It was on camera. That's the
it was
worst
just me being obnoxious. I got by the D Wade crossover. What are you gonna do? What are you gonna do? But E, appreciate your time.
Yep.
Enjoy the rest of your time at CBOE, and we'll see you a little bit later, and we'll see what happens with the Nasdaq here.
Thanks, guys. We'll see you in a bit.
Later.
Absolutely. E-minis up 3 now. Nasdaq down 25. We're seeing what we expected, the chop before the storm after the close today. NVIDIA down 1.5 here, and Bitcoin down 440-ish, down the Russell flat. It's just going to be one of those days, it feels like, where we do nothing until after the close.
Yeah, it does kind of feel like that. If you're just joining the show, we did talk about the MNQ and MES trades. The options now are the cash settled options are on the platform, just like Mike was talking about. Whether it was yesterday or the day before, they all seem to run together. But you can switch back and forth now to be able to find those cash settled options. And right now they're out to September 18. But again, this is one of those things that had to be rolled out carefully because we already had options that existed that were physically settled, and it's not like you can wipe those off the board because you got open interest with those. So they had to roll this out carefully, but now it's being rolled out. So that's where you'll be able to find the cash settled options.
Yep. And again, the cash settled options, it's the same exact situation. It's just that instead of an in the money option settling into the contract, like if you have a short in the money put, you would be long an MESU contract after that put expires. Now the put just settles financially, like SPX. If you have an in the money option, you're not assigned SPX. You just have the cash settled difference between your strike price and the price of the settlement. So it'll simplify everything. There'll be a lot less assignment of micro futures. There will be no assignment of micro futures in this new cash settled world. So right here on the deliverables, you can check it out. But we're going to take a quick break here. Join us on the YouTube chat. Keep throwing in those questions and trade ideas. We'll scan through them throughout the rest of the morning. But we got some more content coming your way after this break. You're watching Tasty Live. We are back. Tasty Nation. E-minis up 2. NASDAQ down 20. Down the Russell chopping around here. But we've got Tim Knight on the line. Let's bring him in. Tim, it is the long-awaited day. It is NVIDIA day. What's going to happen here after the close? Nobody knows.
Oh, I'll tell you exactly what's going to happen. I don't know. Well, put it this way. I'll tell you exactly what's going to happen. NVIDIA is going to get killed. And why? Because I've taken all semiconductor risk out of my portfolio. The market gods are cruel gods. And now that I've completely checked out, it's like, all right, it's time for the AI bubble to burst. So I say that semi-facetiously, but it is true that I have eliminated all semi-risk, even though it is just itching to be shorted. Micron, AMD, SMH, you name it, but I ain't in it. I'll be watching with great interest. But honestly, let me just look at the NVIDIA chart. What I'm here for is charting, and let me just show you kind of what that looks like and kind of my opinion on it. NVIDIA has been range bound since April. For all the attention this stock gets, it is goodness gracious boring. Even though it's the largest company on earth, it has been grinding around in this pretty wide range for months, and that line I've drawn in the middle of the rectangle is a pretty decent delineation between these brief bursts of exuberance and euphoria, the latest of which was here, and kind of this quagmire. And so one way to think of it is that we're in the upper portion of that bottom half. In all seriousness, I'm inclined to say NVIDIA will probably work its way lower within this bottom half. But I'm not personally taking any risk on that. But this, as drab a stock as this is, it obviously looms very large with whatever they utter, because they are such a central player in everything to do with hyperscaling and AI. And we've got this Anthropic IPO looming in October, with the latest news from them saying that they're going to be a $20 trillion revenue company. Okay, so that's my NVIDIA take.
Doesn't it feel like for that reason, though, it's almost like too big to fail?
Yeah, kind of. I mean, I could absolutely see a scenario in which, given the government's relationship with the stock market, if we do get an AI bubble that's shrinking, that you would get some form of government intervention, be it a massive military contract or some sort of private-public partnership announced to just stem the flow if this thing ever starts to shrink. I don't think we're anywhere close to that yet. But the market kind of needs to be supportive of an Anthropic IPO, and that has to go well for there to be an OpenAI IPO, which would be, I guess, sometime next year. So this is the paradox here is that it is such an oil painting of a stock, and yet all eyes are going to be absolutely transfixed on their screen, and the ears more than the eyes, because that conference call, however they spin the financing deals, is going to be crucial to the disposition of the market toward AI writ large.
Yeah, there's only an 11-point implied move in NVIDIA, which from a market cap standpoint is massive, but from a stock price standpoint, it's not too crazy. It's only 5%. So even if we get a downside move to the expected move, we're still well above that channel you've got laid out here. But I think if we see NVIDIA fail, it could be a 2 standard deviation move, in which case we would be right at the bottom of that range, which would be an interesting turning point for the stock for sure. But yeah.
Well, one funny thing about this stock, and I just slopped out another rectangle here, is that we've been here before. There was a even longer range here, months and months and months of just grinding around, and it looked like it was about to really break down, and it did the exact opposite, complete fake out. It from the bottom of that range, it exploded to what was a lifetime high, which has been intact likewise for months. So the recent history of this since back in Liberation Day was massive move higher into this exceptionally long trading range, another massive but not quite as big move higher, and we've been trapped in that range ever since. So it is notable that the range we were in here was, just eyeballing this, almost twice as long as what we've experienced already. So it's within the realm of possibility that we could still be within this rectangle in January.
Yeah, does look that way.
And as far as SMH goes, which is, of course, the superset of all that, and which I was just, and you know, I've already done my magic. I mean, I covered it before we went on the air, so we are falling. You're welcome. But this is sinking. And this is, I mean, joking aside, again, these are begging to be shorted. The price gap that we got last week, particularly between Monday and Tuesday, just made things so much cleaner. And here I've anchored it by way of this horizontal ray. And, you know, as these things tend to go, the day prior to that sea change in the chart was the counter trend high. It was the highest it had been in many weeks. And we've been sloppily falling ever since. So truly, I think that NVIDIA is probably going to fall and drag SMH down with it, and really drag on a larger percentage basis the likes of Micron. So yeah, the trend is pretty clear on this one, whereas NVIDIA is just kind of a big old mess. Just to shift gears, and we'll just jump to 90,000 feet on the market in general. You made mention just how stuck we were, and boy, is that true. 4 days in a row. You got to get out your electron microscope to see the movement that's been going on for the past 4 trading days, because back in the summer, earlier in the summer, there was tremendous dynamism, and lots of big red bars, lots of big green bars, and then the past 4 days, just flatline almost, and clinging weirdly. There's something magical about this blue line here. As I've said every day, that blue line merely represents the prior lifetime peak, and it is in love with that line. It is just sticking like glue to that line, and I hope NVIDIA shakes it loose. Jackson Hole, maybe that'll be required to do the trick. And Jackson Hole, you know, the market is filled with ironies. It could wind up be the triple patty nothing burger with cheese on top after it's all over, but everyone's sort of like frozen in terror until that happens. I consistently find NQ to be a lot more interesting chart than the ES, because it's fairly placid, but at least it's not completely stuck at a horizontal line. So we are down a skosh on this, 0.25%, gently moving our way lower, having had our last attempt at a breakout fail up here.
Scanning electron microscope. I used to use one of those every now and again back when I was an engineer once upon a time. Oh yeah, I did.
I just use it metaphorically.
Yeah, I did. Yeah, it was confusing. It was a lot, but it was really cool images it could give you.
I bet. Yeah, it was me. It was just like, you know, $40 telescope and some sugar crystals. Speaking of itching to be shorted, I am omnipotent. I mean, my closing the SMH has really wrecked the market. So again, please send your bourbon this way for the favor. But the other itching to be shorted, I gotta say, it is Bitcoin. I'm afraid I made Jermal speechless yesterday when I mentioned being bullish on Bitcoin at 67,000, but I put an asterisk next to that, saying that I would really just buy gold. But in terms of right now, the cool things going on from a charting perspective are we have formed a very strong base. We exploded out of here like crazy. We've got kind of a shooting star candlestick right there, which importantly just about kissed the bottom of that broken trend line. And so this kind of pulsing down pattern, that's probably stopped, which negates, as I've said, my notion that we're going to break down from that big top. But shorter term, I do think we have every good chance of working our way down to the sub 70,000 level, at which time. So I earlier I did short some IBIT, the ETF of Bitcoin, with an anticipation of that move. And contemporaneous with that, an eye toward gold working its way back down to anywhere under 4,500. I'd be excited about getting more gold.
Yeah, I mean, this is, that Bitcoin chart is very fascinating. We saw it make a strong move, and now it does seem like it's running out of steam. And, Tim, we're at a crossroads for sure. Like, we all have been talking about NVIDIA earnings, but look, I don't know if he says anything at Jackson Hole, but the rate story is really the thing, right? Like if something doesn't go right with rates, we could see this fall back down probably to that level you're talking about. We could see gold fade, and we could see a lot of these semis and tech names fade as well. If it's the other way, then all these holding patterns become launch pads for higher prices. So I think the rate thing is really the big story.
Well, let's use that as a chart point. Here's the ZB itself, off a little. We had our PCI come out as usual, right on the predicted money, 0.2%, and it's kind of not much of a chart, to be honest. Let's see if I can get a little more kind of long-term look here. There we go. So you can see here that even measured in years, it's really been kind of a dullard. But what's interesting about this is that the last really major pattern was up here, which was a beautiful head and shoulders top and preceded a historic drop in bonds. And my supposition has been, and I try to make this point about charts in general, is that top is kind of a misnomer because you can have a top at a bottom. The thing that's misleading about charts is that they are naturally drawn with maximum and minimum based on the price data. I mean, if they all went to zero, then they would be much less useful because the scaling is all screwed up. So your mind kind of plays tricks with you. And you look at a chart like this, it's like, oh, it's at the bottom. It can't go lower. And we know that's not true. It's tougher at these levels. But the thing is that we've been consolidating here for a while and have been breaking down below that. And so that it is within the realm of possibility that this could just keep pushing lower. So I just emphasize with respect to charting, don't let that y-axis fool you. Zero is the only absolute bottom. We are with bonds. It is completely within the realm of possibility, like a year from now, that this could be much higher than those prices turn out to be a year hence.
Yeah, it's going to be interesting to see where this ends up going. But I think to Jermal's point, like this is the thing that could move the markets in one way or another. If it's not going to be the tech space, it feels like it has to be this. It's not going to be the tech space.
Yeah, I mean, this is big stuff. I listen to experienced macroeconomics and bond traders, and those who know a lot more than I do about long-term debt cycles. And this is big existential risk stuff. And when you hear populist quotes like "we're going to grow our way out of this," it's just, that's Looney Tunes. We are not going to grow our way out, because the simple point I made is, if you posit that we can grow our way out of a $40 trillion debt, what that demands is the federal government will throw off $40 trillion in profits to pay that debt down, which ain't going to happen. So as a kind of amateur historian, I find this whole thing really fascinating, because we're seeing a debt crisis in front of our very eyes bubble. And I feel strongly that the bond bears will be proved right in the end.
Yeah, I think when we had that day last Tuesday at 7:30, when the markets were moving on the Besant news, it did not last long for it to reverse. Like the markets will always tell you where the market's at, regardless of the narrative and what people are saying on TV. So
yeah.
That's the good news. At the end of the day, after all the talk, after all the bluster, after all the press releases, the markets will ultimately tell the truth.
Yep. Well, Tim, good stuff. We will see you a little bit later, and we appreciate your time this morning.
See you guys. Bye-bye.
Yeah.
Adios. Yeah, it'll be interesting to see here. We got E-minis down 10, market sliding. Everything's down. The big four, E-minis, NASDAQ, Dow, Russell, all down. Bitcoin still down, but NASDAQ's been the wild one this morning, with Intuit reversing its sell-off. But what a crazy candle we saw there right on the open. I think I saw Frankie in the chat saying must have been something like a BlackRock volume move. Mm-hmm. And it makes sense. Like it felt like it had to be a big short covering, because it was just immediately reversed this sell-off here. And then Meta, same story here, moving in the opposite direction. You had a gap higher on the news that the settlement from the lawsuit was going to happen, and then just boom, immediately sold right back down to where we closed yesterday. But crazy.
Some wild moves to to the beginning of this day here. Speaking of, I just remembered that CRM has earnings. I think I'm going to play that to the downside as well. So putting on some trades right now in there, layering some calendars. So we'll post those in a bit.
Love it. But yeah, we've got some tasty research coming up in just a second here. But join us on the YouTube chat. After the tasty research, we'll have a little bit of time to scan through some trade ideas questions. But we're going to take a quick 90-second break. You're watching Tasty Live. What's up, everyone? We are back. E-minis down 10, NASDAQ down 90. Still selling off closer to the lows of the session here. I saw someone in the YouTube chat asking if you've got your AVGO position still on.
Me?
You?
Yeah. AVGO. I have a Super Bowl in there, long October. Short, long deltas in October. Short the 350, 340 put spread to be long the 420, 440 call spread. We still have that. Yes. Indeed.
Lovely. Lovely. Yeah, this is a solid setup here. 350, 340, 400, 420. Same kind of story to the upside. If you're out this for a credit, this is probably pulling in my trade.
I could probably roll down my call spread, to be honest with you.
Yeah. But either way, nice asymmetric upside move there. 51 days out, and it encompasses the earnings announcement, September 2nd. What do I have on here? I've got the 400 calendar, I believe. 400 calendar, yep. So similar story, just put this on last week, playing for a pre-earnings pump here, but haven't gotten it yet. But we'll see what happens. Yeah, still holding on. And again, we've got that earnings report coming out next week that can bail us out with a big upside move. But we got Julia in the house. Little market measure sponsored by CBOE, which means one thing and one thing only. We got Julia Spina in the house. Julia, how you doing?
Amazing. How are you?
Doing great.
Fantastic.
Doing great.
Fantastic.
Did you watch Hackers last night?
No, I didn't watch Hackers last night. I fell asleep.
Well, we had a little outing yesterday, and you were like, "I'm going to put this in my calendar for midnight to watch it." I'm like,
I did.
That is late, but
I did. I don't know. I kind of thought, I've been playing like Undertale recently, so I'm like, I'll put on some Undertale. I'll watch Hackers. It'll be now. I fell asleep.
Yeah.
I fell asleep.
Okay.
Tragic.
You'll get to it
I know.
eventually. You'll get to it eventually.
I know. It's on the list. It's in the calendar. I'm just going to make it a daily recurring event until I actually watch it.
Perfect.
I can't wait.
Yeah.
What are you going to do?
You should.
Got to do it. Got to do it.
Oh, Intuit's down today. Intuit's one of the worst losers in the S&P 500 year to date.
Yeah.
Yeah.
Yeah. One of those
They're
software
down.
names that have gotten killed. That's why I played it for lower. But somebody really liked it this morning right after earnings and bought a ton of it.
Yeah, you can see it was down at 320, and at the minute the market opened, it ripped up 20 points on big volume. So we're thinking it's a short covering. It's got to be something like that. But yeah, crazy move there.
Crazy move.
Bits are
Yeah, it's
still
one of the.
holding some kind of value. It's interesting.
It's interesting. Yeah, this is. I made a post about this yesterday actually, but like it's just like it shows the dispersion in the tech sector. Where like you just have like a handful of names who are doing very well, and then you have like other tech names that make up like some of the worst performers in the S&P year to date. And I thought like Intuit was an interesting example of that. I'll see if I can find the tweet, but yeah, one of the worst performers year to date. It's got to be down like 42% now, 45.
Yeah,
45% now year to date.
Yeah.
So it just goes to show that like the tech sector is not as strong as it looks. Kind of like at surface level, when you take kind of the big names out of it, it's actually only, I think like last I calculated, only 60% of the tech stocks in the S&P were actually green year to date, which is one of the worst performing sectors when you're just looking at it on a component by component basis.
Yeah, and when you zoom out and you think about why that is, it's actually kind of crazy. It's like this AI thing has taken over everyone's narrative, and everyone's just racing to try and catch up. And what that translates to is spending so much money. Like spending more money than you have on the radar for future revenue. And that is what is creating a lot of issues with these companies where they're killing their numbers, but their CapEx is too high and the market doesn't like it. It's just a wild, like that, when you think about that, it's wild. It's like these companies are just, they don't care about how they're going to get the money back. They just feel like they need to spend it just to be on par with their competitors.
Yeah. Yeah.
Feels like a little risky.
Yeah, very much so.
A little risky boots, but like one of the most interesting parts of all of this is that NVIDIA, which is like the semi, right? Like it's the semi name, is actually more correlated to the S&P and the NASDAQ than any of its like chip contemporaries, I guess you could say. It's more correlated to SPY and QQQ than it is to Micron, than it is to SMCI when you're looking at like the last 3 months, basically. The ones, the stocks in the S&P that it is most correlated to, and it's not a particularly strong correlation, are more like infrastructure companies that are on either like AI infrastructure or any energy infrastructure, like VRT is one name that comes up. But even that correlation is not particularly strong. Like NVIDIA is kind of like off in its own world a little bit right now. And that looks like, how investors are treating like the CapEx environment basically around NVIDIA, and how that's a different sort of treatment compared to Micron, compared to SMCI, compared to even like Intel and like AMD. And NVIDIA is really off on its own island these days.
Yeah. And earnings are after the close today.
I know. I didn't notice.
Yeah. All eyes will be on it.
I hadn't noticed.
We'll see.
Well, we'll see. I'm looking for some kind of shakeup. We're seeing, like correlations start to diverge where NVIDIA's like not really moving like a chip name. This is sort of like a trend that we've really been seeing over the last couple of months. And the, correlations are snapshots, right? Like those change all the time. Those relationships change all the time. So I'm curious to see if like these earnings will kind of like snap those relationships back into place, like how we've historically sort of seen these chip names sort of move a little bit more together, or if it just shakes things up in a different way, or maybe it does nothing. I don't know, but nothing is my least probable bet personally.
Yeah.
Yeah. Kind of mine too. Nothing to down.
Yeah.
Nothing. Feels right.
But you guys want to get into some research?
Let's do it.
Yeah.
Let's do it. Okay. So this is a piece, the second piece in sort of like God's series that he's done on this about overnight gaps predicting the day ahead. So if you want to follow him over on X, he's Godlytics over there. If we want to read more about it. But as we get into the first slide, what we're actually going to be doing is using overnight gaps as a premium selling signal. We're going to be trading 45 DTE strangles against different gap signals to see if there's any kind of like significant sort of like edge. The last piece, or I should say the first piece that covered this topic, we talked about like gap fills and how the size of the gap, or the size of the overnight move, I should say, made the probability of filling the gap more or less likely. And today we're going to be talking about using this as a signal for selling premium. And here we're going to be looking at average P&L per trade, premium and buying power, and then we're going to be looking at the sort of the tail risk, max drop down, and how often each gap happens, and really to understand like what this could be, how this could potentially be used as sort of like a premium selling signal.
Gap fill like up, down, doesn't matter, right?
Doesn't matter.
And so just to give the people kind of an idea to latch onto, you could think of something like Dick's, for example. Dick's Sporting Goods that just had earnings the other night. Big gap down. Is this a possible good opportunity to sell vol? Yeah.
Yeah. Noting here that we're looking at an index. And so like gaps for an index are smaller, right, than that for, a company, for a single company name, especially one that has just reported earnings. So, and here, and there's a variety of reasons why we use kind of SPY as a benchmark. So just always important when you kind of extrapolate the results to single company names and sort of those idiosyncratic risks that might be affecting those that aren't as impactful in the index overall. So, and yeah, that kind of part one, we saw a gap as a fill signal, but not necessarily a directional one. So and we've talked about this kind of extensively, predicting the market's movement on a day-by-day basis it's usually just stuck around a coin flip. Longer term time horizon sort of changed that expectation a little bit. But here we're looking at sort of like fills rather than sort of more directional, like fill probabilities overall, rather than strictly directional indicators, if that makes sense.
Indeed, I like it.
That was part one. And now we're going to be looking at relative to premium selling. Make sense?
Mm-hmm.
I don't think I've said that enough today. I think I'm going to say it a couple more times.
What makes sense?
But I think it might make sense.
Yeah,
it might make sense. So you don't choose the gaps. The market sort of hands it to you. The market gives you gaps, and it's really figuring out what to do with that, if anything. And overwhelming majority of gaps that we sort of observe are relatively flat. They're within 0.25% of yesterday's close. So most gaps are small. And here we're going to be more so focusing on the larger ones, where those rare gaps upwards of like 1% don't happen very often, maybe 1 in every 10 trading days, depending on the threshold that you're using for the size of the gap. And what we want to know is selling premium on those days, does it have any meaningful change in the dynamics, and can that be used as a premium selling indicator? So focusing more on the larger gaps. Where here, this is what we're considering large is really more than like 1%. Those don't happen very often.
Yeah. I think, like you said, it's especially rare for the indices space, where like your worst case scenario for a day is like 2-3%, 4%, 5%. Like obviously there's the stop limits and things like that. But it's rare that you come into the market and there's a gap of 2% down or up. Like that has to be a huge catalyst for that to happen.
Right. It has to be pretty significant, especially when we're talking about like overnight volumes, right? Like liquidity is much lower overnight. So to have like a big move like that, either to the upside or to the downside overnight, that, usually is caused by some larger phenomenon, potentially impacting market wide, right? Cool. So what we can see when we go to the next slide is when we're looking at the performance of strangles, like really the win rate and how that's impacted by the size of the gap. It's really those big gaps that benefit the strangle the most, but that's more from the premium inflation that gets caused by the gap itself rather than the directionality of the gap, if that makes sense again. But like we kind of talked about, those large overnight movements are rare. And on those days, this is when investors there just tends to be a little bit more fear in the market. Even if it's an upside move, that can still indicate fear in the market that can cause those premiums to become relatively rich, which inflates the win rate to an extent. But really on the days when those bigger moves occur, and here it's really the big moves to the upside where we're seeing the most actual increase in win rate.
Yeah, I think that the edge in these bars is the premium on the other side, really, where you're picking up premium. If you have the gap and you're selling the strangle, you're not necessarily betting on the directional move. You're collecting premium on the other side that likely expires out of the money or has a positive effect on your yield, as opposed to like being betting on the direction of the fill.
Exactly. Yeah, you're really trading the volatility of the move rather than the direction of the move. But here we're seeing that, like, especially those big moves to the upside is when we're seeing that big, like that favoritism, I guess, in the strangle win rates.
Yep.
Cool. Okay, so let's go to the next slide. right? Sort of as we said. However, premium richness. So if we take kind of the win rate piece out of it and we're just looking at premium richness, as you would kind of expect, nice little smile here. So either to the upside or to the downside, where actually the moves to the downside give you that kind of richest increase in premium, or when premiums, I should say, become the richest. About 60% more per dollar of buying power compared to a flat open. So those big moves, even though we're seeing kind of like directionally those being even when it comes to the impact of premium, we're seeing those big moves create just kind of like an uplift in premium. So not, again, necessarily on a like with directional favoritism, if that makes sense, but rather just because that's indicative of more volatility, which creates those richer premiums for sellers.
Makes perfect sense.
That makes sense.
Does it?
It does make sense.
I was going to ask just to make sure, but I'm glad that it makes sense.
You're going to ask what?
Nothing.
If it makes sense.
Yeah. Well, okay.
Yeah.
I got to stop saying that. That's always I just like to check in just to make sure. But we can go ahead to the next side and we can look at the tails now. And we're seeing, it's important to note as well that like when we're talking about these big moves, there's not a lot of data points. So when we're talking about big moves, either big gaps to the upside or to the downside, it's important to remember that we're dealing with like maybe 5% of occurrences on either side. So just important to note the sort of like variance of those levels overall. But what we can see is that like, as you would expect with the premiums becoming richer and volatility becoming more volatile, that can also in certain cases increase your kind of like C bar. Although what was kind of interesting to me is that like the -1 to 0.25% range was actually pretty comparable to those very big moves to the downside, which just goes to show that like your C bar is not necessarily, going to increase just from that. It can increase through a variety of factors, especially when the market sort of dips down, even if those are more moderate dips to the downside.
Yeah, these. This is still the importance of being able to absorb variance against you, and that is always going to be the case. If you can't absorb the variance against you, that is inevitable. Then you're setting yourself up for failure. So you got to just account for this up front and trade to a degree to where you can withstand these moves, and you'll be in a much better spot mentally, but also from the portfolio standpoint.
For sure.
Yeah, but also from a portfolio standpoint.
Yeah.
And then the impact of that tail is also really seen when you're looking at the C bar to the upside, right? So like we actually saw the most inflation of premium because of those downside moves, but the average P&L is actually highest when you have the moves upwards of 1%. And that's really where that tail kind of starts to come in a little bit more, sort of creating less of a drag on that average P&L in the upside cases. But still seeing richness on either side of move. It just when the market moves big, it moves big and everybody kind of jumps in, and that can cause relative inflation in premium levels on either side. So that's kind of nice as well, because like when you account for both upside and downside large gaps, that is a larger number of occurrences versus just one or the other. If that makes sense.
It does make sense.
Cool. Amazing. Okay, so just kind of like wrapping up in a nice table format. I love a good table, but bigger gap, more premium per dollar, and higher win rate on the upside. And that's not a directional preference. It's rather just like the size of the move, trading the volatility sort of overall. And the smaller gaps, I should say, the flatter ones still have that tail risk. So something that's always important to remember is even on those flat days where the market doesn't seem to be doing anything, where the probability of a fill is fairly high, there's still that tail risk kind of no matter what. And we do see sort of an increase when we're looking at those larger occurrences just because volatility goes up overall. However, that comes with richer premiums to sort of compensate for that. So something to always remember, no matter kind of what market regime you're looking at, to just always be mindful of that.
Yeah, and I think a takeaway from this slide for me is like, if you look at the percentages of how often these happen, flat half the time, small up the other 30% of the time, which leaves you with smaller probabilities that it does happen. But when you do get the big down move over 1%, your average P&L is significantly larger than those other ones I just mentioned, outside of the big up 1%. So regardless of conditional value at risk, which obviously is important, you want to trade small enough to where you also have cash on the side. So when you do get the big down move 1%, you can take part in that, so that you're not already at the mercy of it. If that makes sense.
Yeah, I mean, especially in something like SPY, when you really don't get these moves too often, you do want to be able to take advantage of it because, again, it's just kind of rare. And to see those not only the gaps but the pops and vol, I feel like those are good cues to jump in, I feel.
Yeah. And then the other kind of note about this is that we used 45 days for this. So like the time horizon can really impact not just like the risk overall, but especially if you're, for 145 or 140 day, for example, you can fit multiple 10s, multiple 20s of the same duration. And that comes with like a trade-off in risks. So always important to remember the context that we're looking at. We're looking at like daily shifts in the market, daily gaps overnight, but a relatively long time horizon with more time for a recovery, with more time for the gap to fill within the context of the study. So, and like we kind of talked about earlier, we're using a market index. So a company that, just reported earnings might have pretty different dynamics. So just something important to keep in mind. But we like to use that diversified index just because it removes some of those company specific risk factors that might impact overall the trajectory that we see after a large move like that. So just always important caveats to know about the context in which we're doing these types of studies.
Love it.
I think that's all I got. So to wrap up, gap is a volatility signal and it pays. Premiums we saw climb, especially in those large move categories. Whether that large move was to the upside or to the downside, we saw premium inflation across both of those regimes. And that being said, the up gaps are the ones that were really the richest, and that was largely in part to the CVAR being a bit lower across the occurrences that we looked at compared to the ones to the downside. They do pay when you have gaps to the downside, but that does come with higher CVAR in the back test that we kind of ran. So just being mindful of size. But that being said, we saw that CVAR kind of pop up as, being meaningful, potentially multiple times the initial credit in sort of all cases, even when the market is flat. So just always being mindful of that as a factor. And then when we looked at the moderate gaps, which happened most of the time, or the small gaps, which happened most of the time, they were pretty much down to kind of a coin flip. So that being said, when we talk about gaps, especially large ones, they're more of a volatility signal rather than a directional signal. So just something to kind of keep in mind. And then when those conditions do come up, they do come with richer premiums, but they're rare overall.
Yep. Beautiful.
I think that's all I got.
Beautiful.
You know what, Julia? You're rare overall.
Wow.
That's probably a good thing. If there were multiples, it would be over.
Oh, gosh. Yeah.
Hey.
What are you going to do?
What are you going to do? But no, that was a great segment.
Lots of cats in that world. Lots of cats in that world if there were more Julias. A lot of cats in that world if there were more Julias.
Yeah.
It's not a bad thing. Cats are great.
Yeah.
Cats are the best. They're great.
But yeah.
What are you going to do?
Great segment. Go watch Hackers.
I might just do that now.
Take a sabbatical.
Lunch break.
Yeah.
Take a sabbatical. Go watch Hackers. Awesome.
But
Thank you, guys.
We appreciate you. We'll see you a little bit later.
Yeah.
Peace.
Adios. Even he's down 2. NASDAQ down 28. Crazy moves across the board. But I think when it comes down to this here market, Meta, what an insane gap fill here. I mean, it's been a crazy day. We opened up at 590, immediately sold off back to 560. Now we're back to 580.
Yeah.
Like, what's the deal with this?
I don't know.
Into it, same story. Dropped like a rock, and then the minute the market opened, you had this big short covering, and that sold off, and then we're climbing back here at 345. So it's just like,
I got 2 more for you. Coles was down all mornings, was down on earnings, down 16 and change, jumped up. Yeah. And then you ready for this one? We talked about it at the break. ANF, Abercrombie and Fitch, also had earnings. Whoa.
damn,
Yeah, big move.
classic.
I don't even know what they said. I mean, what could they have said?
Well, during this period of time, ANF was outperforming NVIDIA, which was hilarious to me. They must have reintroduced the fierce cologne.
The cologne, that's what I think of too. That's what I think of. I know,
Yeah,
this thing had like a huge
what
short.
could be, maybe it's the fact that the kids aren't going to Dick's to spend money. They're going to Abercrombie Fitch.
Maybe.
This is a giant move though. Like this is crazy.
This makes me wonder if it was like
earnings.
short. Like there was a big short interest in this name or whatever. I don't know.
Yeah, it's been a morning of gap fills for sure.
Yeah.
Do we have any other YouTube chat questions before we get out of here?
None that have appeared to me. Let's see.
What a crazy day.
Yeah. Again, somebody did ask about calendars. Recapping some of the stuff. Somebody did ask about calendars this morning. And CrowdStrike did do some calendars in there. I played it to the upside, actually, in CrowdStrike. CRM, I actually just put some downside calendars on. That has earnings coming up tonight. So those are 2 earnings names. And obviously, NVIDIA, which we have talked about probably ad nauseum at this point. But yeah.
Yeah, the 200, 210, 220 for you. Long 9-day, short 2-day. Classic setup. Very little risk, high reward if you get the upside move as the short option decays and you gain on the long. I did the same thing. I did the 200, 210, same 9-day, 2-day split. And then you got the super bear into Friday. I actually like this a lot. I think I'm going to have to
review my XPX trade. I guess you're talking about the SPX trade I just put on today. I did a super bear. We've talked about these quite a bit. Cookie cutter setup, just a short delta play in SPX. In this regard, I did it for this Friday. I think, sometimes you can just set these up around events and give yourself a day or 2. In this case, I gave myself 2, just in case on the other side of NVIDIA earnings, which are, really we'll get the effects of tomorrow on the 27th. And then by the time we get to the sentiments coming out around Jackson Hole, this is a situation where I'm just playing for some downside, just in case we see a fall here. And again, I mean, from here, it's like 50 points just to get to the long strike, but we'll see what happens. But yeah, 7,700, 7,710 to buy the 76.25, 76.05, collected 50 cents, I think, to do it. Yeah.
Yeah, I like that setup, especially if you are playing for that downside move after the earnings announcements. And then CRM, it looks like you did. 185, 180, 175, 9-day, 2-day calendars.
Yep. And I was trying to get the 190, but it's not letting me, and I'm not moving my price. I actually like doing that sometimes because then it's like, okay, you're not going to get me filled on that one. That means we're going to stay down here. We're not going to, but if for some reason, again, the stock is down, if it jumps up throughout the day, maybe I'll get filled, but I don't mind if I don't. I already have the other 3 strikes, 185, 190, 175.
And I think that's especially important for product like prices that are small notional. Like if you're buying a 40-cent debit and then you kick it up to 60 cent, you just increase by 50%. Whereas like if you're paying $5 for something and you move it up 20 cents, it's not the same percentage change on the notional.
Yep.
So I like if you're doing these smaller calendars, just sticking with the price and letting the market come to you.
Yep. I'm trying to buy the 190 calendar for 85 cents. And right now it's saying 94 cents. That's good. I don't really need it. As you can see, I already got 3 others. So
love it. Well, it's been fun as always.
As always, my friend.
If you want to reach out to us on Twitter, you can find us. I'm at Trader Mikey B. Jermal's at Jermal Chandler. We're going to kick it over right now to Chris and TP, though. Plenty more content coming your way on the YouTube chat as well as tastylive.com. So stay tuned and we'll see you later.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
We're back. You're still watching Tasty Live. I'm Chris Vecchio. He's TP Tom Preston. This is Confirm and Send. You send us in your questions. We give you answers about trading. Maybe we find some opportunities there along the way. TP, how are you doing today?
I'm good. And just, I don't know, things kind of strike me sometimes, Chris, and maybe obviously you're a younger person, sharper about all this stuff, and you've probably thought about this 15 years ago. But it just struck me how odd that confirm verb is in the phrase confirm and send, that you're looking at the email, you're thinking about it, you're questioning whether you should send it or not, and you decide, yes, I confirm it and I will send it. I will send it. So it's a little, I don't know, it indicates a certain moral weight to our questions.
It's an important question that we're asking. Is this worth doing? And if you're going to do something, you might as well do it well, TP. So
that's exactly right.
We should try to make some money on them here. It's been a meandering market, though, here this morning, which, what a surprise. We're waiting on NVIDIA.
This was my whole point. So I closed out my Iron Condor, my SPX Iron Condor, sold it at $8.55 for $3.40. You don't even have to load it up. It was an Iron Condor. Sold it a little bit closer to the, well, I'll let you know. It was the 7630. You don't have to click into it, but the 7630, 7655, 7705, 7730 on the call side. So if you go to our follow page, you will see, and go to, TP's trades, you'll see, that SPX Iron. I sold it at 340, bought it back. What time?
Or later,
just over an hour later for $1.70, captured 50% of the max profit. The market, because I just had a strong opinion that waiting for the NVIDIA number after the close, the market's not going to do anything today. Now I didn't do size. I did small size in my accounts for this Iron Condor. So I wasn't loading the boat because the VIX is still in the 15 handle. But the point is, I was pretty confident in today's Iron Condor. Not enough to do 100 of them, but I'll do a one lot in this account. Yeah, it's a nice little winner. Closed out and just to give a nod to our viewers, 2 days ago on Monday, on my 1 p.m. live trading show, one of our viewers suggested just a bullish trade in Western Digital, WDC. What do I know about Western Digital? Not much. Bought a call spread. How much did I pay for it? $2.30. Sold it today for $4.10. Thank you very much. As I said on Twitter, Tasty Nation is the best. I don't care. I don't know everything. I learn as much from our viewers as from anyone. So if you folks have a trade idea, a symbol, why not? If it's liquid, I'll trade it.
WDC is definitely liquid. I'm in there as well right now at the 430, 440 short put spread at 51 days to expiration. I've been rolling in and out of positions here, over the past few weeks and months, which you've gotten this bounce off of the 420 level back up to 550. It kind of like wash, rinse, repeat. So hopefully we get another one of those here, another swing to the upside myself. TP, before we get into the questions though, I want to just take a quick look at some of the earnings that are due appear after hours today, because it's not just NVIDIA. You also have CRM. I know, hard to believe.
What?
Everyone's talking about this market right now. But you have CrowdStrike, you're going to have CRM, Salesforce. You also have Synopsys here. I'm curious if you're playing any of these. Synopsys, by the way, I've tried to trade in and out of. I can just pull this up on the activity tab here for the follow page. TP, I could not get filled on this a while back. Obviously not trying to do it right now. It's not a great market here, but surely there's got to be an options trade to do. And I say not a great market here because look at this. It's $1.50 wide at the 410s.
Yeah. And I mean, if you see, here's the problem, Chris. There's some not bad open interest at the September expiration in SNPs and SNPS synopsis, but there's not a lot of open interest in the 9 days. Not a lot of open interest in the 16 days. Here's the issue. Yeah, if you are extremely confident in SPS right now, go ahead, maybe buy a call spread. Do not take undefined risk in this stock. Why? Because with this lack of liquidity, it's hard to exit positions. You don't want to have to, oh my gosh, the thread's going against me, Chris. What do I do? What do I do? They're not letting me out at fair value. What I end up doing is buying my short options on the offer, selling my long options at the bid, getting the worst possible price. Don't get into something you can't get out of.
TP, like one of the quick rules of thumb, we don't need to try to figure this out. You don't need to look to the volumes every day and then go into the option chain and look at the bid-ask spread and open interest. On the platform on the right-hand side here, if you pull out this tab that's next to accounts, you'll get the stock ticker and you go to overview and you get this little star rating here. I'm just going to actually take this and circle it here on the screen. There it is. Look over here, folks. All right, that's the liquidity rating. I stay away from things unless they're at least 3 stars.
Yeah,
right.
Right.
S&PS here is a 2-star name for a reason. The reason is that it doesn't have a lot of liquidity across the chain. So even at the 23, which is September 18th, you're talking about open interest that's just barely peaking above 1,000 in some of these strikes that are above water, and then maybe one strike that has 7,000. So, but I mean, that's why you look to crowd, you look to CRM. These are a little bit more liquid. The bid-ask spreads are tighter here. They're not $2 wide. They're 30 cents wide. They're 15 cents wide. So that's just something I would consider. If I'm not trading NVIDIA today and I want to do something today and it's unrelated to NVIDIA, CrowdStrike, CRM seem to be better plays, so to speak, in terms of the ability to enter and exit a position rather than Synopsys, which I personally have struggled with in recent weeks and I've just given up.
So I'm in CrowdStrike. I am long the 180, 185 call spread with 2 days to go. This is I bought it back a couple of days ago. This again was something that a viewer suggested in the YouTube chat. And hey, TP, what do you think about CrowdStrike? What are you? And I respond, bullish, bearish, whatever. Bullish. Okay, fine. Bang. Buy a call vertical in CrowdStrike. And that's up today. It's in the money. I'm up. Where's my positions here? CrowdStrike, I'm already up about 30% of the max profit. I think I'm just going to ride this through the number today. It's a defined risk trade. I've got a couple days for it to recover. That's fine. I'm gonna take a shot on CrowdStrike. I think I'm going to be putting on in the 1 p.m. show or let's look at CRM before we get to NVIDIA.
I actually have something going on in CRM here, and it's not tethered directly to the earnings today, although TP, the spreads here right now, they're pretty tight. We're talking about 20 cents wide on the bid ask. There's lots of volume here today, hundreds, thousands of contracts traded, open interest in the thousands around some of the big round numbers. So, CRM, Salesforce, $13.81 off of 203. So it's basically down to 190, a little bit below there. If I wanted to just go find we're poking around $5 wide, just outside the expected move. You want $1.67, you're getting $1.41. So maybe you pinch it in a little bit. But
just one strike will probably get you there.
One strike going up to the 2.5, 7.5 gets you there to $1.69. I'm not trading the 2 days. I'm in at 23 because we had a market that had run up here to a high that we had in June. And I figured if there's a place to maybe say this thing's going to cool down but not collapse, this would be a good place to maybe look for a kind of correction. So the 175, 185, 230, 240 short iron condor here for me. I got in at 295. It's now trading at 293. So I have to be patient on this. But something that I want to stand directly in front of earnings, which I know we're going to have a question here about, gamma and theta and standing in front of earnings like this and the trade-offs that you make as a trader, the different levels of risk and the time horizon you're working with. So my decision was to go a little bit further out. to obviate some of the near-term gamma risk.
Yeah, I don't disagree with that at all. I am down. I may have to do a vengeance trade in CRM today because that's one of the symbols that I'm actually down this year. As I go through my, trade history and stuff like that, I look for what have I done well and what have I not done well and things like that. And CRM is negative. So not huge losses, but again, it's something that it's revenge. And I know it's not a smart way to trade things, but why not? So I may I would think I would just do a straight put spread with 2 days on this, like by the 202.5, 205 put spread, just on a speculation, or maybe even 10 points wide, or maybe 5 points wide rather, just as a speculation that they're going to disappoint and just sell off. If they're leaning on NVIDIA today, and I know it's a different business, I get it. Salesforce is different from NVIDIA, but any weakness in NVIDIA could carry through to some other stocks. And I don't necessarily like software. And like you said, Chris, they've been a nice rally up, down today, but they're still towards the top of their range. Yeah, just a contrarian bearish bet. I might do that a little closer to the close, like the 207.5, 202.5. Sell the 202.5 puts, buy the 207 puts.
NVIDIA here is the focal point of our first question in Confirm and Send today, so we might as well get on over to it, TP. As always, folks can send in their questions, research at tastylive.com. Put them in the chat all day long. We try to get through them as we can. But these ones are been picked by our producer team, so you keep sending them in, and maybe your question goes on screen one day. TP, first question. Going into NVIDIA earnings, how do you decide whether to buy premium, sell premium, or stay out? What are you looking at before choosing the structure? TP, if you don't mind, we talked about this a little bit yesterday.
Please.
So first off, NVIDIA, of course, is not just NVIDIA, right? It's clearly a referendum on the entire market. Everything related to AI is going to be under the microscope tonight. TP, you mentioned this here. I mean, you're saying software could have a knock-on effect. What if NVIDIA says our margins are shrinking and demand is slowing down for GPUs? Semiconductors can crater, right? Or all of a sudden, what about all these companies that were going to die because AI was going everywhere? Do they get a bounce back? We've seen when NVIDIA and semis have been down, software's been up. So this is a big domino that's going to fall. And you should just keep in mind that if you're anything in NVIDIA's orbit, there's a lot to go on here. So how do you decide whether or not to trade this when there's so many implications? Historic moves, TP. What's been the historic move for NVIDIA the next day or the next week? What's the options market pricing in right now? Options market's pricing in about a 5.4% move over the rest of this week, which is actually fairly light according to the market itself. Actually, when we take a look at the last quarter, the market was pricing about a 6.5% move the morning of the NVIDIA earnings that Wednesday. So where does that leave us here? Over the past 12 quarters, 3 years, NVIDIA has moved around 7.4% on average for its earnings. So just like putting a few of these things here together, TP, it does seem to me that, one, NVIDIA has a tendency to move a lot, and it's just history tells us it tends to move outside of what's expected for this particular week. There's one more layer to this. There's also the stat, which is over the same time horizon, where NVIDIA's one-day return is about 7.4%. The average earning was is 7.4%. A week later, we've seen its loss around 4.8% the past 6 earnings. So keeping all this in mind, how do I structure this? Because I'm trading it this week, TP. I went a little bit out to 9 days to expiration for the short iron condor. I went beyond the expected move on both ends, the high and the low. And I'm giving myself a little bit more time here, because if the market tends to overreact on day one and then settle in a little bit a few days later, the stock can still be down, but as long as it's above my short strike, I can win. So there's a checklist to go through.
So, and just to address it really, really quickly, how do I decide whether to buy premium, sell premium, or what? Well, Chris talked about the directional, how you might structure a directional trade. It's very simple for me. I go to an expiration, any expiration, 2 days, 23 days, 9 days, like Chris did. I start with the I start with the OTM percent column, the probability that that option is going to expire worthless. Let's say I'm bullish on NVIDIA. Let's just say I'll start by looking at the option that has a 67% POE, a OTM percent, 67% or 68%. I click on that to create a short put in this case. I don't want to have a naked short option in NVIDIA. Okay, so I go down to the next strike. So that's the 200 strike, by the way, with 23 days. 200 strike, sell those puts. I put an order in or create the order to buy the 197.50s. Click on that. 73 cents. Okay, so 250 divided by 3 is 85, 80, 83, something like that. I'm collecting almost a third of the width of the strikes. So that I might consider. Okay, I might consider doing the short put spread here, like the 200, 205. I start structuring it like that. If I don't get the credit I'm looking for, I switch to a directional debit spread. In this case, if I'm not getting the credit for the short put spread, I'll look to buy the 207.5 calls, sell the 212 calls. Pay $250 for, and I'm looking at 23 days, and I wouldn't necessarily trade this in 23 days, but that's the thought process. If I am not getting enough credit for my short strategies, I look to debit spreads.
Yeah, I mean, we'll call it a 3-question checklist, TP, right? Always check the math first, but that I think implied. But is the implied move too small for the event? If it is, then you're buying defined risk premium. If you think the volatility is too large for the event, then you're selling it here.
Right.
Also, it's good to have skin in the game. I think that if you're a new trader, sometimes putting on a small risk defined position just to see how the market responds and reacts. And we all talk about vol crush. Sometimes you need to feel that vol crush. How come I bought an option and its stock went up and I didn't make money? Well, there's a reason for that.
Right.
Don't be forced to trade, but certainly if you're going to trade it, make sure that you work through the questions. Is this in line with history? Am I going to get paid for the risk I'm taking? Is it even worth me putting this position on because of the compensation? And so you mentioned the 67.5 TP. I would not personally, if I'm going out here like 200, 195, $1.38 of credit inside the expected move for me on a short put spread is not nearly enough.
Yeah.
So I wouldn't do that here. I'm doing the inside move 9 days out. We'll see what happens.
Right. That's the choice you make as a trader.
Second question, after hotter PCE and higher treasury yields, how would you structure an options trade if your view is rates stay higher, but stocks may not go straight down? So non-crash, but duration is pressured, TP is the scenario?
Yeah. The way I would look at this is with the VIX this cheap, 15.5. And this is to me, this question is more of a stock trade, not a bond trade. If you want to trade bonds, then I would treat it kind of the same way. But if I'm bearish on stocks, bearish on the market overall, and I don't think it's going to collapse tomorrow or in a week. What I want to do is, with volatility this low, look to maybe buy some negative deltas out in, let's say if I'm looking at the SPY, for example, go out to, I don't know, maybe 51 days. If I want to give myself some duration, what you're asking for, and Chris just hinted at this, you're talking about duration. So you want to give this trade some time. You think, the stocks might start to drift a little bit lower, right? 51 days, I would buy maybe as a really simple trade. Again, just looking at maybe buying with the SPY at 77.65.90. Sell the 765 puts, buy the 67.5 puts. Just a long put vertical. You could pull that in maybe to the 37 days, but that's you're giving up a little bit of time. Either way, I would push this out to either the October or the October weeklies. Yeah, so I'm sorry. The October weeklies with 37 days or the Octobers with 51 days if you want to give this bearish trade some duration. Keep it simple.
Keep it simple. I mean, listen, unless you think markets are going in a straight line down. I'm not buying, at the money puts, out of the money puts. Where, does feel like a macro question. So if we're thinking about rates staying higher for longer, what's usually pressured in that space, TP? Home builders, which we were talking about with Jermal and Mike this morning on the show, that historically has been a place.
Yep.
What can do better? Insurers, banks typically enjoy these type of outcomes, a steeper yield curve, so to speak. I've been trying to dabble here a little bit, as it were. Travelers TRV, this has been one of the trades that we put on recently here, TP, where this is a market where it had dipped below its 1 month. It's above its 50. Everyone knows at this point that that's part of my buy the dip criteria. It's a market in an uptrend. So why not continue to try to trade the trend? What do I know? I can't predict the future. Maybe the crowd knows better than I do. There's a reason why it's going bottom left to top right. So I went in here and just sold a put spread, 350, 360. It's up a little bit today. It's, I think I've made like 4 cents in it. 197. It's now at 193. So there's still some work to do. This is not like a probabilities or a math question. This is like, if you have this view, where are you trading? You're looking at REITs. You're looking at utilities like XLU or some of the names in that space. You could be looking at the banks, insurers, KIE, but you're also then looking at some products that aren't necessarily super duper liquid. KIE is the State Street Spider Insurance ETF. It's 239,000 contracts traded here today. You look to the options. These are crap options. These are horrible options. So
look at the open interest in those things. Who's trading this?
Let me just say open interest in there.
A lot of open interest on the put side.
On the put side, but
yeah. So anyway, the bottom line is what Chris just said is did a really great overview of markets that might be hurt by higher interest rates, but also some stocks, individual names or industries, home builders, banks, things like that, insurance companies that could benefit from higher yields on bonds. A great survey of all that stuff. Pick and choose which ones you want. I would give these trades a little bit of duration though. 23 days, 37 days, 51 days. Where I bias it towards the 37 days, 51 days, to give these trades some time to work out.
TP, question number 3. When does it make more sense to use a deep in the money leaps call instead of owning the stock? I mean, why do you take a leap on in the first place, TP? You want to have stock-like exposure without having capital tied up. I think when you look at this, if I want to do 100 shares of Apple, TP, let's just go long. How much? 100 shares. Right now, the buying power that's going to be used in my account is about $15,628 here. If I went out to say, let's go 387 days here, and let's look for a delta that is like an 80 or a 90 delta. So let's buy
like the 240 calls. The 240
calls.
They're actually a little bit deeper, but the 240 calls are good enough. It's about a 70.
Right. So, okay. So now we're looking at $9,200 of buying power here. So listen, if you're willing to accept expiration risk, liquidity, intrinsic value risk, and the math works out, right? Like there can be an advantage to doing this as a stock replacement trade, TP. But if you're not getting the kind of directional exposure and the reduction in capital to put on the same type of exposure, then you really shouldn't do it. And quite frankly, I'm looking at this Apple here right now for $9,200. I don't know if I would do something like this. Quite frankly, it feels like that's not significant enough to worry.
Right. See, that's the issue. So it's now I wouldn't necessarily go out to 365 days. So I don't know. I forget what the definition of leaps is, Chris, if it's 9 months or whatever it is. Mm-hmm. But when I would do that, as Chris just said, it is how much capital am I putting up to buy the stock, and can I afford it? Or does it use up so much of my available buying power that those 100 shares of Apple dominate the capital in my account, right? Then you would look to leaps. And especially with volatility as low as it is across the board right now, I haven't looked at Apple volatility, but it's probably relatively low, especially with the VIX and the 15 handle. It's kind of depressing everything.
30-ish, 20s, 30s.
Yeah, I mean, that's when you could get long some Vega. So in addition to stock like deltas, the leaps give you positive Vega. So an increase in volatility will give a little bit of icing on the cake to that trade.
TP, we have one more question here. Yeah, leaps at least 1 year and less than 3 typically.
Okay.
This is going to be a weird corollary. You go to jail if it's less than a year. If it's a year and a day, you're in prison. Okay. If your options are more than a year and a day, you're in a leap. All right. Because you're kind of locked into the trade, right? Okay. So last question here. Why is taking a credit off around 50% profit often better than holding for the remaining premium? At what point does extra or the gamma risk outweigh the extra theta here? TP, I mean, the first half is the easiest money to make. Right. If I'm risking $3 to make 2, right. And all of a sudden I get in, I got my credit for $2 and all of a sudden it's down to 1. That next $1 is not really like just a $1 risk. I'm risking the $1 that I have already made. I'm also risking the $3 that were on the table in the first place. So now really the trade is I'm risking 5 to make 1. I'm risking 5 to make 1 here. So that's one of the ways I conceptualize it. The other is our data and research shows that once you get through the first 50%, you're really fighting the tape for that last 50%. And so it kind of happens like if you go in at 21 days, you could get to a 50% decay by 16. Do you really want to have to spend the next 16 days going for that last half after you just spent 5 getting the first one? Or should you roll into a new position and try to do the same extraction? That's what it comes down to, TP. The research backs us up.
I want to look at something really quickly here. All right. So, for example, trading these 0 DTEs, the Iron Condor that I sold at 340, bought back for 170. Right now, that spread is $1.10. It lost $1.70 of value in 1 hour. In a half an hour, it's dropped about, I don't know, about 60 cents or so. So yeah, I mean, it's going to slow down. This Iron Condor is going to sit here probably around $1, 90 cents to 80 cents, that sort of thing. The profits get slower and slower and slower when you're trading defined risk spreads. Take it off, move on to the next trade, because the longer you hold it, the more binary that trade becomes. If the stock makes a bad move towards the close in the last half hour, and I've seen them do that a million times, that little bit of extra profit, you see the whole thing turn into a loss.
Yeah, TP, I mean, gamma risk outweighs theta when the short strike is close enough and your DT is low enough, because as we know, when you're inside those last 21 days, all that can accelerate very, very quickly here. So, hey, we're done here and confirm and send. Send in your questions, research at tastylive.com, research at tastylive.com. We try to answer them here on this show. Confirm and send, of course, 11 a.m. Eastern, 10 Central Time, every Monday through Friday with myself and TP Tom Preston. We're taking a brief break here, though, on Tasty Live. Gus and Errol, 2 gentlemen, they're coming up next with a little risk and reward. Stick around.
What is going on, everybody, and welcome back to Risk and Reward. We are live from the CBOE floor, as we always are on Wednesdays. It's an electric environment going on behind us right now, and we are pleased to be here with all of you. I'm joined as always by my wonderful co-host, Errol Coleman. Errol, how you feeling? What's going on?
What's going on, guys? I'm feeling pretty good. Today's Wednesday. I think the biggest news so far for the day is NVIDIA reporting earnings today after the bell. So the market's been pretty volatile. We went from red to green on the day, and I think that really clearly communicates the indecisiveness that we're seeing before this NVIDIA earnings. So I'm looking forward to that. And also, if you're live from TikTok right now, say what's up in the chat. I know we were talking a little bit about gold. There's been an influx of gold questions lately, and that metals market's been volatile too. So we'll touch on all those topics.
Jose already jumping in here saying TikTok in the chat right away, as is Maurice. Good to see all of you. Look,
what's going on, guys?
We appreciate you guys coming out here to support. We have it's an interesting day today. I kind of thought today would be something of a holding pattern as the market waits for NVIDIA earnings after the close. Often we'll see into these NVIDIA earnings days just kind of a slowdown, and everybody just sits on their hands for a little bit, sees what NVIDIA is going to do, and then makes their moves. That has not been the case today at all. We have no shortage of movers kicking off the day today. And at the same time, I also noticed, which I perhaps should do more due diligence than this, but looking at NVIDIA's expected move into this earnings report for the first time today, I noticed it's only 5.4%, which is
that's pretty dense.
Yeah, relatively small for what we've come to expect about NVIDIA. Now, obviously, 5% of NVIDIA's $5.2 trillion market cap is however much that is. It's not an insignificant amount of dollars, but we've come to expect, 8, 10, 12% expected moves for NVIDIA as we head into earnings reports. So seeing that 5.4 really threw me off this morning.
Yeah, 100%. I know we've seen a little bit of a pullback in a lot of those memory names. But let's get into the market. We'll see what we're getting into.
Yeah, let's take a look. We can dive straight in. There's all sorts of movers. Meta is a big one today. This intraday action on Meta has just been insane. We opened Meta. So the full story here is Meta Meta had a pending lawsuit about the addictive nature of their social media platforms going on. There were very lofty numbers being thrown around. They were saying Meta could owe as much as $1.2 trillion if they were to lose this lawsuit.
Okay.
Now, obviously...
Say that again one more time.
Yeah, $1.2 trillion was the maximum penalty.
Trillion.
Yes,
okay.
And when we get to what the actual penalty was, you'll chuckle at that, but that was what they were throwing around. We said from the very beginning, I brought this up in Morning Movers at some time last week, and we immediately said there is no way Meta's lawyers are going to let them pay $1.2 trillion. There is no way that'll happen. And Jermal very acutely said, what always happens with these giant lawsuits is the stock tanks and tanks and tanks in the run up to it, and then as soon as it's resolved, regardless of what the penalty on the company is, you'll see shares move up. That is what we're seeing today. They reached a resolution this morning. They have to pay a very meager $16 billion as a result of this lawsuit.
That's a lot better than the $1.2 trillion.
Yes.
Is it a drop in the bucket?
Absolutely. And the bigger implication on Meta as a result of this lawsuit is that they now have to put regulations in place for teenagers under 18 using Meta platforms. They have to implement, they have to make it so that they can't get on at night at all. There's like curfew hours, basically. And then there's also going to be daily scrolling limits for children of that age. So, as a member of society, I'm for it. I do think social media is doing detrimental things to our youth.
Yeah.
Meta, we are getting that up move that Jermal predicted once that lawsuit was resolved for obviously much less than the 1.2 trillion number that was being thrown around. We see shares take a big gap up. But let's can you pull up 1 minute or 5 minute on Meta, because this move has been just ridiculous today.
I got a comment here. Nope says, you promised to show us which software or broker you use. We use Tasty Trade right in the top right in the top left corner. We're using Tasty Trade right now, especially if you're looking to get into options. This is not even, I know it might sound like a skewed opinion, but Tasty Trade is legitimately one of the best options softwares that you could probably use.
Yeah, it's the premier options brokerage. I mean, yes,
I've used Thinkorswim, I've used other platforms, and I even get confused.
Yeah, this is not our subjective opinion either. I mean, in Investopedia, options, and all of these major publications back that Tasty Trade is the premier options brokerage. If you're wanting to sling options, Tasty's the place to do it. What's going on, everybody in the YouTube chat? Death Sneeze, nice boy. Our regular viewers, Brandon, happy to see you. It's been a few days. Hope you're doing well, Brandon. Hope everything's well in Iowa. What's going on? Justin from TikTok, Rand from TikTok. Good to see all of you guys. Big Deal Donuts is up there, of course. Our OG. Big deal donuts. What about what's a TikTok says big deal? What about Tesla, says the GOAT community? Tesla, I haven't taken a look at Tesla here in a little bit. I think it's actually very interesting because when SpaceX IPO'd, we talked a bunch about, are we going to see money flow out of Tesla into SpaceX? Is there going to be capital rotation from the Elon fanboys? I don't know if that's necessarily played out, but I do notice now, a month or two after IPO, wherever we're at now, I have stopped thinking about Tesla. My mind will go to SpaceX first and does not go to Tesla as much. So I don't know if that sentiment is why we're seeing this big down move in the market. They're logging a okay day today, recovering off the lows on open. But the past month or two for Tesla have been a little bit rocky. Oh my gosh, I'm still looking at 5 minute charts here.
It's been pretty volatile. I know they had that pretty big gap down. What was that on July 23rd? All the way from... We gapped down from about 372 all the way down to a low of 340, and then we'd seen lower lows all the way down to 297. So things have been pretty quiet over there, especially whenever SpaceX has been getting ready for the IPO. So I know we got another comment earlier today about Rivian. I feel like the EV space as a whole hasn't been as relevant. Like, we've seen a decent amount of volatility. There's definitely things you can do in some of these EV names. And I know there's that range-bound market that you typically touch on right now. I've seen another pretty massive reversal on the day there. And it's funny, right? Like, whenever we even use a volume profile on something like Rivian, you can clearly see a lot of those rejections at our one standard deviation moves, which is at value area high, value area low. And we're pretty range-bound right now. Not much of a price discovery, or we've discovered the current value of Rivian, at least right now.
Yeah, the Rivian channel, as I've coined it, dating back almost a year now. Rivian is just in this channel. If you just had spent the last year doing nothing but getting long Rivian every time it gets below 15, and then getting short Rivian every time it gets above 17, you would be winning handsomely. We have stayed very range-bound. Even in the times when we have managed to escape from this range, we just immediately will return back to it. Even this giant gap in December into January, or this big run in last December into January of this year, we get all the way up to 23, and then you blink, and suddenly we're right back at 1350. So Rivian just loves this 15 to 17 ballpark. Tons and tons of volume in that range, as Errol is illustrating with the volume profile on the chart here. But yeah, I think you make a good point about the EV trade. I mean, it's not I think it's just not as trendy anymore. Is really the thing.
Yeah.
It's like we've accepted EVs as part of society. We've accepted.
It seemed really revolutionary.
Yeah.
Like on the first cusp of it, it was a little more. It was like new techie. Now it's kind of becoming normalized. It's getting priced into the market.
Absolutely. That's very well put. It's not. Yeah, it's not like this big revolutionary. It's not. Yeah, on the forefront of technology anymore. Obviously, that's migrated to the AI trade now. So, kind of been a little quiet on the EV front here.
You know what I'm going to do here? I think I'm going to do a strangle on in Rivian. Right? I mean, we've seen these range-bound markets, right? I mean, from a volume profile perspective, we're just taking where 70% of the trading activity has occurred from that previous swing high, which was at 22.69, all the way down to the current traded price. So we kind of see we're in the middle of that range right now. So, I mean, this could really go either way. I'd rather just see if we could take advantage of time, maybe get on a strangle, capitalize on that. And if we get a directional move, maybe we take the position off, maybe we roll the untested side. But because, again, we've seen a lot of consolidation, there hasn't been too many directional headlines coming out about this EV space, maybe we do a strangle. Rivian is a cheaper underlying. It's trading for $16 per share right now. So if we were to look to sell the expected move on the call side and the put side, I mean, we could collect almost $4, right? And that's only using about $640 worth of buying power. Still, since it's undefined risk, we're going to have to be a little bit keen on, managing this position manually. But I mean, the pop is 70%, and I love that about undefined risk trades because you always get that increased pop without having to buy those extra wings to define that risk. So it looks pretty attractive right now. I don't hate the idea.
Yeah, absolutely. And while Rivian does, love to stay in this range that I keep mentioning, the relative volatility that we see, only 18 IVR right now, which actually isn't that crazy, but 57% implied volatility 30 days out is obviously rather substantial. And that really lends itself to neutral trades like this, whether it's a strangle or you just want to sell an iron condor to define your risk a little bit better. It's because of how much Rivian bounces, it keeps those expected moves very wide, and you can do things inside the expected move neutrally, which is to say, create greater leverage for yourself, greater upside. Like right now, I'm looking at this September 25th expiration cycle. If you sold an iron condor centered around 15 and 17 and a half, like buy the 14 and a half, buy the 18, sell the 15, sell the 17 and a half, you're getting better than a one-to-one risk profile on this very cheap trade. I mean, $22 of buying power for 28 of credit. You could scale that however you want. Actually, just moved up to 29 of credit for the same buying power. But yeah, it's
these are wide markets right now.
Yeah, you're getting disproportionate risk because mathematically you are saying this is going to stay well inside the expected move. But knowing what we know about Rivian, it spends the majority of its time in that 15 to 17.5 range, even if the IV implies that it can take these giant moves, which obviously it can as well. So not a bad idea at all there. I don't mind it. You could even, I mean, if you wanted to be a real maniac, you could throw on something neutral, like 3 months out, let that premium come to you slowly with time, and the whole time also be playing the channel directionally back and forth on top of that neutral position. There's a very good chance you could triple doink that.
Definitely. I mean, these markets have showed that it has a propensity to be doing that again. I mean, we were trading at 17 a few days ago. Then yesterday we were trading at 14. Then we were trading back at 17. Now today we're trading back in the direction of 14. So surprisingly, pretty wide markets. I guess not too surprising considering the fact that we were just talking about how there's been such a lack of attention on these names, which I guess isn't too much of a surprise why there's a little bit of a lack of volatility. Like I'm noticing getting into this trade right here, I have to give back a decent amount of credit. Like I'm giving back 10 to 20 cents just to get in the trade. But I mean, the credit collected on order entry is still attractive. So I mean, we'll keep it on, but that's something to pay attention to, look out for, because if we're trying to get out of this trade, maybe we got to give back an extra 10 to 15 cents just to get out.
Yeah.
And that can really add up over the duration of maybe, 20, 30, 40, 50 trades, giving back 10 to 15 cents.
That's exactly what I was going to say. Yeah, a law of large numbers. It mustn't feel like a big deal when you get slipped $2 on a trade. And you guys know all too well, I let myself get slipped $2 on a trade a whole lot. But when the whole strategy is just playing into small edges and trusting that the law of large numbers will bring the profits to you, those little bits of slippage, when you're talking about large numbers, become large numbers themselves.
100%.
I would also let's take a look at Dick's Sporting Goods here, DKS.
Yeah, DKS.
This was my trade of the day yesterday. But we are catching a nice little bounce in Dick's today. Just sort of exactly what I predicted with trade of the day. It's really, really hard. When a company loses 30% in a day, it's really hard for that next day to be red also. It's just the nature of the market that...
Oh, it was close.
Yeah, it was close. But it's the nature of the market that everything that, on those panic selling days, eventually everybody that wants to sell will sell, and everybody that wants to hold is going to continue holding. So there eventually becomes only buyers, however few they may be, in the market. And that doesn't mean that Dick's is going to make a full recovery, but that is why dead cat bounces happen. That's just the psychology of a dead cat bounce right there.
Yeah.
So this could potentially be a dead cat bounce that we're seeing in Dick's, but it's putting in the first leg on a long, long road to recovery.
No, I mean, I really like the volatility we're seeing right now in Dick's. And I mean, we got to do a quick pulse check. Who still shops at Dick's? Like, I know in Colorado, there's this massive store called Shields. I don't know if that's a nationwide kind of store, but it's a sporting goods store, very similar to Dick's. But I wasn't sure if Dick's is going out of fashion now, or if they're looking to maybe rebrand to other types of concepts. But I thought it was pretty cool. Dick's has been one of those places that have been really nostalgic to my heart. That's one of the places that I still don't mind roaming in.
Yeah.
Just going around to each section.
I agree. I mean, Dick's is like, it almost exists like Toys R Us or something in my brain.
That's like the adult Toys R Us.
Yes, absolutely.
That in Best Buy.
Yeah, Best Buy, certainly adult Toys R Us. They're struggling in the market as well.
Yeah.
I don't shop at Dick's myself. I would shop at Academy pretty frequently when I was in Texas, which is the southern sporting goods store. They're also publicly tradable. ASO took a move down alongside with the poor Dick's earnings report yesterday. But yeah, I'm not a Dick's shopper myself. But if anybody's been in a Dick's in the last, 6 months, let us know in the chat.
6 months, yeah. That kind of shows how the relevance has skewed away a little bit there.
Brandon in the chat saying jelly on the jackets. I want one. They are cool jackets. I got the branding on here. Fun fact: I stole this from Jermal. Actually, I did not get my own jacket. That's why the arms are just a little short. Jermal and I's proportions are just a little bit different, but close enough that it still looks good. What else we got going on in the chat here?
So calls at the end of the day. I don't know about calls at the end of the day, but what we did today so far was we sold a strangle in Rivian, which what we're doing is we're selling each side of the market. So we're selling an out-of-the-money call and we're selling an out-of-the-money put spread. So it's almost like a neutral position. And if it can stay range-bound within those boundaries that we created on order entry, we should be able to profit off of that. And depending on how Rivian moves throughout the duration of the week, that'll give us more information to let us know how we might want to manage that specific trade. And then I know we've been talking a lot about gold lately. Gold's been pretty volatile. We purchased a gold put a couple days ago. I know Jay in chat was short a ton of futures contracts on in gold. I wasn't getting that aggressive. I didn't feel comfortable using the micro gold contract. So what I did was I used GLD. This is going to be another asset you can use to get exposure to the gold market if you don't want to use the gold futures. Decent liquidity. I mean, the options are pretty liquid on there as well. But I purchased a put on there with about 8 days till expiration. So this is going to expire by the end of next week. And I bought the 415 puts in GLD. So we're looking for a little bit of a pullback in the metals. Not that we're looking for a full-on reversal or correction, but that's where our directional bias is right now. And because we did purchase those options, we're not going to be looking to hold those to expiration. Because, I mean, as you guys know, as we get closer to expiration, those contracts lose value, and we purchased this one. So we're just looking for a brief pullback. If we don't get it by the end of this week, we might call it quits, maybe reposition, but that's how we're positioned at the moment. Metal's pretty volatile lately, so we'll take advantage of it.
Yeah. Anytime the volatility presents themselves in those products, it's a good time to go after it.
Yeah.
A couple of good questions, a good question and a good point being brought up in chat here. First and foremost, also, I'm going to return Death Sneeze. I'm going to return to calling you Death Sneeze because I see we have another Brandon in the chat, and I don't want to confuse anybody. So, Brandon, named Brandon in chat, saying, IREN punished today, earnings tomorrow. This is a good thing to draw my attention to here, Brandon. I got so wrapped up in the NVIDIA excitement that I didn't pay any attention to this. But yeah, IREN taking a 5% hit today, just the day before earnings. This makes me want to get a little long. I'm a big proponent. I love fading the post-earnings moves. As you guys all know, one of my favorite trades is just, it's what I'm doing in Dick's right now. It's what I'm doing in Walmart right now. If you think the after-earnings move is a little bit exaggerated, taking the other side of that can be a very profitable endeavor. However, you can also find situations where a company, I like to say, overprices in earnings. The market overprices earnings into a company's balance sheet before the earnings report comes out, and it gets to a point where you're just obligated to take the other direction. Now, I don't think that we're there with IREN yet, but you will see this sometimes, and you'll even see this sometimes with NVIDIA. The excitement will be bubbling the whole week, and NVIDIA will run up, 8, 9, 10% in the week leading up to earnings, and then it's like, okay, what could they possibly say in earnings to make this better? We've priced in a ton of growth here, so they would have to really blow it out to do better than that. Conversely, you can do the same thing if something is sliding. Everyone expects earnings to be terrible. It gets to a point where you got to say, could earnings really be this bad? Could they say anything to make this that much worse? And I don't think we're at that point with IREN yet, but this is definitely one that I'll be eyeing throughout the day tomorrow if their earnings report is after the close, if they log another leg down. Might look to get long there. Other thing, Mohammed says, has the Rockstar leaks caused any dips? I don't believe so. Take-Two, the parent company of Rockstar and GTA, is publicly tradable. Rockstar is not. They are down on the week. I don't know that you could directly attribute this to the leaks coming out. It is pretty normal market behavior, and they've been consolidating in this same range for about 2 months now. I'm not entirely sure. Yeah, TTWO is the ticker there. I'm not too sure. I can't really point my finger at this and decisively say that this drawdown we've been seeing over the past week is due to those leaks. Could certainly be in part, particularly this candle that we got on Monday. Very bad day there. Opened 239 all the way down to 232. So maybe that could have something to do with it. I know that was mainly weekend news when the leaks were coming out. So perhaps, but I don't know that we can say correlation is causation there. Brandon's Unite. We are Captain Planet. I love it, Brandon. No harm, no foul. Brandon's Unite. Good. Happy the Brandons are getting along. I go by both. Love it, Destinies. Thank you. Frankie saying his nephew's over my shoulder. I won't turn around in the name of professionalism, but I trust that he's back there. Big deal pointing out Abercrombie and Fitch, A&F. They reported earnings this morning, if memory serves, and are absolutely smashing right now.
Yeah, they're killing it. Wow.
Yeah, 40% up move we're seeing in Abercrombie and Fitch here. This is the type of move that I was just talking about where I feel like I'm going to fade this. This feels like, we're talking.
What's Abercrombie and Fitch doing that well for them to be up from $100 to $153? What are you guys doing?
Yeah, it's like if earnings are a smash, but it's like the crazy part is these things. And the market just has a mind of its own. We always say the market can stay irrational longer than you can stay solvent, and that's absolutely true. But I'm speaking out of turn here. I have not looked at Abercrombie's numbers, but often you'll see moves like what we're seeing in Abercrombie right now when a company raises their, say beats, and then raises their forward guidance by, 10%. And then suddenly we see the stock move up 40%. And it's like, whoa. Are we sure that is a justified move?
Yeah, let's calm down a little bit.
Yeah, good shot on this big deal. This is completely unstoppable freight train right now. Not one hint of wick on the top of this daily candle. But I do think that this is one that I'll be looking to step in front of, just because, like I said before, it's the opposite of the situation that I was talking about before with Dick's. But in a situation like this, you have buyers flying in, buy all day today. Everyone that wants to buy is going to buy, and then naturally we have people who want to hold everyone who wants to buy has bought, so tomorrow there are only people left who want to take profits. It's just the nature of these things. Errol and I have coined this the dolphin dive, the opposite of a dead cat bounce. When a stock takes a giant run, like Moderna is a good example of a dolphin dive that we see happening right now, where it takes this giant move up and then it's just a little bit exaggerated. The people are comfortable taking profits, and you see it take the down move the next day.
No, 100%. I was just what was that? Moderna. Yeah, I think Moderna is a pretty great example of that, and I've actually been meaning to check
just
mRNA.
mRNA. Yeah.
There we go. No, just looking at the daily chart over here on Moderna. Actually, it looks like we got a little bit of a gap down there, a little bit of a continuation to the downside. But again, I think this range that Moderna is trading in right now, such a difficult market to trade, especially after the massive gap up. Right, we had the extension to the upside at 176.66, and then just trading in between that high and low on that daily candle. That's a tough trade, regardless of which direction that you're trading right now. You know, obviously, option sellers have definitely won over the last 4 to 5 days because we haven't gone anywhere. But yeah, that's a difficult market to trade.
It is so difficult. I mean, this is like, and there are people at Tasty who are trading this profitably right now. There are definitely ways to do it, but for me, this is no trade for like a month. Like I need to trade. I gotta let this get some ground under it, establish some kind of new range, figure out if we're gonna ever test this gap or if we think these levels are fair. I understand this is a giant medical development that they have wound up with here with this melanoma stuff. So I'm not saying that the gap is going to get filled to the downside. There's really no reason that it would, but are we going to test those levels? Could we go higher? There's so many unanswered questions, and I'm just going to give this a freaking month before I want to touch it at all.
Yeah, no, I completely agree. Said, what's the biggest mistake you see newer traders make when they start scalping? I would say the biggest mistake that's easiest to fall into is overtrading for sure. I think as a scalper, you kind of view the market as like an endless stream of opportunity, but I think it can be further from the truth. I think, yeah, on a frequency basis, you might have more opportunities than a swing trader might or a long-term investor. Yeah, that's true, but scalping is more so you're just taking advantage of a very small piece of time. So it doesn't mean you're going to get trades even every single day. It just kind of means that the duration of those trades don't last very long whenever you do take them. So I think the easiest mistake is always going to be over trading. And I think having some type of process or framework where you can kind of filter certain trades that you find attractive and not so attractive, whenever you can filter those out, I think it becomes a little bit easier to not overtrade. And then from there, it's going to just come down to discipline.
Yeah, absolutely. I think that's very well put. Errol's more of a scalper than me, so give more credence to his words. But I would say the other super duper common beginner trap is holding your winners too short and your losers too long. It's human psychology stuff that you want to. You want your original thesis to hold. You'll hold your losers until they're down 50, 60% before you cut them. But then when you have a winner, you just can't wait to get it off. You're scared of it turning into a loser, and you want to lock in those profits. So maintaining consistent profit targets and stop losses is definitely a skill that needs to be acquired as well.
Definitely helpful. What do you think about ICT strategies? I've seen those blow up in popularity amongst the younger generation. I will say I think you can do whatever you want in the market if it gives you a level of confidence and conviction. Do I subscribe to the ideology of ICT? No, I don't. But with that being said, something that I noticed that was really interesting from all the market wizards, right? We've even had a couple market wizards on the show, right? Peter Brandt, Larry Williams. And if you read the Market Wizards book, a lot of those top guys disagree with each other to some extent in terms of how trading should be done. So I think by just noticing that observation should really tell you something, right? If something's working for you, continue to do it, because you have professionals at the top of their game, the best in the world in these Market Wizards book, and they still disagree with each other to an extent in terms of how this should be done. So.
Yeah, and I think, and you know, one of the, it's, how do I want to put this? In like bodybuilding, in like bodybuilding, a very common thing that you'll see is on forums, on Reddit or whatever forum, somebody will give bodybuilding or weightlifting advice, and people will say, "Show physique." That's a very common thing to say, and it's true. It's like, you know,
I'll start to pose right.
Yeah, it's like in bodybuilding and in personal training, the proof is in the pudding. You look the way that you look because you know what you're doing, and that gives credence to what you were saying. So similarly, in trading, the proof is in the pudding. If you're bringing in the profits and have been for years, you know, this isn't a fluke. We have enough statistical data to say that you are a profitable trader. Then keep doing what you're doing, and nobody can tell you that you're wrong for doing it because you found something that works for you. There's 100 different ways to skin this cat, and just however the best way for you is what you should do.
And I think an annual basis is really a good benchmark, right? Like if you're consistently if you're an active trader and you're trading every single month of the year, right? If you're doing well for 1 week, that's 1 week of data. But if you can trade 12 months of the year with whatever it is, maybe you're flipping a coin, then you're letting your hamster click the buy and sell button. If you do that for 12 months straight, and you have a minimum of 500 trades for that year,
and you're beating the market,
and you're doing this consistently, then by all means, let that hamster cook.
You have a magic hamster.
You have a magic hamster.
And we have enough data to say that is a magic hamster, and you should keep doing that.
You better hide that hamster before I find that hamster.
Yeah, no kidding, no kidding. Maybe see if that hamster wants to have some offspring, and we can get a whole field of trading hamsters going. Tried a 5-wide short put spread in ANF, 150, 145.
What is that in there?
225 debit, Abercrombie & Fitch, ANF.
ANF.
Don't tell Julia you're skinning cats. We keep this quiet, Brandon.
We keep that on the low.
Yeah, that's why I talk about these things here at the CBOE and not in the office, is because Julia can get me if I'm in the office.
Just taking a quick look at ANF.
250, 245?
I mean, they're at their highs right now as you speak, like you said. There's no daily wick, so the highs is at 153.47 right now.
150, 145.
150, 145.
Yeah.
$5 wide. I like the $5 wide.
Yeah.
I like the $5 wide.
I don't mind it at all. All right, we got 90 seconds left here. Anything else you got on the top of your mind before we take it out?
No, I mean, I know right now, right, just looking at the Qs, just looking at NASDAQ, we've been in a pretty range-bound market, right? So I think, NVIDIA earnings coming after the bell, I wouldn't force anything into the market right now. I mean, just opening up, you can kind of see the price action that we were getting. And if you're somebody that likes to trade these intraday markets, I think this could be a tough one. So I would just say wait for a little bit more clarity if you're somebody that has lacked a bit of conviction in some of the trades you've taken already today. And I mean, we have NVIDIA earnings coming after the bell, so that might provide a little bit more directionality, I guess you could say, to this broader market. So let's see what we get for Thursday and Friday. Let's be patient. NVIDIA, I think maybe an earnings beat. They set such a high bar, but who's to say even if they beat earnings
it's all about guidance.
It's all about guidance. Who says we even head to another all-time high? So I think that's going to be exciting. We'll pay attention to that. Volatility back down on the day, about break even. The market's all over the place. We went red to green, back to red now. We'll see what we get.
Yeah, that we will.
It's been a tug of war.
Yeah, absolutely. Tug of war is a great way to put it. And yeah, just keeping all eyes on this tech sector for the rest of the day for sure. But that's going to do it for Errol and I here today from the CBOE. Thank you all so much for taking the time out of your day to watch. We dearly appreciate it, and we never take it for granted. Errol and I will be back here same time, not same place, in the tastylive studio tomorrow, 10:30 a.m. Central Standard Time. Do be sure to come hang out with us. And stay tuned. We will both be back on for Trades of the Day here in the next couple hours. Thank you all so much for watching. We dearly appreciate it. And we will see you guys next time.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And BrokerChooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
We're back. It's midday here on Tasty Live, 12 Eastern, 11 Central, which means it's a good time to check in to see what folks are actually trading as we get ready for these NVIDIA earnings with the one and only Marty Vanette. Marty, how are you? Studio, if you don't mind giving me Marty's audio, that'd be very helpful.
Hello?
There he is.
You there,
Hi.
Chris?
I
think I sound much better when I'm muted sometimes, right? I'm out with the smartest guy on TV, according to Q. So that's a huge, huge compliment coming from him, by the way.
I appreciate that, but we try to stay humble here. The P&L could be doing better if I was smarter, right?
Well, that's how we're gauged by, not so much our actual intellect, but how much green we have on our accounts, right?
Exactly.
What's going on?
That's all that matters. Opinions don't matter in this game. Marty, what's going on here? I'm getting some hope back as a Mets fan. It's weird. I don't like feeling hopeful as a Mets fan.
Really? Well, you got Cub Sox here. I mean, the Cubs are kind of, but yeah, I mean, you have to appreciate the man because he spent an enormous amount of money on that team. I don't know.
A few layers of appreciation. We do have a family connection to the Mets ownership.
Yeah.
So there's something there. There's something there. But the other part of it is that apparently the Dodgers owner went to Steve Cohen this week and asked if he could get a loan.
Really?
And Steve Cohen.
Well, this guy
Cohen said,
yes, he said no.
He said no. So listen.
Maybe he'll sell him some of your players. But I mean, yeah, it's nice for you guys.
Maybe
right?
He'll sell the Dodgers and Ohtani becomes a free agent again.
Right. Well, I heard like when they said that the Lakers were going for $12.5 billion, guys were like, what's going on? It's I guess it just furthers the concept that money at that level there's like no value to it. I mean, not that you're going to lose money on a team like that, but if the Lakers are worth $12.5 billion, what are the Rams worth now? Are they worth $20 billion? Are they worth 15? I don't. It's crazy.
It's all just funny money. In any event, Marty, we're here today waiting for these. Yeah,
go ahead. No, you go ahead. I would keep interrupting you. I'm sorry.
We're getting ready. We're making small talk here because the market really hasn't been moving all that much today. S&P is down by 0.1%, but it's been 76.80, 76.90, a little higher, a little lower, all session long. I don't think that's a surprise though, because we had NVIDIA coming up this afternoon, and everyone really waits on that report.
It kind of did the same thing yesterday too, Chris. It opened up, I think, 32 handles higher, and then it just trades in that little channel for the entirety of the day. Like it didn't do anything on really on the downside. It didn't really break out on the upside. I think that like that 77, 16, 20 area in the SPOOs is nice. And then above that, I guess 77.5. But I kind of had 76, 8600 as like kind of a pivot. It's been quiet. I mean, I saw the volume, I think yesterday at the CBOE was like 53 million or something, down like 22%.
Light.
Yeah, light. So, I mean, today's been kind of quiet. Guys are calling in, obviously, a little concerned about their NVIDIA positions, whether adjusting is going to be made before. I mean, so you're going to get calls about that during the course of the day today. But again, this has been like a day, like a week. I guess if you were someone that was actually going to trade and maybe scalp E-minis. Like there were points in there where you could have got in and out. I just don't know what the viability is of it or really what scalping that market even means anymore. But as far as the other stuff, it's been relatively quiet there, relatively quiet at the desk. So, which isn't bad. Not a lot of, I haven't gotten too many calls calling in about NVIDIA and what's going on with it. But as far as the rest of the market goes, it's like, MU's kind of been, that's kind of another one that I can't really figure out. Those things are getting, the chip makers have been getting a little pounded the last few weeks. So I don't, normally I have like guys that are calling in specifically about something that they want to trade. And today's like just one of those days where I guess if you have, SPX spreads on or something like that, you're probably doing okay with them, because you're not getting the type of movement. You'll probably still have it separated enough to where you're going to collect your money at the end of the day and move on. But again,
speaking of that, TP actually was talking about this before. He put on this morning at 10 Eastern, just right after the market opened, the short iron condor for 340. He was able to take it off an hour later for $1.70. And if we were to take a look at that position right now, which I still have loaded up here on the screen, it's $1.55 or so. Today has been all about just decay and this market getting pinned ahead of this earnings report.
Right. Just get in when it makes its like initial move in that, and then just sit there with it. And if you have it, surrounded like that, this is a good day for guys that just want to sit, watch, and then you'll see what happens. And I don't know. At the end of the day, if they don't do a bad or a good number in NVIDIA, you're going to get more of the same tomorrow, probably, I would think, unless, of course, oil and Fed stuff clicks into everybody's minds. But we'll see what happens. It's been quiet, And this is, again, it's the E-mini market, the range is still like 32 handles, right? I don't think I missed anything on that when I walked over. I haven't seen that. I spent 40 years in that building. I think the last time I saw like a 32 handle range was in like 1993 or something.
And it's been like almost 4 days in a row of that too, which is
channel,
all the more remarkable.
You got it up there. That channel has just been, even in SPX, look at it. You could probably, there's some great opportunity in a market like this that isn't moving as much as you would, think it normally would be. But, this is summer.
For sure.
Right? So,
and that's it. It's the final 2 weeks of summer. I know the kids in Chicago just went back to school this week. Right. Here in New York, they've got another 2 weeks. We go back the first Tuesday, Wednesday after Labor Day.
Yeah.
So like this is the kind of final hurrah. If you want to get away, you're going to get away. These, and historically, this is not unique to this year.
No.
I pointed this out before. When you look at the last 2 weeks of August, the volume figures are in the same ballpark in markets as like Christmas, New Year's, Easter, July 4th.
And then you'll get probably a big bump September 1st, that first week. And then we should go back to, whatever, normal volume days. But I agree with you 1,000% on that. Can I give a quick shout out to my son who turned 18 today? Can you imagine that I raised an 18-year-old son? Can anybody imagine? Aiden, happy birthday.
Happy birthday to him.
Yeah.
Happy birthday to him.
Learn how to trade. Yeah. Listen to this guy on the other end of the phone here, too. On the other end of the screen.
Financial independence matters a great deal.
Yeah.
I think that when I talk to my parents, I'm like, what are you most proud of me? It's like that like you can stand on your own 2 feet.
Yeah.
We did our job.
Yeah. There you go. I don't know if he's ready to stand on his own 2 feet financially yet, but I have high hopes.
Well, he's 18.
The highest of hopes. Right. I'll give him
when I thought I could at that age. And so it's like I graduated high school. I turned 18. I'm like, all right, guys, I'm going to come and go from the house as I see fit now that I'm an adult. And my parents said, the hell you're not. Like, you don't pay rent here.
Right.
It's like, okay, well, I'm moving out. And I moved into this 600 square foot apartment in Brooklyn Heights, which is now a nice area in Brooklyn Heights. But in 2007, Clark and Henry, it was this old motel that sat above the 2-3 line. So literally the 2-3 station line was in the apartment building in the basement.
Right.
And so every 7 minutes, that building would
rattled,
shake.
Right. Yeah.
Shake. And
it was like
one of those. And I was like, I wasn't ready to go out on my own yet. I should have stayed with mom and dad and been a little bit more respectful.
But if you would have bought it, it's probably worth $3 million right now in New York, right? Right. That's right. If you would have bought it for like $130,000 back then, you'd be renting it out for $4,000 a month there. Right.
What a mistake I made.
Well, that's good to know about you. Look, I'm learning more and more stuff about you, Mr. Vecchio. I like it.
we have only a few minutes here. Let's walk through the top 20 symbols today. I imagine that NVIDIA is going to be near the top of the board when we pull this up on the screen here.
Let's hope.
Marty, tell me, let's go through this.
All right,
anything in particular at the same time?
Yeah, number 20, we got SoFi at 13. 19, SanDisk at a 21. Google L at 18 at a 13. At 17, we have AVGO. 16, Intel at a 26. Followed by Bezos and Company, Amazon, 15 at 13. Palantir at number 14 at a 15%. Oracle, 13 at 62%. CrowdStrike, 62% at 12. And 11 is INTU at 47. Now we'll round out the top 10. CRM at a 69. Microsoft, 9 at a 23. 8 AMD at a 26. We have 7 gold. Like I said yesterday, I like to see gold and silver back trading a lot again. At a 36. 6, my nemesis MU at a 31. 5, Apple at a 43. Now top 4, SpaceX, -2. It was like that yesterday, I think, too. Tesla at a number 3 at 10%. All right, NVIDIA is at number 2 at 36, and number 1 is Meta at a 38%.
Yeah, Meta had a really, they paid their speeding ticket, so to speak, today. I think they paid like a $15 or $16 billion,
right?
Something in that neighborhood, fine to a bunch of different states. Ultimately, the market goes, risk out of the way. So stock is up here. It's off the highs, but our man behind the scenes, Frankie, points out the volumes here today. Marty, check out the volumes here in the options chain. So I have open interest in volume here, which if you're on the platform, just for the folks at home, just going to circle this here on the screen. All right, you can always change these up, and you can just simply do so by clicking into the tabs themselves, right?
Wow.
I'm going to just get this off here. So open interest, blah, blah, blah. All right, look at the volumes. 580 calls right now, 76,000, almost 77,000 contracts traded against open interest of 4.5K.
Yeah.
Right. So folks, I mean, if you're looking for action right now, it's Meta. I mean, it's Meta and NVIDIA, SpaceX, Tesla, but SpaceX, you say -2 IVR.
Yeah.
So really the action today is Meta in the run up to these NVIDIA earnings. That's what stands out the most.
Yeah, that's nice. That's nice. Amazing volume. Amazing
volumes and market that's giving it back because it was higher near back to 593 and now it's back to 577. So $16 off the high. Hey, Marty, it's always a pleasure. Happy
Chris.
birthday to your son.
Incredible. Thank you, my friend. I learn a lot from you every day.
We're going to be back here in a few moments. Up next, a little Forex focus. Glen, Frybarger coming on the show.
All right, brother. Talk to you later.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're number 1. And BrokerChooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Treasury markets have been running amok recently thanks to Secretary Treasury Bessent's hijinks at the long end of the curve, but it certainly spilled over into the foreign exchange markets. And that impact continues to linger here days out from that initial intervention announcement. With us today, Glen Frybarger here for a little Forex focus as we talk about what's happening with rates, the dollar, and perhaps even precious metals along the way. Glen, how are you doing?
Fantastic. Good morning to you. Good afternoon to you, Chris. Good morning.
Good morning to you.
To our central time zone folks and west. We're all good here. Hump day. Not too much to report from the Chicago office, except a light pita lunch. Very good falafel.
Oh gosh, that's exactly what I'm in the mood for. Whenever people ask me to go out for lunch, it's like one of 2 spots, and it's because they both serve falafel. I don't know what it's been for the past 6 months. I've been on this falafel kick.
That's awesome.
And I found this great place that's like 15 minutes away where they do falafels and tacos. It's a Mexican Lebanese fusion restaurant, and their falafel is outrageous. So
if it ain't broke, don't break it.
I am probably going to be getting that for lunch today, now that I think of it. All right, here. We're going to be using US dollars to buy that food, though. Are those dollars getting worth more or worth less over the course of today's session? Worth a little bit more. But, Glenn, this has been a really tough run for the buck. We'll flip over to Dixie here, the DXY index, which if you want to see this on your platform, while not necessarily a tradable instrument, you go over to $DXY, and it will pull up here. We had that big pullback last week, Glenn. And we're trying to recover a little bit here, but it's been very meager. It's been very meek. What's the problem right now for the US dollar? Is it dead at this point in time? Should we really just be looking to sell rallies?
Yeah, I mean, right now, what's interesting about today that's different, even though, we're in a very similar situation to where we were Monday to start the week when I was talking to Ilya about this, we are starting to grind higher again for the US dollar. And so now from a risk reward standpoint, you could think about it both ways in terms of selling rallies like today, saying, of course, we took a big chunk out of this US dollar on some confidence repricing, maybe just demand outflow. So selling any rally there on that kind of wider macro view. But the tape action since then has shown that it's not a complete sell the dollar. Everyone is migrating out. We do still have an expected rate hike for this year. And until we get more clarity on that, you have to assume that the U.S. central bank is going to act like all the other G7 central banks. And that, regardless of the Treasury's behavior, there are multiple inputs impacting this US dollar, and a lot of those could hold up.
You mentioned the rate hikes. There's actually a way to view this on the platform with a little bit of tinkering here. SR3Z6. Treat them as a futures contract, Glenn. SR3s are going to be the 3-month SOFRs here. And what do we see? Yeah, Glenn, just having a bite of something here. What are we eating? What are you guys putting in front of me? Pete, falafel? Thank you. Just making me quite jealous. Good. Glad we have that little inappropriate food porn here on Tasty Live Midday. Good. We got a little ASMR going on. Glen chewing that for the microphone. We can clip that. Okay. So, with the SR3 contract, it's a futures product. And so you can go to the various expiries, typically sticking to the months where the Fed has its big meetings. So those would be March, June, September, and of course, December. And forthcoming, we're looking at the SR3 Z6 of December expiry here. On that y-axis, you're going to see numbers. And what do those have to do with Fed hike odds? Contract is basically rooted to 100. You subtract that from the y-axis from 100, and that gives you the implied rate. I happen to be using these little lines here in the platform, Glen. I just put horizontal price level lines, and I added labels to them because 96 less 100 is 4. So that would be a 4% implied rate. 96.25 subtracted from 100 is going to give you a 3.75 Fed funds rate. So this is an easy way that I've set it up here on the platform that I can just see what the market is thinking. That's which way it's leaning. And you mentioned the lean here, right? We've been leaning. We were almost back to a 50-50 shot of no hike the rest of this year to now where the market's just slowly leading back into it. 88% chance of a hike by the end of the year, as opposed to where it was, 2 weeks ago, and it was basically a coin flip. So those hike odds are coming back in play little by little. And you note that the dollar is finding some stability alongside of it. The question is it enough stability to try to pick off a little bit of a dollar low here and look for a counter trend rebound?
Yeah, I mean, it's interesting. I'm curious to hear how you think about the rest of the week here, because if you look, across media headlines, of course, waiting for Warsh's side of the story or what he thinks about the Treasury developments. I, on the other hand, can't seem to rationalize that he's going to say all that much or give, the narrative that some groups are hoping for. Do you see any world in which he speaks to, this actual topic of debate, or is it task force will be on it? Stay tuned until next time.
Oil at $80 a barrel changes the conversation. Warsh going into Jackson Hole with oil at 90, Brent at 100, and him saying, don't worry, it's all transitory, lands very differently if oil's trading back at $79 a barrel, right?
Very fair.
So, I don't believe in coincidence. What a coincidence that we have all these efforts to tamp down long end yields, rein in the price of oil right before Warsh hits the podium. And Besant bought him a little bit more time to not have to hike. Which, incidentally enough, you would think Besant, of all people, would know this. If the Fed hikes, the pressure at the long end will be relieved because they're addressing the issue, right? They're not going to allow inflation and growth to continue to just pump. But, I think they really want asset prices higher. Either way, what has recovered? Where's the dollar doing best since that pullback? It's not really against the euro, which you can see the euro is the largest component of the dollar index, 57.6%. And so euro dollar, it's off the highs and it's being rejected here at the swing high we had from May 29th, right short of 117. So perhaps this is a level to trade around. But dollar Swiss, something that you've flagged frequently in the past. This one's holding up a little bit better. It's recovered more than half of its loss from last week when we got this long end intervention. Do you still have interest in dollar Swiss on the long side of this market, despite the dollar's problems here?
100%. You still have, all the fundamentals we called out for why people are getting into this as a carry trade. When you think about taking the dollar confidence bit out of it, that's really, you can pick 8 different places where you'd pull back before you get to something that is so structurally sound and getting out of that. So it does make sense that we're seeing a bit of a stronger move here. But as Ilya pointed out on Monday, this could be, we're right at this congestion of moving averages, a little bit of a former resistance, and now could either turn support or, regardless, an interesting day to say, perhaps gain conviction in either a long or a short. If we fail right here, that could just as easily be as sound an instrument to getting short the dollar as the euro. but you do have some of those fundamental rate dynamics that perhaps bid up the demand for dollar there more than a euro,
Sure.
which is on a hiking path as well. We had some news this week, right, just saying ECB on pace for September hike.
It looks like it. So the market's pretty much priced there. I think when I last checked the Eurozone OIS, their overnight index swaps, we were leaning towards like a 77% chance of a hike in September. So the market's right there. Yields here probably playing a significant part of this, why the dollar's finding stability. 2-year yields, they're continuing to come in, at least ZT's coming in. Yields are pushing back up here ever so slightly today. Net over the past few days, we really haven't changed much. But there is that rejection at the long end of the curve again. Notes went to the top side of their recent trading range. They fell back here.
Man, that's quite the chart.
I mean, it's just so much chop.
Yeah.
But I'm trying to play ping pong with it, where again, yesterday, not necessarily a view that's tethered to the dollar itself, but more to the bonds.
Sure.
Short the 110, 109.5, just basically that this range top is going to hold, and whatever Besant's doing at the long end of the curve isn't going to stick. We're going to have a few fights here between the bond market and the Treasury Secretary along the way. So round 1 is over. Round 2 coming up next.
Buckle up.
Glen, this is obviously a day where the dollar probably doesn't get a ton of focus and love because of NVIDIA earnings coming up later, but not small moves playing out beneath the surface. Pound down by 0.4%. You have the Aussie still pushing up. You even have the euro pulling back now a little bit more. Well, we're going to have to keep an eye on this later on. But dollar Swiss, curiously, outperforming everything else in this Tuesday session. Glen, you and I are going to take a brief break here. Thanks for joining us, of course, for Forex Focus. Up next, trade of the day. Trade of the day coming up here on Tasty Live. Stick around.
Hey, what's up, everybody? Trades of the day here. I'm Jermal Chandler. Thanks for watching Tasty Live. I do have a trade of the day for you. It's actually a fairly simple setup, and it's with CBRS. But before I get to that, I know some people have asked me about portfolio construction. Recently, I've got some emails about that and the way I have things set up and thought process heading into these next couple of days for events here. So this is the portfolio. I think Mike mentions this a lot. Sorting. I think sorting is really important day in and day out. It kind of gives you an idea of where you need to address your attention, right? And this is for those who don't really or struggling at times or trying to figure out how to attack a portfolio. I like to sort by areas where, I'm making money. I do both. I do primarily sort by areas I'm making money, but I'll sort by areas where I'm not making money and figure out what's going well and what's not. And this kind of, I've said this quite often. One of the things you can do early on if you're learning options, take a look at a singular options position and figure out why you're making or losing money. And so when you get to that point, you understand that, then you progress to the next point to be like, okay, I know exactly why I'm losing money or making money in a position. Like case in point, this NDX put butterfly is not, you just saw it was down $1,200. It's really not down that much. This is probably more in the order of maybe what I'm losing, but I know it's a September 4th expiration. I also know that this thing can be a little bit wide. And so sometimes it might not necessarily, the P&L on this type of position might not necessarily make sense, right? GC, obviously I have a long call spread, so I'm losing money because we're pulling back today. And I'm actually a little annoyed at myself. I should have rolled this position yesterday when GC was above 4,700. I missed an opportunity there. I'm long the 46.25, 46.50 call spread. And yeah, this was, I don't know, I feel like trading 4,700 and like $15 or something. I should have taken that opportunity. And this is still in my plan. I mean, I got 26 days. If it crosses that level again, I'm going to not only close this position, but I'm probably going to roll up. I think gold still has another leg or so to go. So that's the idea here. So, in this one, MNRA is actually a short ball position. I got a couple of short calls also with a couple of short puts. We all know the big move it made recently, and now the vol is coming in there. UNH is calendar spreads, so I'm making money on those. I do feel they're kind of still far away. Again, I have the 420, 440, 460. So I don't feel a rush to close these out and make and just yet, especially since it's October SEP. And look, these SEP calls, even though they're upside, this still has some value, $1.32. If this were like 68 cents, I'd close it and move on. This one right here, possibly a close. I could actually, and so this is kind of how you got to go through and mismanage sometimes. I could probably do something like, I could probably close out, because here's what I could do right now. I could pay $4.40 for that upside. And I do think this stock still has some potential room to run here. So one of the ways you can risk manage, since that 460 call in September is essentially worthless, I can close this spread, and I am making a small profit on closing that spread. Let's close it for 260. And then let's reestablish a new one for the 460 strike, because we're not getting the 460 anytime soon, at least I don't think, unless there's some catalyst coming up. And we'll do this now in and with the long nove short October. So that is one way to kind of risk manage. And that's what it does really. Like when you have these sorts, that's one thing you look by P&L, but you can also look by capital requirement. What are my biggest positions? Am I making money on those? And is there something to close out? IBIT is just long stock against some short calls and short put. I'm keeping that. This is up, but this is also a year-long trade. I'm not getting out of that. Same thing with MNQ. WDC is one where maybe I could. This is one where I know I'm sort of playing on borrowed time a little bit. I'm short a strangle in here, and who knows at what point this name starts to get really active again. But right now it's still fairly quiet. And this vol is like a 70 vol, and I'm short the 370 strike and the 630 strike. And when you look at the stock, man, I mean, this thing is down here is 370, down here, up here is 630. So I feel pretty good about that strangle, even though we know these names get a little carried away at times. But yeah, that's kind of been my thought process there. And so then I'm like, okay, what kind of name do I want to add into that mix? And I was looking, I just so happened to see that CBRS, this stock has been down recently. And we all know that this had an IPO earlier this year, $40 billion name as of right now, big in the AI space. And I was looking at what I could do with the stock being down at this level of a 180, which is not too far from its all-time low. The all-time low was, I think, 160, looks like 160.81. But I'm willing to take a position in this area. And so I decided I wanted to do a risk reversal. And just to keep nomenclature similar, I know sometimes we have referred to the idea of selling a put and buying upside call as a super bull. I mean, you could, I would like to, realistically, there always has been a position that's called a risk reversal, right? Where you're short a put and long a call. There's also something that's called simply a reversal, where you're short put, long call, and long short 100 shares of stock against that position. Like that's also something that's called a reversal, but that's more of a interest rate play to some degree. The risk reversal is a similar deal where you're short put, long call. You could sell stock against that if you're kind of nervous about too much of a move to the downside. You wouldn't want to fully hedge it because why does that make sense? But you could hedge to some degree. But again, when you look at deltas, this is a 29 delta. This is a 27 delta. So that's basically 56 deltas, right? Like it's like having a 56 delta position, if you will, right? Whereas if we were long, if we were long this call and short this, that's 100 delta position, right? So that's the difference. It's not quite 100 delta. It's a 56 delta position. Again, just looking at these deltas, 27 and 29, and adding those up, 56 delta. So you basically have a 56 delta situation. And again, your risk is to the downside in this position more than anything. But I decided to go to January to go a little bit further out in this name. There has been some noise, obviously, related to AI, and who knows where AI is going to be. The AI trade is going to be come January. But I did get this for $5.95, which gives me a break even down around the 144 range, right? So again, that's lower than the lows we've seen. It's not to say it can't get to those lows, but that's the play. And then to the upside, I did debate what I wanted to do. I initially looked at doing the 160 and 250 strike because I felt like we could see 250 faster than we could see 300. But I decided that I didn't really want the risk of, again, this was a $4 credit. And this was, again, that gives me a downside of probably about what, 154.90, 155.90, excuse me, 155.80 if you consider doing this $4.20. But I decided I didn't want that much, I would say, closer downside risk. I'd rather go to the 150 strike. I was still able to collect and just go further upside. And I don't think that's, if the stock does eventually maybe get interesting again, or maybe starts to run, maybe we see 300, maybe we don't. But the beauty about this trade is that it doesn't necessarily have to exceed that 300 strike. It just doesn't have to go below 144 and 05, right? Like that's really the big thing, right? It's not like I've ever seen Wedding Crashers, and Chris Vecchio loves to talk about the Wedding Crashers trade. If you ever seen that movie, scene where he's like, I'm not saying you got to marry me. I'm just saying don't marry him. So just don't go below 144.05 before January, I should say, prior to January expiration, at least in a meaningful way. But even if it does go below that, I don't plan on getting out of this trade unless it just really looks ugly. I am willing to sit in this trade. Probably upwards to the point of the stock going down to 125, right? Like at that point, maybe I'm losing some money and I'm like, okay, I'm out of this trade. So that's kind of the idea. I just want to give CBRS some time to see if maybe it can climb out of the hole that it's been in more recently. But again, we see where things start to get really hairy, if you will, is to the downside, right? That's our biggest worry by collecting $5.95 on this trade. So that's kind of the idea here. I want to see if we'll get a bullish run once again, maybe in CBRS, and look to the upside. Obviously, I mean the potential is limitless, if you will, as long as the stock continues to go up. Who knows if it does? But that's kind of my play here with the stock down here and somewhat of a lack of interest and a little bit quiet in the AI trade right now. I figured this would be a good one to play in. So I just showed you earlier, I got WDC. Those stocks have kind of calmed down, but if they do take off, I can easily go back and buy that WDC strangle before things get carried away. That's part of the AI trade. If that were to go up, I would assume this were to go up as well, along with a number of other different AI related trades that I have. But to be quite honest with you, I don't know if I have as many. I guess Caterpillar it's weird to say. I'm long Caterpillar, and that's one is an AI trade. This one has weird markets though. I'm actually should be up more money, but this is also a super bull trade. And again, we like to refer to the super bull trades as selling the put spread to finance buying the call spread. That's a lot easier to understand. But yeah, CBRS is a very bullish trade, and it is a risk reversal, as we like to say, where you're short a put to finance buying that call, went further out in time. Did a similar trade with this in SpaceX too, so I guess I'm kind of attached to that sort of similar area doing these type of trades in this name. But yeah, let's pull up that long risk reversal here in CBRS. Again, an AI-related name. Break even is 144.05, and that's all to the downside. There's no like upside break even you have to worry about. As soon as this thing stays, as long as this thing stays above the 150 put, even at expiration, you collect that credit, which in this case is for $5.95. And your max risk, of course, is this, if the stock goes to zero. It's always something to think about. But that's where CVAR starts to kick in. I would say, if the stock is down at 125 over the next couple of months, well, I'm probably down like $1,000, $2,000, which I can withstand in this book. But that's my biggest risk, right? Is the end of the AI trade. But as long as it stays above 150, and especially if it does that by expiration, which who knows if I still have this on a January expiration, then I get to keep that credit I collected to put this trade on. And again, once you get above 300, then it's all upside, baby. And again, we've seen a high of $386 in the stock, but that was, to be fair, around the time of the IPO when there was a lot of interest in the name. And the last time it was above 300, you have to go back to May. So it has been a while, and I understand the gamble I'm taking on here, but still, I feel like it's a fair one nonetheless. So that's the trade, risk reversal in CBRS, and we'll root for the AI trade in that way. We'll see how it plays out. But that's my trade of the day, and now I'm going to get you over to Mike for his trade of the day.
What's up, everyone? Mike here with another trade idea of the day. We've already done NVIDIA. We did NVIDIA a couple days ago. We got a 220 calendar spread to the upside, playing for earnings here. And NVIDIA is not the only earnings report coming out after the close today. We also have CrowdStrike. And I think CrowdStrike is interesting because it's up today, first of all. Market's down, and this is up. You have a handful of equity names moving to the upside. If we look at the NASDAQ 100 and sort by upside moves, here we have CrowdStrike in the top 10. So interesting implied volatility here, especially with NVIDIA coming out after the close. I think NVIDIA is such a huge market cap company that even if CrowdStrike has good or bad numbers, if NVIDIA moves in the opposite direction, it could create a push or pull effect on the result of a lot of different earnings because NVIDIA is the leader in this space. But CrowdStrike, 13-point, almost 14-point implied volatility for the next 2 days on $188 stock. That's really high. It's not super, super high. Usually we see these things fall between 5 and 10%, as I always say, and we're sitting closer to 10% rather than 5% here with CrowdStrike. So I think this one could be an interesting one to keep our eyes on. But when you look at recent trading ranges, CrowdStrike is near the bottom of the range over the last couple of months here, sitting at 188, just bounced off of 182 today. So seeing a nice intraday reversal, which I think is a strong scenario for a bullish trade. If you're looking for an intraday move to the upside, or we're seeing an intraday move to the upside pre-earnings, maybe that's a precursor for how the market's going to feel about this going forward. But earnings are super volatile. You just never know what's going to happen, which is why I went with a short-term, low-risk call calendar spread. Not once, but twice. Jermal has a similar trade. He's got another strike above mine, but I wanted to just walk through the thought process behind these trades. And this really is a Jermal special, I like to call it. It's a short-term calendar spread where instead of going to September, October, you're going to the 9-day to buy that option, and you're selling the option in the 2-day cycle. These calendar spreads are super cheap, and they're very cost-effective when it comes to the cost basis reduction against the long options that you're buying. So if I load this up, we can go to the curve mode, and we can see these 200 strike call for the 9-day cycle trading for 525. The cost basis reduction is substantial on the 2-day cycle. That's because you have the implied volatility of the 2-day cycle, which far outweighs the time value of the 9-day cycle, right? The 2-day cycle has all the implied volatility. The 9-day cycle still has a ton of implied volatility, but not that much more time value. So that's how these are so cheap. Collecting $300 to sell the 2-day cycle against that 9-day, you're paying $500. So right now you're collecting 50%, more than 50% of the cost basis on the long option that you own with the sale of the short option. There's a couple of cool things about this trade. First of all, if you get a rally to 200 or around 200, if you hold this to Friday, it doesn't matter what happens with implied volatility, what happens with the remaining long call, because that short option goes to zero. So you know for a fact that by Friday, you are keeping that $310 in the 200 strike relative to your 525 in the long call. Now, the risk in this trade is, of course, if there's a big vol crush that we can't project and a bigger vol crush in the 9-day cycle that we might be expecting, which would result in a lower profit potential. But still, if we get an upside move here, we're going to be looking good. Same thing with the 210 call, a little bit further out of the money, but this is where it gets more sensitive, and you really want to be careful with your cost basis reduction, right? Because if I get a move in CrowdStrike from 188 to 198, or even if it's like 188 to 192 or 193, the 200 call 9 days out is still going to likely gain value, or at least hold on to value, in which case it would be a profitable trade because you have your short option going to zero, your long option just maintains value, and it results in a profitable trade. The problem with the further out of the money calls, and that's why they're not as expensive, is because if you get an upside move from 188 to 192, the 210 call 9 days out is still going to be far away from the current or the new stock price if we get a little 5-point rally tomorrow, and that can create a loss in the 9-day option. So this is why I'm really cognizant of how much premium I'm collecting in the 2-day cycle against the cost of the long option, because you don't want to be in a scenario where you're buying the 9-day far out of the money for $280 and you're only collecting like 50 cents for the short option. I can tell you right now that's going to be a bad scenario if you get a small rally and you see losses on the 9-day and your short option doesn't account for those losses on the 9-day. So all that to say, I like to collect 50% of the option. So if I'm paying $500 for a long option in the 9-day cycle, I want to make sure I'm collecting at least $250 for the short option. We're capturing that here. The 210 call, if I'm paying $280, I want to collect around $1.40. We're basically there. 10 cents, whatever. 10 cents short doesn't really bother me all that much. But when we look at this from a curve analysis standpoint, we can further emphasize this with the double calendar spread. And real quick, let's isolate the 210 so that I can show you, if we look at the theoretical risk graph, let's zoom out a little bit here, and let's go to, if we get the, what do I have here? What am I doing wrong? The 210 and the 210. If we evaluate by Friday, and then we crush implied volatility a little bit, and if we bring in this trade here too, the 200 strike, if we crush implied volatility, and this is really where your profitability comes into play. If we zoom in, we can see if I keep volatility flat, my max profit in the middle here, if I evaluate on Friday, which assumes we keep all this premium here, my middling max profit here is $1,000 basically, $900 and change. If we pass through this 200-210 range on Friday, my long options are going to be plenty healthy in terms of extrinsic value that I gain, especially on the 210 call. The 200 will still gain value, of course, as well, but it's really an extrinsic value play, right? Even though I have two call calendar spreads here, neither of them can take on intrinsic value in my favor because there's a short option against it on the same strike. So double calendar, just creating a wider range of profitability to the upside. But we are going to see a volatility crush here. And if we look at the chart, we can sort of estimate where implied volatility has been on the downside at the lowest point in CrowdStrike. So you can see here during this choppy 7-day session where it really didn't move at all, we got as low as 45%. Throughout the rest of the year, looks like the low print in December of 2025 was 32%. And this was, again, just a choppy area, pretty low implied volatility there. But I like to use the near-term stuff. So like this year, we've seen a low print of 46%, 45%. The current implied volatility for these longer-term cycles is the mid-50s. So this tells me that if I wanted to be really conservative with a estimation of where implied volatility could go, I would crush this 56%, 57% in these longer-term cycles down to 47%. Just bring it to the annual low, and that is a conservative view of where implied volatility could go after the earnings announcement here. If you wanted to be more aggressive in terms of like where your max profit could be, and take a little more risk in terms of assuming you're not going to get that big of a vol crush, maybe you go to 50%. You give yourself another 5 percentage points. But I like to go the more conservative route because I'd rather plan for a worse scenario for me, which is a bigger vol crush, and still see nice profitability on a trade. Because I'd rather be surprised by a lack of vol crush in a trade like this versus not accounting for a vol crush and realizing a loss or not seeing as much profitability and being disappointed. So it's just one of those scenarios. What's the phrase? Under promise and over deliver. That's what I'm doing here with implied volatility analysis. I'm simply under analyzing my max profit potential and hoping for a lesser vol crush than I'm planning for. So 47%, again, if you go to the chart, you can throw on implied volatility. I think this is something I'll have on the charts moving forward. Go to indicators, type in implied volatility, and add it to your chart so you can visually see where implied volatility has been, and it gives you a better baseline of calculation. So 46%, let's crush this down, and let's go back to the curve analysis mode so we can see just how impactful this will be. So without changing implied volatility at all, evaluating on Friday, assuming I keep all the premium in the short options, $900, almost $1,000 max profit in the middle here. As I start to crush implied volatility, you see that max profit go way down. My break evens go more narrow because now these options are not retaining as much value, which makes it harder for me to sell out of this package for $3 and change, which is what I bought this for. But if we get a crush down to 47%, let's bring it down to 46.92. That's a 34% volatility crush by Friday. We're still looking good. So we would need a rally here. If we got a substantial vol crush here down to 46% in the 9-day cycle, we would need a rally up to like 195, which is within the earnings implied move. If we look back at the implied move for CrowdStrike, we're looking at in the 2-day cycle, almost $14 implied range. So 192 is well within that. It's a 5-point rally, well within the implied range. So looking at that, I think we're looking good. The middle range here, as you can see, our max profit potential goes way down to like $250. But again, $250 max profit on a $3 debit is a great return on capital. It's a great return on risk. And all you need is just a directional move to the upside that's inside or at the expected move. If we get a move to the expected move, we're going to be sitting around this 210 call, and we'll still have around $200 in max profit potential. So planning for the worst vol crush that we've seen in CrowdStrike. In other words, planning for a vol crush to bring us back to implied volatility lows that we've seen in CrowdStrike all year. We're still looking at a sizable, almost 100% return on debit paid, 100% return on risk. But I would imagine that because this 9-day cycle is already elevated, it's at 80%, the 2 days at 130%, the 16 days at 70%, and then it trails off lower, as you can see here, 68, 64, 62, 59, 57, and then we kind of flatline between 55 and 57 for all of these options expirations going all the way 600 days out. So I think what will more likely happen is over the next couple of days, we will see a vol crush in the 9-day cycle. But I don't think we're just going to immediately go down to 46%, which is the low of the year. I think we probably stay around 50%, maybe between 50 and 55%. So let's look at a 50% print. So that would be a 30% vol crush in the next 2 days in the 9-day cycle. Now we have a lot more max profit in the middle here. We're looking at a $350 max profit between 200 and 210, which is more than 100% on debit paid. We're also looking at a better break even to the downside. And that's always going to be the case. If you can retain extrinsic value, you're going to widen out those break evens and you're going to have a higher max profit, right? Because this volatility crush is really where your profitability comes from if you assume that you hold this to Friday and you keep all this premium in the 2-day cycle. So anywhere between a 30% vol crush and a 25% vol crush. 25% vol crush would bring us to 55%. And now we're basically at a scratch right at the money if there's a non-move. And if we get a move through 200, 210, we're looking at a $450 max profit. So clearly, implied volatility is super sensitive, and these trades are super sensitive to implied volatility crushes. Luckily, CrowdStrike has had big moves. They have had higher implied volatility most of the year. So I'm planning for a volatility crush of around 25 to 35% on the most conservative level in the 9-day cycle. And that's how you arrive at this Theo max profit zone here. So looking at a double calendar spread here, long the 200 strike, long the 210 strike in the 9-day cycle, and then short those same options, the 200 and the 210 strike in the 2-day, collecting about 50% of the debit paid on those long options. That's a good setup for calendar spreads because it allows you to absorb a bigger volatility crush, and it allows you to absorb a little bit of a move against you, and you can still be at a scratch or a smaller loss. So just making sure your cost basis reduction is super high on these types of trades. And naturally, you're going to have that happen if you're long a 9-day and short a 2-day for an earnings announcement. But I got filled at $3.10, so low monetary risk here. And really, if we get a sell-off in CrowdStrike, I'll just buy back those 200 and 210 short calls, and I will get over to the long option, just leave them, right? Because if I have a sell-off in CrowdStrike of 10 points and I can just close the 200 and 210 short call over the next couple of days or even into next week, if we get a reversal of that move, it allows me to close this trade for a profit or a scratch. So likely I will just leave those options and let them see what happens next week if we get a sell-off in CrowdStrike. So there's not much defense with this type of trade, but I'm okay with that because the debit cost and the debit risk is really low relative to other trades that I've done. So that's the trade. Hopefully you enjoy it, but let me know what you think in the comments, and we'll see what happens with CrowdStrike. One last caveat, I do have an NDX butterfly to the downside that expires on Friday, so that's another thing in my mind is like I have this butterfly on, so if CrowdStrike sells off, if NVIDIA sells off, I'll be okay in terms of risk because that butterfly will continue to appreciate in value. So that's another reason why I just wanted to keep these trades really small, keep them defined risk, so that if I get a rally, I can close these. And if we get a sell-off, I can close that NDX butterfly for the hedge. But that's it for me. We got another trade idea coming your way right now with Gus.
Howdy, everybody. What's going on? Great trade idea coming in from Mike there. I have one of my own today, and let me tell you, we're going to do something very similar to what we did yesterday. So you guys may recall, I'm going to reference yesterday's trade of the day a lot here because I am expressing the exactly identical sentiment, but we're doing this same exercise on the other side of a parabolic move. Yesterday we were playing something going from very low, looking for the dead cat bounce. Today we're going to be playing something very high, looking for a little bit of a decline in buying volume, that being Abercrombie & Fitch, the star of the entire market today, trading up as high as 45% intraday today. Absolutely smashed earnings yesterday. I have the core numbers here. They reported analyst consensus for EPS was between $1.95 and $1.99, and they reported $4.17, so over 100% beat on EPS. Revenue came in at $1.27 billion on estimates of $1.24 to $1.25, so pretty much in line there, a slight beat. The biggest thing, potentially biggest thing outside of the EPS, tariff refunds were what drove the crazy EPS beat. But the biggest operational thing is that their operating margin was at 20%, which was previously forecasted at 10% by the company themselves, not outside analysts. So much like Dick's yesterday, this move is substantiated to an extent. I understand why Abercrombie & Fitch is flying today. However, I think it's gotten a little bit carried away, shall we say. So we can jump straight into the Tasty platform here, and we'll take a look at this trade. What I have done here, and I will post this in the follow feed as soon as I get off. I'm trying to be better about posting them before I come in here, you guys. It slips my mind. I go to get all my talking points together, and I just forget. Anyway, I'm going for a short call vertical here, a bearish call spread, if you will. Selling the 145 call and buying the 150 call at 2 DTE. You guys, 2 DTE is what we're talking about here, and these premiums are so elevated for 2 DTE. Now, granted, this is pretty much right at the money. I understand the reason for the elevation in premiums there, but the primary reason is this call side volume that we're getting due to this parabolic move today. For those who haven't seen this chart yet, here it is. This is a daily candle. You can see we've retraced a fair bit to get a little bit more granular here. Hourly candles here. You can see all the way up to a high of, what is this, 150, yeah, I mean, over 153. Back trading down at 144 now. Now, when we were on at the CBOE, and just an hour ago, I said, I should get short Abercrombie and Fitch right now. This is the exact same thing as the Dick's trade yesterday, and I didn't. And I let $10 on the underlying slip away from me, unfortunately. However, that does mean that everybody can get into this trade at pretty close to the same price that I did. So I got filled on this at $2 myself, currently trading at $1.80 for 305 of buying power. I got $2 of credit for 300 of buying power. So still pretty close to the same 1.5 to 1 risk profile that I was looking at the time that I put on this trade. And let me tell you, as I say it, these premiums have been ripping all over the place today. And in times of high volatility like this, you get big swings in the premiums that change things very rapidly. You can see as I say that sentence, we jump up to 195, now back to 193 at the mid price, back down to 165. They're moving everywhere. So if you stare at this position for 2 minutes, you can probably get very close to the same entry that I got as things move around here. Now, and Abercrombie does continue to slide, so perhaps strike while the iron's hot. I'm not sure. Obviously, it's your money. Do what you want with it. This is identical situation to the Dick's trade yesterday. Now let's jump over there. As I said, and as I've said a number of times here, all I'm doing in this explanation I'm about to give is explaining the psychology of a dead cat bounce. But what happens is, binary event happens. Bad earnings report. Dick's goes crashing down into the ground. Everybody's freaking out. Everybody sells pre-market. People who are holding sell all day. We drive things lower and lower and lower. Then what winds up happening is at some point, we must run out of sellers. Everybody who wants to panic sell gets out, and there are only people left who are going to hold and stay through this hurricane. And there's going to be a scattering of people who want to buy this dip, but there are only so many sellers. So then what did I say yesterday? I said, I'd be shocked if Dick's takes another move down tomorrow, which now being today, obviously. Now, we opened lower today. I will say, I almost ate my words here, but very quickly, we see that sentiment begin to play out exactly as I described. Just a little bit of buying pressure coming in and propping us up off that 120 level where we sold the put at. And this trade is pretty much break even for me right now. However, you would have gotten an entry $100 to $150 better than me if you entered while I was talking about this on air yesterday. So I'm sure there's lots of people performing better than me right here. Abercrombie and Fitch today is the exact same situation, but it's on the complete other side of the coin. Errol and I call this the dolphin dive mechanic, which is the opposite of a dead cat bounce. But mechanically, it's exactly the same. Abercrombie has a binary event. Shares go flying. They move up pre-market. Everyone's excited. Buy. And we drive it all the way up. Let's go to hourly candle so I can do this even better. Buy. We drive it all the way up to these prices. And at some point, nobody's willing to buy at the asking price anymore. And therefore, there are only people who want to hold and think that there are higher highs in store, or who want to take their profits and sell. It's the nature of the market. There can only be so many buyers who want to buy for so long. It's why we say there's no such thing as infinite growth. So I'm playing the exact opposite trade here and expecting Abercrombie to come back down into the end of the week 2 days from now. I'm able to get this one at 2 DTE. I unfortunately had to put the Dick's trade on at 28 DTE because it was the closest expiration available. Fortunately now, I'm able to get a 2 DTE on Abercrombie, and we can attack this a little bit more aggressively. Obviously, there's going to be crazy premiums on the call side that I'm looking to sell in an elevated environment like this. Call side premiums go crazy. Gamma, you guys know how it works. So I'm choosing to get involved with this on that exact same sentiment. There just are only so many buyers who are willing to buy at so many levels. It's basic market mechanics. And at some point, sellers or holders, I should say, become obligated to sell. The move becomes too crazy for them to continue to justify holding. They feel that they can rebuy later. They want to just take their profits and roll them into something else, whatever it may be. And then we're seeing that actually happen intraday today. Dick's yesterday ran down all day. Never 1 ounce of buying pressure the whole time, to the extent that I was getting a little bit scared about my trade. And I even said a bunch of times on Trade of the Day yesterday, wait until 2:59 p.m. to buy this. Buy this 1 minute before the market closed, because it does look like it's going to continue to slide the rest of the day. I did make a mistake in trying to apply that same logic to Abercrombie today. As we can see, the selling pressure actually came through before the end of the day. I was going to wait as long as I could and wound up missing the boat just a little bit. But I do still think there's more downside left in this to me. For me, and this is totally arbitrary stuff that I'm about to say, but the way that I like to think about things is on these post-earnings trades, which are, I mean, I would say one of my specialties, certainly my favorite environment to trade, is it's possible for the pre-market move to be wrong, for sure. It's possible there's retail. A lot of retail investors don't have access to pre-market trading on individual names, this, that, the third. There's a lot of reasons that the pre-market move could be wrong. I'm by no means saying that companies should just run sideways after that pre-market move. But who drives that pre-market move? It's institutions. It's big, smart money that drives that pre-market move. And they're only willing to buy to a certain point. And it's usually where we open. So then you see a continuation of that move into the rest of the day. That's a lot of retail streaming in. And obviously there's going to be some institutional players in the middle of the day. They have incredibly sophisticated momentum and flow trackers to keep up with these things. And they're not afraid to buy off of this up move if their numbers line up with a buy. All this is to say, my general rule of thumb is on a move like this, or a move that we saw in Dick's yesterday, if it starts retracing intraday, it's still valid until about the middle of the daily range. That's usually my line of logic. And once it gets past the middle of the daily range, which today, that's to say, let's go back to daily candles for a better quantifier here. 130 to 155. Let's call the daily range today, just for very simple numbers. 25-point intraday range, and that excludes the whatever 30 points that we got before the open. Tossing that out. 25-point intraday move. So I'd be willing to short this at 12 up to $12.50 below the high of the day. Once it's clear that the selling pressure is there, I'm willing to short until that point, which in this case would be 142.50. So at 145, when I put this on, we're still in that valid range. I still think that there is room to the downside, and I'm willing to do that. If I had missed the boat all the way to where this got to 142.50 or lower, I wouldn't be looking to race into that because obviously, as I said, these numbers are incredible. This move isn't for no reason. It's not something that I think is completely unsubstantiated, and those do happen from time to time, and believe me, I hit them hard. But I do think this move is substantiated. These numbers are incredible. Their guidance was incredible. They even said their brand performance is much better against competitors. Everything. They raised everything. They raised 27 guidance. Like, I get it. I understand why we're getting this move. But when a company, I understand the 100% EPS beat, but they made it very clear that that's a one-time situation because they got a giant tariff refund right in the middle to pad their balance sheet a whole bunch. And they raised their, they raised their net income / EPS expectations for the full year from $13.10 to $13.60 per share. So a 50-cent raise on what was already a $13 projection. Quick math, it's like 4%. Okay, so they're raising their guidance by 4%. They beat earnings by 100%, primarily driven by a one-time payment that they have coming in. And they also have, they raised their revenue, what's this? Something like 8% for the year. So does all of that justify a 40% move to the upside? I don't believe that it does. And I think that, and that's the thing, and especially with being able to get the expiration so close, I don't think that all it takes is just a few other people, particularly large institutional players, having these same thoughts that I'm having and doing just a little bit of selling to drive this thing down to the level that I need. And I just need this to stay pinned underneath 145 for the next 2 days. Now, as I said with Dick's, when this happens, and we are seeing selling pressure come through right now, so this is a little bit less valid than what I was saying with Dick's yesterday, but when this happens, it's very, very, very hard for the company to log a second consecutive green day, particularly when you look at this candle, where in a pure technical perspective, this is a big old wick. This is clearly showing that there is some strong selling resistance up there at those levels. What reason would I have to believe that we reach those levels again tomorrow or Friday? I don't know that I can come up with one. So with the selling pressure coming through, with it being clear that people are starting to have at least inklings of these same thoughts, with plenty of long-term Abercrombie holders who are probably happy to take their 40% bonus today and go roll that money into other things. Where do the buyers come from? And why didn't they buy today? That's the other thing. The people who want to buy, who want to get long at the 145 level, did it this morning on the way up and have taken their profits or are still holding and perhaps would buy some more at slightly lower levels. But who's racing in to buy this tomorrow morning? I think all the transacting happens today, and I think that all there is to be done tomorrow is a little bit of selling, and it's just the nature of things. I equated this as well to, if you want the most extreme example you can get, this Moderna move. Moderna came up with a vaccine for skin cancer, people. What better headline could a pharma company possibly have? They take this giant up move, and granted, this was 300% up move. This is a much more exaggerated thing. But as you can see, this is a giant strong candle. There was no sign the buying pressure was even done after this first day, but it's just so hard to hold on to these massive gains when these big moves happen. The pullbacks are natural. You run out of buyers, and all there is left is people who will say, let it run for the day today, see what happens, see how high it gets, take their profits tomorrow morning. You also have no shortage of people who, in the case of this Moderna move, and I can absolutely, but you know what, I will do this exercise with the company that I'm talking about. There's also no shortage of people who saw these great earnings numbers, flew in here to buy this thing at the open today, got long at 130, and are still holding the bag or began selling up here at the top in the 150s, and that's why we're seeing this drawdown now. So it just, at some point, you run out of buyers. The music must stop. And again, and like I said with Dick's, I don't expect a full gap fill here. These numbers are totally valid. I don't have any crazy long-term thesis about Abercrombie. I do think that a dramatic repositioning was required when they post numbers of this degree. I think it's very, very likely we may even stay range bound inside this 130 to 155 range that Abercrombie has defined for us here, much like what we're seeing with Moderna, where this range that was established on the first day of the parabolic move has continued to be the range where the stock has stayed the entire time. But it's really, really hard to log 2 back-to-back green days after a day of this magnitude. So there's the full trade on screen for you right now. I have a short call spread. I have sold the 145, bought the 150 call for this Friday, 2 days from now, August 28th. It was, 225 was the mid when I was looking to get filled. I flew into a fit of rage and I took the fill at $2. Inadvisable. However, sometimes you can do the work wrong and still get the right answer. We're currently trading at a mid price of 148. I will say I gave additional levels yesterday. You could, if you want to, push this down to the 144, 145. That's pretty much a 1-to-1 risk profile on that. If you want to dip your toes into that, I would not go much lower than 144. And frankly, I don't know if I would go much lower than 145. If you're not in love with these levels that are being presented right now, you may have missed the boat. What I would do though, what I think might still be valid, is right now you can get the 150, 155 for $1 of credit, $3.90 of buying power. That's a little bit rich, but that 150 level gives you a ton of cushion. So there are answers here. It's workable, and at some point, you just run out of buyers. We can't have infinite growth. It's very challenging. And with the Dick's trade panning out today, I'm more than content to jump in on some short Abercrombie here. So that's going to do it for my trade of the day for today. We have Errol waiting in the wings to go off next. I'm not sure what he's trading, but I'm sure it's fantastic. Errol, take it away.
What's going on, guys? Welcome back to Trade of the Day. I know it's been a few weeks since we've been doing Trade of the Day. It's good to see you guys. Good to be here with you. And the portfolio has started to get a little bit more beefed up. We got a lot more management. We have a lot more rolls. We have a lot more entries, a lot more exits. So let's see what we're going to be looking at today. With that being said, we can jump right into the Tasty platform. But let us know what you guys are looking at. What are you guys keen on right now? I know we've seen some conversations around Moderna. How are you guys feeling about Moderna? Nice boy, Jared, Ryan. How are you guys feeling about Moderna right now? I feel like it's a really difficult range to trade. But if I was to do anything in this, I mean, I was looking at the options chain, right? And I was like, well, you could purchase some options, but the IV rank is sitting at 45 right now. The implied volatility has definitely increased since we got that jump to the upside. So if I were to do anything in here, I'd feel more comfortable getting short an at the money call spread, something that I was kind of going back and forth with myself on. Maybe we circle back around to it. Maybe I convince myself to do something in there too. But With that being said, there's a few positions we have on the portfolio. We have a little bit of short delta on an Apple. Just a quick recap what we have on. We've been out of the money call spread on an Apple. 23 days left till expiration, $5 wide. We collected $1.98 of credit in that one. Just your very average $5 wide vertical spread, nothing too crazy. And then App Lovin', this one was $10 wide. It's a little bit of a wider market. This one has seen one of the best recoveries, I think, in the portfolio. I think we were down a couple hundred on this, maybe 250. And I mean, we're sitting at around near break even. And coming into the day, we were sitting break even. I think we were down maybe $1. So that's coming back around. There is 23 days left to expiration. We're going to try and manage this one by this Friday, because that's going to be the 21 days where we got to readjust more positions on in the portfolio. Dick's Sporting Goods from yesterday, right? We had sold an out of the money put spread, collecting a little bit of collecting 218 worth of credit there. It's doing pretty well so far, right? Had that massive gap down post earnings. Seen a little bit of a recovery off the lows. Time is on our side on that one, so we'll be patient. And then the rock star of the portfolio today has been gold. So even when I was talking to other traders today, everybody's talking about how they're short gold, they're short silver right now, they're short all these products. And I'm like, what's been going on in gold today? So it's kind of see that gold is seeing a pop on the backside of that euphoric move that it went on earlier this year. So the big question is going to be, is this uptrend going to sustain in gold right now? Because we're in a dip right now. Do we want to sell into the lows, right? Do we expect further prices to the downside? I'm not sure. But I do know, based off of the price action that gold has seen over the last 24 hours, we're back green on gold, guys. Right now, we're back flat on gold. And yesterday was a pretty difficult day to be holding some long delta in there. So we're going to continue to be patient. My sentiment on gold is going to change if we continue to make higher highs from this point, and then that's when we're going to look to manage or manually manage this trade a little bit more, because it is just a put that we purchased with 8 days left till expiration. And I want to manage this one before the end of the week. We'll see how the gold market is looking Thursday and Friday. But I'd love to be out of this one, at least by Friday, just because we purchased this one. I don't want to hold it till expiration and have to deal with the rapid theta decay and whatnot with those trades. So gold, we have IBIT. IBIT's working out a little bit better today. We're continuing to see a pullback in IBIT. This rally is very interesting, right? Like, is this the new wave to institutional adoption in this next bull cycle that we're going to see? And I think that's what makes this rally over the last 7 days a little bit more interesting, right? Like, is there more institutional adoption, which is causing the volatility within these prices? Because if not, right, if the market doesn't continue to make higher highs, I think if we continue to make a new low somehow back below 33, and just from a broader market perspective on the entire crypto market, that's going to be one of the largest bull traps I think we've seen in crypto since crypto has been crypto. So we're going to keep an eye on it. But with that being said, I sold a strangle. I rolled the puts up a little bit more. We're getting a pullback from the upside, which is nice. We're going to give that a little bit more time in the portfolio. We did also purchase the put at the 44 strike, 23 days left to expiration. We're down just a couple bucks on that one on the day. That's going to be the crypto market. QQQ is another one. We have an iron condor in here. We're doing pretty well so far. We don't always put on such neutral positions in an indice like this, but with us consolidating around those all-time highs from these summer months, it's made it a little bit more attractive, right? Because the big question still is QQQ going to catch up to SPY, or is SPY going to catch up to QQQ? And regardless of either of those scenarios playing out, it seemed like this was a specific range that the market was really favoring. And at the bottom of this range is that area where the Leopold fund was liquidated. So it's going to be interesting, again, just to see if the market wants to chop around a little bit more before it decides on taking another all-time high, or maybe we take out that previous swing low that we had logged just a few weeks ago. That's going to be the entire idea on QQQ. Rivian, we're still looking to get filled, right? I want to take the 375. We can come down to 360. Last time the mid price was sitting at 370, so we could have given up 5 cents to at least collect that, but that's how the cookie has crumbled so far. I want to get into this trade, so we'll probably adjust that if we need to before the market closes. And then SMH, it got a little bit of short delta on an SMH. Semiconductor ETF, it's pretty much been the same story for a lot of these underlyings for the rest of this week so far. But I want to look at the trade of the day. The trade of the day, the trade idea of the day. I was actually looking at SOV, right? I was looking at silver. I was looking at gold. These markets are very volatile right now. And in my complete honest opinion, I don't care too much about, like, yes, fundamentals are important, but when it comes down to placing certain trades, like, the fundamentals will influence I guess, the context in which I'm viewing a specific market through. But at the end of the day, all I really care about is the volatility that underlying is experiencing right now. And I think volatility really points to the opportunity, because the market's going to do whatever the market wants to do. But if we don't have a market that's not moving, there's not too much we can do in there. So that's kind of how I've been viewing these metal products at the same time. It's not that I think these metals should go to zero while I'm getting some short delta on them. And it's not that I don't think they can rally back to its all-time highs. I just like the volatility. I love the ranges that we're experiencing right now. I love that we're not consolidating, or we're a little more directional right now. So I think that is the attractive piece to gold and to silver right now from what I'm personally seeing. Maybe this uptrend continues, but I want to add a little bit more short delta, but I want to do it a little differently on SLV. I was looking at SLV. I was looking at the 23 days left to expiration, and I was eyeing a skewed strangle to the downside. It is a cheaper underlying. We're able to get a decent amount of credit for a trade like this without using up too much buying power. So if we look at selling maybe the 64, right, maybe selling the 57 expected move, 57 strike, right, that's going to give us a negative delta of about 17. So we're just kind of skewed to the downside there. $985 worth of buying power. So it's not too aggressive. It's not too crazy, even considering a smaller portfolio. P50 sitting at 61%. I'm sorry, POP sitting at 61%, P50 sitting at 70, 73%, 72%, kind of fluctuating in that range. So this is what I've been eyeing right now, guys. And again, this isn't that I want to see, right, silver or gold or any of those metal markets go back to zero, right? I mean, we're selling the 57 strike. We just want to see a little bit of a pullback, maybe a little bit of a slow, maybe a little bit of a pause in the momentum that we've been seeing to the upside. So that's what we're going to go with today. Skewed strangle to the downside. We'll see if we can get filled on this one. But I found this one pretty attractive. We'll see if we can get a decent amount. We'll see if we can get a decent amount for it. We'll go down. We'll go down to 260. It looks like the mid is at 261. There we go. Getting filled 260. So trade of the day, a little bit more short delta on in the metals. And I mean, this has been probably one of the most hyped up markets, one of the most underrated hyped up markets of the last, I think, week or two. I mean, gold, right? Consolidating at its lows near 4,000. And I mean, we were consolidating for a good 2 to 3 weeks straight. Almost a month, gold was sitting at its lows, consolidating, cooling off from that euphoric rally earlier that year. And now we're getting a pop on the backside. So my sentiment is going to be a little bit more downside. I'm of the sentiment that I don't think these metals will make another all-time high, right? They could. It doesn't really matter what I think. It doesn't matter what I say. But I don't really see gold and silver really topping the highs that they had put in on the euphoric rally earlier this year, because that rally we had seen this year wasn't even off of fundamentals. I mean, in what healthy market is gold going to go from 3,500 all the way to a high of 5,700? In the span of just a couple months. Maybe the metals can really turn it on like that, and the more experience we get, we'll be able to. We'll be able to have a better grasp on these markets, but you can kind of just see based off the volume, how much volume we're accumulating in the market since this initial push to the upside. So we're going to keep an eye on it. It's extremely volatile. These markets are in play, so I'm excited for it, but it's going to take a lot of patience. So that's what we got going on in the portfolio. I want to just quickly look at where volatility is sitting at right now. In terms of scalping, today's been a pretty boring day, I will say. Volatility right now sitting at 1547. And then earlier today, I mean, we went red to green on the day and then back to red. We went red to green to red. So it really shows you the indecisiveness that the market is experiencing right now. I know we have NVIDIA earnings after the bell today. I don't think I'm going to be doing anything in NVIDIA earnings. I'm just going to watch to see how the market responds to them. But not much going on. And I mean, you can just tell by looking at the daily candle. All right. If I zoom in a little bit more here, you can just see how we're trading inside the range that we produced yesterday, right? With the low being 29,035, the high being 29,423. We haven't been able to breach either one of those levels. So in terms of seeing any type of follow through, I think we're going to need to see a little bit more range expansion from a price perspective in the market to gain a little bit more clarity for some of the scalps that we want to take, because I mean, this is a very difficult market to scalp, and especially when it starts to get pinned like this. I could imagine we're in a positive gamma environment. I would imagine, because it does feel like it does feel like dealers are selling into the rips, and it does feel like they're buying into the dips, which could cause that sort of pinning effect. But that's what the price action has felt like from a scalper's perspective. And not to mention, Monday's price action, we had some pretty decent volatility. But even from Monday's price action, right? If we go to the high from Monday, we're trading at around, 29,492. And the low from Monday is trading at around 28,955. So that range on a day-to-day basis has just been decreasing very slowly. So are we going to get the expansion to the upside? Are we going to get the expansion to the downside? I really don't know. I'm not sure. But these are very specific levels that I would pay attention to gain a little bit more clarity for the next move to come. But I'm not going to be doing anything as we sit in this range and as that range continues to decrease. Maybe it's the NVIDIA earnings, right? I know it's easy to be like, oh, the market's waiting for, what NVIDIA is going to do. It's like, sure. It's like sometimes we get moves before big earnings. Sometimes we don't. But we'll see what's on the other end of this market. But we can clearly see that decreasing range we've been experiencing in NASDAQ right now. And I mean, SPY's still looking a lot better. I know SPY right now is still trading near its all-time highs. We pulled back a little bit, but this could be a pause for more continued growth in the S&P 500. Maybe so. And I mean, if we bust through those highs on SPY, we most likely take out those highs on NASDAQ if we don't get the same level of divergence that we saw, what was about 4 to 6 weeks ago now. I mean, even now, the divergence still exists, right? I mean, we're just pulling back off the highs on SPY, and QQQ is not as close to its highs like it is on the S&P 500. So we're going to keep an eye on it. But with that being said, let's quickly look at our portfolio before we have to hop here. And we're just looking at the portfolio with some of the most extended names in there. So we have things like SanDisk, Dell, Micron, right? These names are extremely volatile. And this is one of the reasons why I got out of these names fairly quickly, right? Like, we're pretty bearish on these names. We put on a little bit more short delta on in SanDisk. I think near this high. I think we might have gotten some short delta on the 17th of August. But you can just see, right? We're up 26 points on the day. We're up almost 2%. And I mean, that's another day in the office for SanDisk in terms of the range that it typically puts in. But I mean, these type of names, whenever you get that window of opportunity to manage your risk, to take profit, to just manage the position, I think you got to take it. Just because, again, these markets can flip on its head in the snap of a finger. And with how volatile these markets are, right? 26 points on the day is no joke. And SanDisk is used to those type of moves. Just quickly checking out Micron. Micron looking like a similar story. It doesn't look as volatile, but don't let that deceive you. These markets still swing extremely aggressively. I haven't done I haven't done much option buying on the call side or put side in these names. I mean, look how expensive these are, right? Like, I mean, if you wanted to buy that at the money call, that's gonna run you $6,000. We're in 23 days left to expiration. $6,000 to buy the at the money call. And I mean, if you want to look at the expected move at the money call out of the money there, that's going to still run you $2,345. So I mean, this is an extremely expensive underlying to trade. I mean, even if you're going to do a zebra in one of these names, it gets pretty pricey. That buying power effect will be pretty noticeable. But with that being said, guys, just a quick recap. We have some short delta on an Apple, a little bit of long delta on an AppLovin. Dick's Sporting Goods, a little bit of long delta in there. We'll see what we get after that massive gap down yesterday. Gold, still short in gold. Bought a put, expires in 8 days. IBIT, trying to do a lot of management here. I'm hoping we get a little bit of a pullback. It feels like you're kind of riding a bull there. It's a very difficult one to tame because we really don't know what's going to happen with this crypto market. Maybe the Clarity Act goes through. Maybe we get higher highs. Maybe we don't. Maybe we see lower lows. Maybe we just pull back and consolidate. We'll just have to manage the position as we go. And then QQQ, Iron Condor in there, Rivian, still trying to get filled. We got to go right now, but let's see if we can adjust this real quick to see if we can get filled. We got to go. Let's see 65 if we get filled. And we're going to leave it in there. There we go. Filled Rivian 366. We'll take it. And then lastly, trade of the day was going to be in silver today. We put on a skewed strangle to the downside, looking for a little bit of a pullback, maybe a little bit of consolidation, and take advantage of the lack of movement there. Maybe Theta could be our friend for this one. But with that being said, guys, I appreciate you guys taking the time to hang out for a little bit. Trade of the day is going to be in silver. And I know we have Chris on the other line getting ready for trade of the day. So let's see what Chris has for us. But with that being said, guys, thanks for taking the time. Be sure to stay tuned for more amazing content coming on next. And we'll catch you guys here shortly. Peace.
We're back. You're watching Tasty Live. Trade of the day here. I've got 4 of them for you based on some, activity that we've seen in the options space, but also I want to get away from NVIDIA a little bit. I do have an NVIDIA trade on here. So before we get any further than that, and this isn't even one of the 4, let's talk about what we're doing for today's earnings report. I do have a legacy position on, which is not doing so hot right now, which is a Super Bowl trade, the double bowl, short the 205, 210 put spread, long the 240, 245 call spread. This thing is probably going to go out worthless unless NVIDIA gives us a little bit of a hope and a dream. But I'm not really looking for NVIDIA to run to the upside here. Maybe I'm being a little bit too public, as some might say, about my view. But he just hasn't really done well or capitalized on earnings reports recently. And so I'm looking at it in 9 days because I already have something doing it too. And quite frankly, at 9 days to expiration, I'm thinking about the historic reaction. Past 6 earnings reports, as you probably heard me say on air at some point over the past 2 days, we've seen NVIDIA beat on both revs and EPS, and they've been fantastic numbers. 5 of those 6 quarters, we've seen a 1-day reaction to the downside in the negative. And then a week out, it's about 4.8% lower. So with a 5.4% expected move, could I look for something that's like 6-7% out of the money at the time the trade was put on in order to say maybe NVIDIA is going to bounce around? It's going to have a disappointing 1-day move, but by the time a week comes around the corner, things will have settled out a little bit. Sure. Average move past 6 quarters is right around 8%. Past 12 quarters is around 7.4%. So this is how I'm playing it. I'm not expecting NVIDIA to be super directional, although if it does go directional the next day or two, it's going to help out that Super Bowl more than it will hurt this short iron condor. Maybe the short call spread side at 225, 230 gets pressured, but maybe that's a good problem for me to have. Let's get into the trades, though, of today. I want to start with something that we flagged on our signal versus noise video for today. First and foremost, because it's a little bit of an unusual trade. I'm going to point out at the 23 days to expiration going up to the 360 calls. There was about 670, a little short of 700,000 of calls that were purchased in today's session. 23 days to expiration here. Now, if we take a look at Intuit's chart today, it did open up 12% lower, but now it's only about 3.66% lower on today's session. Why is that the case? Their guidance missed badly for Q1 as well as fiscal year 2027. But the difference is that there's a one-off charge for their EPS related to a different form of accounting that they're using for how they take stock of, stock-based compensation moving forward. So an accounting reason, a change in definition of how the numbers are looking, not necessarily a change in, being a going concern or a material condition to the business's revenues or bottom line moving forward. Sure, the guidance wasn't great, but one-off reason. I'm not aggressive as that call buyer here, who, as the days gone on, is looking a little bit better because the trade was put on this morning near the open when it was closer to $330 a share, and it's now trading at $344. So that 360 call, it could work out ultimately when all things are said and done here. But Intuit, like so many of these other software companies, it hasn't been exactly charging forward here. It's been slow drips and drabs, scratching and clawing its way to the upside. And maybe it's finding a little bit of supports. This moving average envelope has been a pretty good guide for the past year. On the way down at the start of 2026, rallies into the 1 month, into the 50, that yellow-blue area, right? They've been rejected. Now here, after we break through it at the end of July, we've pushed higher, pulled back, and the market's finding support in that 1 month, that 50 area. So maybe momentum truly has flipped. But getting back to the highs, it could take a little bit longer here, and pushing through those highs, maybe even more. So I'm in at a short iron condor here right now. Let's go to the activity page. Filled in at $3.90 on what's a $10 wide spread here. 310, 320, 380, 390, which at 390, that's fantastic because we're looking for at least a third of the width of the strikes. That'd be $3.33. And so being able to take in 390, that fits the bill and gives Intuit a little bit of wiggle room to move around right now. So current trade, it hasn't really done much of anything since I put it on. It is climbing up a little bit more, but I'm comfortable with doing this because of the reason for the sell-off, finding some stability, maybe not back to the highs because there were disappointing numbers here, but not as disappointing as the market thought. So there's plenty of vol here, risking, basically 3 to make 2 at better than a coin flip chance, 56% probability of profit, a trade I'll take all day long. But the other batch of trades are more about a sectoral bet that I'm making right now for perhaps a little bit of chop here in some of the defense names, as it were, because the defense names, they've been moving around a little bit here. Boeing, we go over to RTX for Raytheon. We could head over to LMT for Lockheed Martin. 2 of these 3 fit the bill for dip buying opportunities on my technical scan today. One of them does not. So we're taking a little bit of a different way of approaching each of these. I'm going to start with LMT here because this is the one that stands different at 23 days to expiration. I like looking for stocks that are in a bottom left to top right form of chart, looking chart, if you will. I like to see the market that's finding a pullback within an uptrend, and I like to see the market holding former swing highs and swing lows. So where do we find ourselves today with LMT? We had a recent range high in that 545, 550 area. We've had a bit of a pullback. We're stabilizing above the 50 and below the 1 month here. It's not the prettiest looking chart because the 1 week has a negative slope, and now even the 1 month has a negative slope here. But if there's a place for this to stabilize, 550 or so should be a floor unless this market's ready to break down. So I'm looking short the 545, 540 put spread here. I'm also looking at the 595, 600 short call spread here. So this is a short iron condor. What does this mean? We probably find some stability at the midpoint of the recent trading range. We're not going to break down further. We're not going to rally back too quickly. That is put on for $2. Gets filled, for $1.70 here of credit right now. So we're looking for a third of the width of the strike, at least $1.67. Here you go. LMT fits the bill. Not the prettiest looking chart because, again, those moving averages, but perhaps stability coming into play right now. RTX is a little bit of a different story because RTX has a similar chart setup to LMT, but this does feel a little bit better, right? We've gone from 170 up to 211, whereas when you look at LMT, it's been a little bit more chop along the way to get here, it feels like, just from my view. Less defined trend over a longer period of time. When did we get a crossover here, just to put a cherry on the top of this? The last time that we had the 1 week below the 50-day was June 12th here in RTX. In LMT, the last time was July 22nd. So RTX has been a little bit more durable of an uptrend, okay? And you can use those moving average crossovers to examine like how long has this trend been going. So to that point, RTX for me today is not a short iron condor. It's the Super Bowl here. Short the 202.5, short long the 200, 225.5, 225. All right. Here right now, this could go off for 3 cents of credit. Okay. So on a Super Bowl, ideally, it's pretty flat. You're not getting debited for it. You're not paying out for it. You're taking in a small credit, if you will. Ideally, bigger credit, the better. That way, it's not necessarily a trade where you're looking to collect premium, a little bit of run. For me, this is certainly not a premium collection trade if you're only looking at a penny or two. And I got filled at a penny here. So the idea is that this thing is going to get a little bit of a bounce. There's going to be a bounce to what's happening in LMT from these levels. It is a buy the dip type of stock. It's a stock that's been seeing a little bit of improvement now that we have these, 2 steps forward, 1 step back type of price action. We're in the step back. We can find a market that's near support. And there you have it. There's the most recent swing level up here. Okay, we can point to this near 205, 200, 50 days above it, and market stabilizing. Perhaps it's something to do. I'm certainly doing it. The last one would be Boeing, because Boeing is an uglier chart amongst these few names here. This is certainly not giving you that upside momentum. The 5 is not above the 50 right now, like you see in LMT and RTX. You see that the 1 month is crossed below the 50 here. So this is not exactly something that's screaming buy. And yet, it is sitting close to the downside of its recent trading range. If we go back the past few months, it's been bouncing between 205 and 240, 245 here. So if LMT looks like it can get a little bit of a bounce and stabilize in its range, right? If RTX, I'm looking like this is a buy the dip opportunity, then Boeing could very well itself be something that finds stability back near this multi-month range low. It's a range trade, if you will. So looking at that bottom side of the range here, out at 51 days, because if the LMT position and the RTX position at 23 or so are wrong, and the floor falls out of Boeing, which has been the straggler of the group, I want to retain a little bit more extrinsic value here. So, I'm not getting burned as much. If I'm wrong in all 3 of these positions, but Boeing's probably going to be one that suffers first, just looking at the charts, assuming there's no idiosyncratic risk like a piece of corporate news that comes out. And I don't want to have something that's a shorter day DTE in the event that this is, wrong. So to that point, at 51 days, 190, 185, 230, 235, short iron condor, looking for the market to stabilize a little bit here. not break the lows that we had in July, not necessarily breach the range highs that we've had either, because I'm sitting inside the range highs at that 230 to 235. Within the next 2 or 3 weeks, if RTX and LMT are able to rally, Boeing can get closer perhaps to 220, 225. And as a group of trades, I can take these all off together. And that's why I call this a sectoral bet, as a kind of a basket here. So I'm viewing these all in tandem right now. So when I look at this on the activity page here, $1.67 of credit, a penny, $2. So net, this is $3.68 of credit that I've taken in here on these 3 positions related to defense. And so with a 368 credit, in an ideal world, we're going to be collecting at least $1.84 round trip. So maybe the RTX position doesn't work out, but LMT and Boeing do. Or maybe Boeing and RTX work out, but LMT does not. As long as I can get about, again, we're looking for $3.68 in. So if we can get $1.84 or better collectively on the way out, then we'll have the 50% profit threshold reached. I don't want to view any of these in isolation. Some could work, some could not work, but it doesn't really matter what works or what doesn't work. And what matters is if they all can decay or move properly a little bit over the next, say, week or two here. Because a week or two out at 23 days to expiration, now all of a sudden we're looking at, 9 DTE in the RTX and LMT positions. In Boeing, it's now 37. And collectively, if there's enough data decay across the 3, maybe we can reset and keep looking to squeeze some juice out here. So those are the trades. LMT, okay, short iron condor, 540, 545, 595, 600, $1.70 collected in credit here. RTX penny collected in credit, Boeing $1.67. Excuse me, I misspoke. I was looking at the filled numbers here. So there we have it. Either way, though, that's the game plan. The game plan is theta decay, premium decay in some of these names. Not a ton of vol on the board here, but sitting near range lows or midpoints where the market's broken out in the moving average envelope. So there could be a little bit of stability if uptrends continue. And so we're going to try to break down these markets as a trifecta here. None are viewed in isolation. And you know what? None are related to NVIDIA today. So if NVIDIA goes up, down, if the NVIDIA short iron condor that was put on that has 9 days to go busts out because the bull spread is working, or maybe both are just falling apart, I don't think these will be touched or impacted because they're not part of the AI infrastructure trade. And that's really the goal of what I'm trying to accomplish here. I've got enough going on with Western Digital, SMH being wheeled out, and NVIDIA itself. But hey, that's it for me today. Those are your trade ideas of the day. Sectoral bet on defense right now. Interesting looking charts, not related to AI, not related to NVIDIA. We're going to take a brief break here. Ilya Spivak coming up next with his trade idea of the day.
And we are back here. I'm Ilya Spivak, head of Global Macro at tastylive, and we're going to be looking at where our trades are sitting here. We've been kind of in a themed sort of basket here to echo Stan Druckenmiller, the great and famous Stan Druckenmiller, who's of course been in the news loudly in recent days, whereas some people like to go by the ethos, don't put all of your eggs in one basket. I tend to lean towards putting all the eggs in one basket and then watching that basket very, very carefully. Again, to paraphrase. So we've kind of been building a basket, as it were, here on this idea that market expectations for Fed rate hikes have been overcooked by the Iran war, and we're not really looking as convincing on that story as we thought. And from that emerged a whole range of kind of macro trade ideas, starting with gold, which here we can see through July was very stable in a way that wouldn't be expected were you to see what real interest rates were doing at the time. And this is the TIP ETF. This is a TIPS bond basket that it tracks, so real yields. And you can see here that through the course of July, real yields rose aggressively. Of course, in this, we're tracking the bonds, so the bond price is moving inversely. They declined. And that's an environment in which gold should have really suffered because it yields nothing. It's also an environment in which the US dollar should have done very well because, of course, what this implies is an improved yield return on owning dollars. And what we see instead is that through July, this is the dollar index, it holds steady, and then toward the end of the month, sells off sharply and never really looks back. And so it doesn't really capitalize on that story. Same thing with gold. It might have been expected to be cratering through this period, and yet it showed incredible resilience. And so the thought process was, well, as soon as the boot is off its neck, it's going to pop. And indeed, here we go. What seems to have catalyzed this move, lest you think it's Scott Bessent and Treasury buybacks, which only happened here, you get the sense that there's been a shift in Fed policy expectations to something less certain and more dovish in relative terms than it was in July. And that, of course, is front and center here. We just got some more inflation data this morning, but much more critically, we've got this speech from Chair Warsh at the Jackson Hole Symposium on Friday that's likely to be a major, major inflection point for these markets. So this is right on time as far as the thing to be looking at and trading relative to news flow. So what's interesting here, obviously we've been adding into this trade along the way as we've been discussing. So we added on the break of this range. We added again when we took out these levels here and then kind of settled on them to digest right around sort of the 4,400, 4,380, 4,400 level here. And then again, when we took out this range top here. Now, looking at where we are currently, we're sort of referenced against these recent levels here. And we can kind of see there's a sort of axis that runs through here, where we can see when we come down, we hit it, and it's a bit of an inflection. When we come back, it's an anchoring point from the top side, from the underside, and you can see we're sort of there again. Now, that, along with the most recent swing top back here as the reference point, kind of gives you where we are. It's not a place where it seems like there's any urgency to put anything on this way or that. I think at this point, we don't really have anything to suggest, oh, the trade has been invalidated, nor do we have the clearance to actually add into the position further. I think ultimately, the bogey continues to be somewhere up here on approach to the 5,000 level. So if you kind of look at the underside of this range here and the top side of this bounce, this is kind of the area to think about as a major inflection point. And for now, I'm going to sit here contently and hold and see what happens. It's a similar story with silver, where what we're looking at here is the same kind of congestion in the same kind of a move. Here was the July sort of precious metals resilience, then bounce. You can see we're currently resting against these former support turned resistance levels here, call it around 71.20-ish or so. And then if we were to break north of that, well, then we'd open up into 79, maybe into 83, and then above that, sort of ultimately into 90. So still sitting and holding here. Looking at Bitcoin, which is the other asset here that we've looked at as a reflection of this view. I sat for almost a month and a half in this range while it did nothing. And then, of course, ultimately here, Besant really did seem to be the driving factor. This finally woke up. Now, we've been talking about it for the past several days, sort of around this idea that we're approaching some critical levels here, maybe, right around here. And so looking at the intraday chart here, it does look like maybe the stair step has been to some extent violated, but the real kind of support is here. And so if we look at maybe even an 8-hour chart, we can see we're kind of trying to grind lower, but we're still very much within the bounds of what would be digestion in this move. And so if this is kind of our reference point down here, then any close into here would be something to be worried about, and maybe a catalyst to take the trade off. Mentioned yesterday that we're setting higher highs here, but the measure of momentum that we're using, the relative strength index, is diverging. It's not setting higher highs. And so there was a concern that this was going to get soggy, and lo and behold, here we go. We took out some very kind of short-term resistance turn support right here, you can see. So we hit it here, came back to retest it on the underside, held as if to say, yes, I see there's something here, and then edged in. So we're under it now. We're retesting. There's obviously lots of chop in here. So if we get down to here and hold, if anything, I would be looking to add into a long position. But of course, if it clears, then it might be time to pick up skis and go. As far as the most interesting trade on the board here today, not surprisingly, it's the bonds because of all this event risk that we're looking at. And if we look at where the bonds are, the overall story has been very steady, and we're really sort of looking for conviction. It is as though this hasn't really found that yet. And of course, with all the big event risk on Friday, that's perhaps reasonable. But what you find here is you're nominally setting lower lows. This was that big spike to the highest yields in or since 2007. And you can see pointedly that couldn't even hold intraday. And instead, we sort of came back within the range. Here was the Besant intervention. Since then, we've kind of digested and landed near the top of the range. And it looks like we're kind of looking for conviction. But where that conviction already seems to arise is in the ETF version of the same idea. And here, the product differentiation seems to really make a difference. So, for example, if you look at the 10-year, you can see that looks much different than does ZB, but not so much different that there is conviction here. This is sideways. If you start to move in on maturities and go to, let's say, the 5-year ZF, you can see, okay, maybe a little bit different now. Where you really start to see that product differentiation is when you look at TLT. And this is actually where I have exposure to this idea that maybe gold and the dollar picked up on early. That is to say that we don't need perhaps quite so many rate hikes as the markets thought. Here, you have a very interesting set of levels, and you can see them here. Here's the top of the recent range, and here is this former a reaction level. And you can see, whereas on the futures, which again, very different product, inherently kind of a different underlying when you're thinking about options, you haven't made the break. Here you seemingly have. And so what you then have is a kind of reference level here, maybe somewhere in this area, around 84, 84.30, 84.60, that actually opens up as something to shoot for. But because seemingly no one thinks that rates aren't going higher, the pricing on actually getting some upside exposure to what appears to be a break already underway, by the way, with that positive RSI divergence here, lower lows here, not on the indicator, the pricing is very attractive indeed. And so you can see here, I already have a trade on. It's 51 days out, so diluting exposure to delta, giving lots and lots of time for this to work out. But if we basically did the same trade here and just did a call vertical at the money and started to move out where we are, even 2 standard deviations out, all the way out to 90, we're looking at incredible risk reward. So better than 5 times. And so as far as a trade goes, if TLT is telling us that the break is already there, well, then this starts to make all kinds of sense, even just on risk reward grounds. And so taking a stab here makes sense. And we're going to try to get this on. And if it doesn't fill here, we might have to work the trade just a bit. Maybe we'll take a little bit less here. I mean, the risk reward is so good that we can kind of keep working our way down here. And even as we give up a little bit, we can still get incredible pricing. The question is, let's see if we can actually get filled here. So maybe what we'll do is we'll try a little bit more expensive here and see if we can get this on the board. There we go. And we're filled. So we're a little bit more long ATLT call vertical here, basically on the idea that everybody thinks one thing and we might get paid for thinking the opposite disproportionately, and that's really where the edge is. So being a bit of a contrarian here, but you know who's a big contrarian that's going to come in here and start firing all sorts of guns in all sorts of directions? One Thomas Preston. TP is here with us. He's waiting in the wings, no doubt, with all kinds of firepower ready to deploy. And we're going to sit here on our everybody is wrong about the Fed basket and hope we're not the ones that have it wrong. But if I can be out of consensus, I like it. So that's where I'll be. TP coming up next. Don't go anywhere.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
All right, Tasty Nation, let's get into the market right now. And I'm Tom Preston. I just listened to Ilya and talking about me bringing my all my ammo and gun stuff to blast the market. Ilya is, we're so glad to have him. I remember, we started Tasty 15 years ago, whatever it was. And Ilya came on along with Chris as part of the IG thing. They used to do, I think it was something FX, can't remember. They brought a whole different vision of how to look at markets, macro, chart stuff, all that stuff, and a way of interpreting data that we just didn't have. And, that's what I looked at Ilya for. So my hat's off to Ilya. Again, one of the smartest guys we have on the team. That said, what I want to talk about today, a couple of topics that I want to talk about. I want to talk about NVIDIA, of course. Everybody and his brother and sister are talking about NVIDIA, so why should I be left out, right? I'm going to actually put on a trade in NVIDIA. The other point is I want to talk about how many positions you can have on with a certain amount of money. That's a question that came up yesterday that I did not address fully, and I would like to do that because I think it's a good topic. Let's get into NVIDIA. I want to talk a little bit about the mechanics of NVIDIA. And you heard me talk a little bit about this. Oh, by the way, I'm on the YouTube chat. I can see the chat on YouTube. If you have any questions that I might be able to answer, please make them easy. Okay. I'm not looking for a huge challenge or anything. It's like, something easy, right? Like, what's a put? Something like that. No, I'm just kidding. Ask anything you want. And if you have any symbols you'd like me to take a look at, you guys have been doing pretty well sending me symbols to look at and put on trades. That stuff closed out Western Digital WDC call spread today. That came from the chat. Took off an ASTS or something like that for a bullish trade in the STS. Got that from the chat. So bravo to you guys. And not every trade's a winner. I get it. Hey, that's part of it, but I appreciate all the ideas you send me. Let's look at the, you're seeing NVIDIA on the platform right now. I'm going to switch over to open interest. And let me explain a little bit if you may already know this, but for the folks who are kind of new, let's talk about the mechanics of what these numbers mean. Looking at open interest, so these numbers are, let's say 60,000. There are 220 calls, 60,000. What does that mean? It means there are 60,000 call option contracts held between traders who are long those contracts and traders who are short those contracts in open positions. So if there were two traders in the market, let's just say me and one of you, and I bought 60,000 of those calls from you, you would be short those 60,000. I would be long those 60,000. The open interest would be 60,000. Okay, so that's what that open interest means. Volume, again, is going to be high, but I don't really care about that so much. Now, I care about volume, but not in this example. So what I want you to think about is why could this high open interest be maybe a little bearish on NVIDIA. So the two sides to this trade, and we don't know who is buying and selling. We just don't. Okay, there's no way of pulling that out. Maybe if you're sitting on one of like Goldman Sachs trade desk, you can see the orders coming in, but they don't release that data. So the point is, generally speaking, people are individuals, retail traders like you and me, speculators. They're coming in and buying these calls. So the dealers, the market makers, are selling them those calls. Dealers, market makers, are not in the business of taking market risk. They don't do it. What they do is they make a little bit of edge, and then they hedge with stock to flatten out their delta risk to keep that theoretical edge that you just made, hopefully selling those calls. That's the idea of it. So, but what they're doing is, let's go to the delta of this. Where's my delta? Delta, right there. So the delta of these 220 calls is 29. Perfect. Okay. So if I sell one of those calls, even though that call represents 100 shares of stock or delivers 100 shares of stock, I'm not going to buy 100 shares of stock against it. I'm going to buy 30. Or more to the point, I'd buy 10 of these calls and I'm going to buy 300 shares of stock, or I'm going to, do 100 of them, or whatever, right? Whatever the quantity is, they do the math and they figure, okay, how do I get delta neutral? So they're short calls and long some smaller amount of stock. So let's just game out one scenario that NVIDIA disappoints and the stock goes down. Maybe it will, maybe it won't. I don't know. I'm just saying, let's say that happens. The mechanics are the value of those 220 calls is going to drop. Okay, the bid-ask spread, they're going to start dropping. Volatility is probably going to start dropping. Calls are going to start going down. And what are the participants doing? The customers, the retail people, the speculators, the people buying those calls, hoping that NVIDIA was going to go to 500. Are just selling those calls, getting out of the positions. They don't want to take their max loss, so they sell them. Market makers, what do? They start buying their short calls back and selling their stock. So yes, the same thing works with stock. For everybody long the shares, there's somebody short the shares and all that stuff. But there could be a little bit of selling pressure on the downside if NVIDIA disappoints. So that's the mechanics. You'd see this. You might see this overnight in the stock. I mean, the stock's in a trade overnight, 24 hours. I'm not sure if the options trade 24 hours. In any case, you're going to see it happen on tomorrow morning. So that's why that's the mechanics of how it works. You've got two people, long and short. The people who are short, the market makers, the dealers, are hedged with long stock. The speculators probably aren't. They're probably not short stock against their long calls. Okay. So what's going to happen is if the stock starts going down, the dealer's going to start buying their short calls back, make a little bit of money, and then immediately selling out their long stock hedge. Okay. So that's the mechanics of it. Let's see what the skew looks like. Stock's at $2.10. $2.10. It's $2.88. Sorry. Right around 210. So down $5, up $5. The skew is to the upside. People are thinking, oh my gosh, NVIDIA's going on the moon. You know what? Let's be a contrarian. For anybody looking at a chart, and this is just my take, I don't know. It's stock's down. Maybe if I were an actual contrarian, I'd be bullish on this thing, but I don't know. I think there's all the data suggests, and I really do not like doing this, saying, oh, over the past 6 earnings cycles, the stock's down 5%, whatever that is. Past is not prologue, folks. It isn't. But I do think unless NVIDIA just smokes the estimates, some enormous positive number. The stock could go down. Again, CapEx is going to be a story, probably, I guess. What do I know about CapEx? Nothing, but NVIDIA probably has a story about it. It's probably, has to borrow money to build out their AI dreams. Chip semiconductor prices are, all that stuff is getting more expensive, making NVIDIA's business more expensive. Is that going to curtail demand and reduce their forecast? I don't know. Maybe that's what the market's going to be looking at too. So here's the way I approach this. Let's just, the volatility at 83% is pretty high. Do I want to sell a call spread? No. I don't really. So let's just start. And I did this a little bit with Chris. So what I do is I start with, and I'm picking a short-term option just to get a resolution. I'll start with the 68% probably expiring worthless. I'll click on the bid. Okay, I don't want to spend $5,000 on a short call, which is going to lead us to our next point. I'm going to buy this 220 call. And what I like to get is a third of the width of the strike. 250 divided by 3 is a little over 8, right? Or, 8.3 or whatever. So I like to get about 80 cents. I'm not getting it. Okay, fair enough. I mean, I could still do this for 70 cents. I don't want to. I'm going to do this. I want to see what I get for this long put spread. $1.35 negative theta. That doesn't look right. No, that's not right. But let's, you know what? Let's stretch it out a little bit. Let me get some delta. Let me get some short deltas on this. So this is a 5-point spread. Pay $2.90 for it. Yeah. Let's do this. I'm going to go with this one. $1.38. If I can make half of its max profit, about $50 on a $55, that's a good return on capital. I'm going to ship this. I'm going to bet on a sell-off in NVIDIA. That's my take on it. They don't want to play. They know it's us. They know it's us coming in. They don't want to play. Let me talk really quickly. So about this, the question that came up yesterday. So somebody said, well, hey, TPVC in the follow feed, you have a $100,000 account. You have 90 positions on. Is that how much you need to do that? So I would back into that number. How do you get, let's make the 100 trades, 100 positions, just to make the math easier. So how much money do I actually need to have on 100 positions? Okay. Well, if every trade that I put on is either defined risk or is let's say a short put in a relatively inexpensive stock, so the margin requirements are low. If I'm using up, let's say about $350 on average per trade, and that put spread I just bought $1.60, so it's half of that. But let's just say on average $350. Okay, selling some credit spreads, selling iron condors, buying some spread, things like that. You've got a whole mishmash of trades on, right? 100 positions. 350 times 100 is what? $35,000. If I have a $100,000 account and I'm using $35,000 of capital, I'm using about 35% of my money, right? With 100 positions. That seems about right to me. Okay, so yes, you can have a lot of positions on with $100,000. You can have a lot of positions on with $50,000. You could say, well, yeah, I'm going to use my $50,000. I'm going to risk more of my capital. Okay. And so at some point we can talk about utility curves in trading. But yes, the answer is if you use defined risk, low capital trades, you can certainly have 100 positions on with $100,000. As soon as you start to get into buying stock or shorting stock, those have large margin requirements. As soon as you get into, naked short options and index products, right? Those are expensive. Even ETFs like SPY. Hey, let's just see SPY. If I want to sell a 23-day strangle, I don't know, let's do the 754s, let's do the 777s. I need $15,000 for that. $15,000 of capital for that trade. Okay, that's what I mean. This naked stuff sucks up a lot of capital. So if you keep the capital requirements to some number, maybe it's $500 a trade, maybe it's $250 a trade, maybe it's $350 a trade. Yeah, you can do a lot of trades, have a lot of positions, spread your risk out, find a bunch of opportunities that do not and be well under your capital. All right, let's take a look. What zero? Okay, Death's Knees. What zero DTE strategies do you like to employ, TP? Well, most of it is always in the SPX. But I'll trade a lot of other things, like I'll trade crude oil or whatever is in zero DTEs. And by the way, even before there were zero DTE options specifically, when an option was coming up into expiration, it would have zero DTE. So there was always a lot more trading activity. But basically, what I do for zero DTEs is when volatility is relatively high, and you're going to say, well, TP, you do those SPX iron condors with zero DTE with a VIX at 15.5. What's the VIX now? 1545, unchanged. I still do them because that strategy works over time. If volatility is low with zero DTEs, like you may take a look at today, I already have a trade in CrowdStrike, so I don't know if we'll look at CrowdStrike, but we could look at I don't know, CRM maybe, and those have not quite zero DTEs, but like 2 days to expiration. So I will use credit spreads when volatility is relatively high, debit spreads for directional trades if volatility is relatively low. So Death's Knees, that's basically what it is. And I don't trade this stuff. Hey, I'm always looking for a trade. Can you look at CBRS? Sure. CBRS, why not? CBRS. Take a fill on NVIDIA. Die, NVIDIA, die. CBRS. Hard to borrow. Let's see the options. Not bad. I mean, they're okay. For a $181 stock, are you bullish? Flipper, are you bullish or bearish on CBRS? 181.50, so down 5, up 5. Skews point to the upside. Okay, Flipper, I'm putting you on the spot. Flipper. You're welcome, Death's Knees. Hello, Ranch. You're welcome, Flipper. Intel, yeah, 80 Crystal. I'm going to take a look at Intel, too. I like CBRS on the long side. Okay, fine. You want to play? You want to play rough? Let me introduce you to say hello to my little friend. I like this. Look at this, guys. And I don't know anything about Flipper. I don't know anything about CBRS. The decent open interest in here. That's pretty cool. Let's see the short-term stuff. Oh, I don't know. I may have to go. No, there's not enough premium in here. Although, you know what? No, forget that. There is some premium in here, Flipper. If I go in and I sell this 75 put, buy the 72 halves for 68 cents. Not quite. Let me pull it up a strike. Right here. You know, Flipper, I like this. So for 2 days, I don't want to wait around. Life is short. I need to get paid. Okay. 82 cents for this. That looks like a third of the width of the strikes according to my calculator. I bet I'm not going to get it, but let's try it. Let's give him a penny. Let's see if I get filled. Buying the 75, selling the 77 halves, filled. Should have gone for 82. Anyway, take a fill on that. Let's go into BSX. Ron Vishar, BSX. What is BSX again? BSX, Boston Scientific. $48. Let's see what the skew is. See, here's a case. Nice, pretty tight markets for this stock. 48.15, down a buck, up a buck. Skews point to the upside. Ron, which way are you leaning on Boston, on BSX? How about if I sell? Does it have earnings or anything? No. How about the 2 day options? Nothing in here in the 2 days. One of the things when you're looking at relatively low price stocks, the short-term stuff, you're not getting enough premium. Let's try this. Let's try $2 wide. Not quite. Let's pull this up to here. Bing, bing, bing. Well, like this, maybe. Steve Harrison alongside 2. Yeah. I'm gonna go run. I'm gonna step in here and just sell this put spread. I'm gonna assume you're bullish too. Most people are bullish on stuff, and who doesn't love Boston Scientific? Ship it out at 70 cents. And by the way, the metrics on this is what I like. Let's edit the trade so you can see it. Let me blow this up for anybody who has a little trouble visualizing this. So theta, I'm generating 86 cents a day for $130 of risk. I like that metric. 72% probability of making half the max profit. So 70 divided by 2, 35. I have a 71% probability of making that much. $35 versus $1.30 of capital. That's a decent return on capital. Let's ship it at, let's do 70. Let's make them work for it. There's a call skew NVIDIA. There absolutely is. Yeah, that's yeah. So I'm fighting the skew. Yeah, Jared, you're absolutely right. Market makers, delta neutral is possible day to day usually. That is exactly right. Market makers do not make money by speculating on direction. Sometimes, that was bonds, and I was doing this 30 years ago. Sometimes I'd have a little outside risk. Just leave it on. It might be a little bit net delta long or short in bonds or something like that. But that's not how I would approach trading. I wouldn't say, gee, I'm bullish today on bonds. That's not how I did it. Let's see. Jade Lizard and Crowd or Intel. Let's do Intel for Crystal. Do I have a position in Intel? I think I do already, but let's do another one. Let's just do another one on behalf of Crystal. Because you guys are what keep this place going. Crystal, what do you think? Up or down, higher or lower, bull or bear on Intel? Yeah, Ranchy, the SPX short put verticals have been great today. I agree. Let's do our February's bullish, Crystal. Come on, Crystal, give me a call. I'm going to go bullish. The stock's at 87 and change, right in between 87 and 88, down a buck, up a buck. Skews pointing to the upside, Crystal. Crystal's a bear. Okay. Then you know what? I do not want to argue with Crystal. I'm going to pull this a little bit closer. The 88s. And you know what? I bet it's going to sell off if they whack NVIDIA. I like this one. Let's sell one right at the 80. 60 cents away. 60 cents away. Fortune favors the bold. Let's do this. Submit it. Filled, Crystal. Done. Thank you, Ant. I appreciate it. Yeah, we're getting a lot of growth in our numbers thanks to all of you folks. I like an entry into AMAT here in the years. Okay, so let's look at AMAT for Jared. How much time do I have? A few minutes. I got to be fast. Less talk, more trading, right? AMAT's down 34% Ivy rank. You're bullish on this. The nice thing about these options are rich with a $477 stock. Gotta love it. Michael, bottom to the price, simple call spread for now. Yeah, I'm okay. So yeah, I mean, the volatility is 64%. Looking into October. Okay, let's do it. Yeah, I mean, we could look at it. 51 days is a little long for me for AMAT, but you know what? Let's play. Let's play. Now, this is not rich enough here. I got to go up here. No. I'm not getting it. There's not. That could do it. 5. I'm looking for about $1.60. I'm not getting it. So let's do this for AMAT. Let's buy a call vertical. I think that's a little bit closer to what Jared's talking about. 75.80. I like this. So I'm getting positive theta because the debit is less than the intrinsic value that 475 calls. Decent risk reward ratio, pretty much 1-to-1, 54% probability of making half that before expiration. That's about what you're going to get with a long vertical, 54%. Short spreads are like 60s, 80s, 60s, 70s, 80%, things like that. I'm going to ship this for $270. Filled. I'm with you on AMAT. Leaps in NVTS. Oh, overtly, let's see. Leaps, I don't love leaps. I mean, we could do it NVTS. Volatility is so bloody high in this. Why? So, yeah, I mean, just to look at a chart on NVTS, $12. Yeah. Markets are tight. I don't know if I would trade leaps in here. I would go. Are you bullish on that? G-Wells, I think you're bullish. That's my hunch. 23 days, stocks at 12.5, down $1, up $1. Skew is towards the upside. How about we sell these 10.5 puts? I like this one. I'm going to sell these at 32. Is he bullish? 2027. That's so far out. That's so far out. And one of the reasons I don't like buying leaps is with a stock. Okay, here's the deal. Leaps are great as a stock replacement. In NVTS, the stock's at 1257. Not the most expensive thing in the world. I'm not saying you shouldn't buy leaps, but the bigger problem with leaps is you're buying Vega. And with volatility in these options at 94%, you're paying a lot of extrinsic value for those leaps. I'd be a little cautious against buying leaps too far out. Now, and then if you do, sell some front month calls against it. I'm going to ship this off 32 cents. Come on, let me get a fill. I'm our Destiny. Oh, CYM, overtly Brian, CHYM. And I don't even need to find stocks to trade. I had a whole list of them. I don't even need to do that with you guys. Ivy Ring. Chime Financial, bullish or bearish? Yeah, sell puts. That's what I did. Bullish, CHIM. What's the $33? 50% IV rank. Bullish on this. Yeah, let's do this one. I mean, could I get 42 cents for this? And you got to, by the way, when you're trading this stuff, you got to be really careful to adjust it to the mid price. I like this 42 cents versus 348 buying power. I like it. Ship it. May not get filled. Are they working my order? Yeah, it's going into some of those. Yeah, Jared, you'd like doing leaps when I'm setting up core man's covered calls. You're absolutely right. New to Tasty, Les Schwab, God bless you. Thank you, Cronin. I appreciate it. So if you were left Schwab because they have the Thinkorswim platform, that's the platform I built. I also built Tasty. But the idea is that that Thinkorswim platform is still very, very powerful. But Tasty has some metrics on here that I created, like the P50 number. Thinkorswim doesn't have that. The liquidity numbers doesn't have it. There are metrics on here that that I built after I left Thinkorswim that you'll find on Tasty that you won't find on Thinkorswim. And I don't think the Schwab development team is very aggressive with that stuff. Do your SPX today. All right. So I'll put did I miss anything? Bear. NVIDIA. So all right, Crystal, what do you think? SPX going down? I think they're going to kill the SPX. SPX, yeah, it's struggling, Crystal. What do you think? Crystal, the producers are putting a lot of pressure on me, Crystal. I think Crystal is bearish. Crystal is nothing if not bearish. 75, can I do this one to 75? God, no, I can't do that. I got to do this one. No, I'm going to do this 10 point. Crystal, I have no idea. Well, you know what? I'm gonna be bearish on this thing. 535. Let's ship it. Come on, ship. Fire away. Phil, take a fill. All right. With that, I have to hand this back over to Ilya and Chris. Let's see what we did today. SPX filled, Chime working, NVTS working, AMAT filled, Intel filled, BSX were working, CBRS working, NVIDIA were working. I hope this has been helpful. Stay tuned. We have a lot of great programs. Thank you, everybody, for joining me today. I will see you tomorrow morning. And if you have any questions, tp@tastylive.com. I'd be happy to try to answer them. And good luck trading.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
We're back. You're watching, Back to the Futures here on Tasty Live. Ilya and I are going to go through some of these futures products over the next 25, 30 minutes here as we get ready for really NVIDIA earnings, Ilya. Markets have not been moving. S&P 500 down 2 points here today so far. Really, this has been the story for the past 4 sessions in a row right now, where when we take a look at our charts, this has been a market that's been pinned down here effectively since the 20th. Okay, since last Wednesday, we fell down towards 76.60, and we've just been chopping. So there's really not that much to say about the index, except for the fact that it's pretty clear this is a market with just 770,000 contracts traded here by 2:30 Eastern. People are out to lunch right now, and they are looking for a catalyst.
Yes. I mean, not surprising. I mean, surely you're not surprised. I'm not. Clearly, NVIDIA is a big barometer here. Almost kind of comically so, because you and I have talked about this. NVIDIA hasn't really deviated from its EPS estimates by more than 5 cents in who knows how long. I mean, at least 4 quarters, but actually more. The most interesting bit about, in particular, the last 4 quarters is that you've had almost no deviation from forecasts, and yet the stock has been getting shellacked the day after, 2 days after, 3 days after, a week after, 2 weeks after. Every time. Now, granted, 4 quarters is not a big sample space by any stretch of the imagination, but it just gives you this sense of what you're dealing with here, in the sense that the market is expecting EPS to double from the last quarter. It's expecting revenue to double from the last quarter. What aren't we expecting yet? What isn't discounted? And so, of course, we're going to get some sort of ridiculous stratospheric number. Whether that number beats by this much or that, I mean, the trend in NVIDIA has been you've not seen big beats or big misses one way or another. So really the question becomes, okay, fine. Let's say, I mean, going all the way back to 2022 is as far back as I can see, we've not had really deviations of more than 8 cents. That was by far the outlier, and that was last year. So you look at this and you go, okay, is it really about the numbers or is it really about the sentiment signal and what that sentiment signal was going to be?
Right. I mean, I think one thing that we can consider here is the market's probably done not moving. We can just use VIX 1D here as an example. The past 3 days, it was trading pretty weak, right? Yeah. Opening low, getting pinned, opening low, getting pinned. Today, it's jumping up a little bit. So if you're expecting low vol to persist, the market at least is positioned that tomorrow we're going to see a little bit of movement here, a little bit more movement than we've been seeing recently. Yeah. In terms of volatility itself, though, the VIX is down 2 pennies today. Volatility futures are down today, Ilya. This would be technically a new low for the U contract. If we go out to the Z26, this is even more of a dramatic decline. So vol is coming in across the curve right now, which is fascinating. Is this a market that's complacent? Maybe heading into the earnings. One way to take a look at this, as we have discussed here, TP and I were talking about this on Confirm and Send recently. It was yesterday's segment. How do you look at complacency in the market? Maybe it was Friday. I digress. We can go to something like the 0 DTE NASDAQ. We're trading in at 299,000. We'll call it 230 here. So let's just go 30 points down and 30 points up. There's put skew in this market still, right? There have been occasions recently where we've seen at the 0, the 1, the 2 DTE and SPY and SPX and triple Qs and NDX in the NASDAQ futures, ES futures. We could actually do this in the NASDAQ futures because this is back to the futures after all. So we'll call it 29,300, down 50 points, up 50 points. And you could still see that the puts 50 points wide from the current price are more expensive than the calls, $9.50 versus $6. So is this a market that's totally complacent around NVIDIA? No, not really. Right. If it was, then VIX one day wouldn't be jumping. There wouldn't be put skew here for the 0 DTEs. For the 1 DTEs here, right? If we want to capture the NVIDIA earnings, we can go out there. There's still put skew 125 versus 115.50. So yeah, I mean, there's almost part of me that thinks, what don't we already know about these earnings, Ilya?
Right. Exactly.
Right. Because we get the hyperscalers, we get the semiconductors, we get the semi-cap, we get basically the entire ecosystem around NVIDIA. We have Oracle. We've had OpenAI is doing, is getting ready to file for an IPO. So some of their numbers have leaked out too. It wouldn't shock me if this is a market that looks at NVIDIA and gets pinned. And that's quite frankly how I'm playing it here. I don't think there's a big directional bet to make at the index level today.
No.
Because of what's happening with NVIDIA. My NVIDIA position for the earnings itself is 9 DTE, looking right at the expected move. Historically, Ilya, past 6 earnings reports, NVIDIA has been lower by 4.8% a week later. So if we get that to happen here, it would stay within my short strike of 195, and I could catch this short iron condor out for a potential gain. But I'm not placing a big directional bet on NVIDIA, thinking that it's going to revitalize Micron or SanDisk or ASML or even put some juice into Marvel significantly ahead of tomorrow's report.
Right. And I mean, I think we look at this also and we say, okay, obviously there seems to be something of a sentiment signal there, not so much in terms of what it means for the AI narrative, but in terms of there being a kind of marker to say, okay, here we are on one side of the NVIDIA earnings. Now we're on the other side. And I think when we see the way that that the price action has worked itself out around these recent results, I mean, let's consider we've got now for the past 4 quarters, as we said, I mean, barely any deviation from expectations, but the 1 day after move has been negative. The 3 day after move has been negative, and in size. I mean, last time down 1.8 The one before that, down 5.5%. The one before that, down 3.2%. So big moves, ostensibly not because of anything NVIDIA said, because the results were pretty much in line, and who's frankly surprised, to your point. The larger question has been, okay, well, on the other side of NVIDIA, sentiment gets a clearer runway to kind of make up its mind and go, okay, the threat of this event risk is out of the way. Now what's the path of least resistance? And so, if anything, I think you get a little bit of a pickup in vol and a little bit of a pickup in conviction, at least in markets, at least as pre-positioning for Warsh at Jackson Hole on Friday, that you get working through the markets tomorrow and maybe even overnight once NVIDIA is out of the way. Now, what is that default will be very interesting to see.
It's easy to imagine what the bear case is for NVIDIA and therefore the NASDAQ. I mean, what's the bull case? I asked Shai Balor this yesterday on Last Call. He's been someone who's been, if you've been following his page and listened to his stuff over the past few years, in the FinTwit community, he's been all over the AI trade for a while. Is it a second order effect? Right? Are we looking through NVIDIA's numbers and saying, okay, we got all this, but like we're really trying to figure out how much of this excess demand is out there, or there's not enough demand out there moving forward? The hyperscalers, the memory names. I mean, where are you? What's going to be the tell beyond NVIDIA is what I'm getting at, to know if the market's happy with these results or not from your perspective.
I think probably the biggest thing is going to be essentially how we see the overnight from the semiconductor names in the big kind of Asia AI trade markets. So a lot of times recently, if you wanted to see what the NASDAQ was going to do, you'd look to South Korea, you'd look to Taiwan. You see what they're doing overnight, even Japan to some extent, which is another big kind of AI hub as far as the supply chain. You'd look at all of that and you'd say, right, okay, what are they doing? And if the Kospi is up by a few percent, well, there you go. That's what they're doing. So I think the way that the markets ultimately start to look in some of these big semiconductor fab areas, Korea, Taiwan, to some extent, Japan overnight, you'll see kind of where the market landed. And you might see sentiment there even more pronounced than you would in NASDAQ futures themselves. Because, of course, NASDAQ futures will trade overnight, but there is so much more fuzz there than there would be in sort of a straightforward, the entire Korean stock market is semiconductors and AI as condensed into Samsung and SK Hynix. That's a clean read.
EWY, yeah. How the chip companies overseas react overnight is probably the place that I'm looking to as well, because we're going to have our initial reaction here in the US. The earnings are due out between 4:20 and 4:30 Eastern. So I suppose a little bit of forward programming notice here. Overtime will continue as normal today. We'll begin right after Last Call, 4 Eastern, 3 Central. Ilya's going to stick around for the first 15, 20 minutes or so, probably 15, and then Jem Karsan is going to join us. We might get the NVIDIA earnings report while Jem's with us. Maybe not. If it's not out there by 4:30, Jem's going to leave, and I'll continue until at least we get NVIDIA. So be sure to come back for overtime, 4 Eastern, 3 Central, just about an hour, 15 from now. Ilya, here's the funny thing. NVIDIA right now, looking at its valuation metrics, so to speak, what's its forward PE? PE right now is sitting closer to 33. Forward PE is closer to 16. The quarter that's about to be lobbed off gave us $1 and should have had this loaded up. $1.05 in earnings. The one that's expected to come in is $2.09. So with that, NVIDIA's PE ratios are going to come in. Assuming we just meet, NVIDIA's PE ratio is going to fall from 36 down to 30, 29. Just back of the envelope math there. This is not like a stock that's, even if it just meets expectations, it's trading at like a 70 PE where that can disappoint.
Right.
And maybe we're at peak demand. It's already gone through a valuation adjustment along the way. So maybe it's not a 36 PE stock anymore. Maybe it should be trading closer to a 25 or a 30, but that's what these earnings are going to bring it to anyway. So again, I'm thinking about what kind of dislocation are we going to see here that's going to deter so many investors who are holding this thing long-term now. If it's vis-a-vis SPY or triple Qs or XLK, right? Something, some exposure to it. What's going to make them want to abandon ship and say, this is the end of the trade. It's been a great run. Time for me to diversify and get out of this because the bottleneck here in GPUs is finished. I don't know.
I think if they're getting out of it, that's not why they're getting out of it.
Sure.
I think if somebody's getting out of NVIDIA here, they're not getting out because the GPU bottleneck is over. If anything, by the way, if you wanted to have a big kind of expansive longer term view, you might say something along the lines of, well, OpenAI's in-house chips this week made a bid to be performing better than NVIDIA. And you do, in fact, see NVIDIA starting to kind of lose its friendly kumbaya relationship with both the labs and the hyperscalers, because everybody is trying to do everything in-house. Everybody's trying to do chips in-house, and then NVIDIA is trying to embed itself into the hyperscaler income stream and into the lab income stream. And so everybody is kind of attempting to eat from everybody else's plate.
Well, I mean, it's what like the margin question is always the biggest thing. How come we don't see disruption in the grocery business? Because for every $100 that someone spends at the grocery store is pocketing about $2, right? When you look to something like chips, it's like for every $100 that NVIDIA is spending on semiconductor chips to Micron's keeping 85 of those dollars.
Yeah.
So they're like, are there alternative sources? Can we get this done like close enough in value where there's like a substitute good where we're not paying someone who's literally like, this doesn't cost them anything to make, and yet they're able to charge an arm and a leg for it because there's no other competition out there right now, not enough supply. And that's the whole, this is the business cycle, right?
That's the game,
Right. In any of these companies, there's excess demand and too fat of margins. There will be a point in time, 2, 3, 4 years down the road where the foundries will get built up, the factories will get built up, and then you'll get more supply coming online. Folks have obviously been, how come these chip companies have been able to sustain this level of success for so long? Because a lot of individuals weren't thinking that this would be a sustainable build-out cycle, right, Ilya? The chip companies were saying, hold on a second. In 2019, 17, 18, 19, when there was that big crypto bust, okay, and we were in negative margin territory, were you guys cutting us any slack? NVIDIA, were you cutting us any slack? No, you were not. When we needed help, right? When our prices were falling, you could have worked out a long-term agreement to lock in prices with us to give us sustainable revenues and margins, and you chose not to. So why on earth should we care that we're charging you an arm and a leg now? You weren't there for us. We're not going to be there for you. We're not building more supply for you. Keep paying us. So this is a complicated game here, Ilya.
Right.
Business relationships matter.
Right. And so this is kind of where my head goes then. If people are going to be getting out of these positions, it's not because they've lost faith in kind of the philosophical AI story. It's because something has occurred that's snapped sentiment. It's because something has occurred that has essentially challenged the idea. And in my mind, this is inevitable, which is why this will inevitably snap. Everybody has been extrapolating this story in a straight line and saying, well, if what we've seen from these developments holds and we push it forward almost like a compound interest calculation on a rinse repeat kind of calculus, it'll give us XYZ thing. You're like, well, that's just stupid. We're at a frontier of technology. In what possible world can you extrapolate things forward in a straight line for even 6 months? You have no idea what's going to happen. No one does. And so that's really, in my mind, the vulnerability in markets here is that you get some sort of weird outturn that nobody is betting on. You will, of course, get it eventually. And that ultimately shakes the sentiment sort of infrastructure of this whole thing.
Well, what's fascinating, because like the NVIDIA knock-on effect to me is if NVIDIA comes out and says that their margins are shrinking and there's nothing that they can do about it because their chips are in short supply, semis can do really well coming out of this. Oh gosh, the bottleneck's going to continue longer. Even NVIDIA, the behemoth that's NVIDIA, Apple already gave in. Didn't they just raise prices because they couldn't absorb it anymore? What if NVIDIA goes in that direction? What's the knock-on effect for semis? One of the other items here, Ilya, what if NVIDIA says that they're making less money per chip moving forward because the hyperscalers are pulling back, and so they don't have the same pricing power that they did? NVIDIA falls down. What happens to a name like Meta? What happens to an Oracle? What happens to Microsoft? So this is not, I mentioned this in the morning note today. I said it in the daily video, which is basically based on the 3 thematic ideas that we cover each day. It's NVIDIA is not about NVIDIA anymore.
No.
Right? The biggest reactions may actually come outside of NVIDIA. So this does set up an interesting scenario then, where because the domino that falls, NVIDIA is the small domino that knocks into everything else, right? You could get this weird move where there's a bigger move in the index and not so much in NVIDIA itself. I don't know. I'm just conceptualizing this.
Yeah.
And so maybe if NVIDIA is up tomorrow, maybe the semis are down a bit more and you have a sloppier NASDAQ. So NVIDIA's up a few points, NASDAQ's down a few. NVIDIA down, maybe the NASDAQ goes up. But I haven't made any adjustments here, I suppose, if we're going to get back to the trade as opposed to the speculation. M&Q is still sitting above my short strikes, 22 days to expiration here. It was a short put spread, long call spread. So now it's just sitting at the long call spread side of the trade because the put spread side, right, like 250 points wide. There was enough decay. I didn't need to sit with it. If this prints, it prints, Ilya. If not, then I take this off for a very small loss because it's in M&Q and not really doing much of anything else there. I do something, the Russell, I haven't put back on yet. It had a nice recovery yesterday, but still not loving this action as it's kind of drifting near its 3,000 level.
Mm-hmm.
Don't see much to do there. And in terms of ES, there is that short call spread here today, which not really doing anything. It was a $187 loser. Now it's a $217. If stocks fall because of NVIDIA, this is going to help keep me protected from some of the other things. All right. Can we get off of stocks for a little bit and go over to bonds? Because
I would like to, because I think that's really the other big thing is whatever NVIDIA does, you're not going to get conviction on the other side of it, perhaps. Because Friday you got Jackson Hole, and the market might well reserve judgment. Now, the most interesting thing on the board here today, in my mind, is what you see across different reflections of this idea. Because ZF looks one way, ZN looks another way, ZB looks another way. All of them look like they're pretty range contained. ZB looks a little bit better. And I know this is a futures show, but as an indicator.
They're intervening in ZB, and so the market's going to have to, if it wants to push up rates, it's going to push them up elsewhere, right?
Well,
so ZN
this is one
now
of those
taking it harder than ZB.
Right? To paraphrase one Jeff Goldblum, nature finds a way.
Beautifully said.
When we look at, I think, and again, this is a futures show, but as an indicator, let's take a look at TLT, because this is a product that averages maturities. So this is 20 plus. Note, it breaks higher today. The break you don't get in ZB fully confirmed cleanly, you get it right here. And you're basically open up to, 85, let's say. But the amount you get paid to take the upside here is better than 6-1. You get a call vertical in here like 51 days out. Plenty of time. Lots of dilution of delta exposure. And you can go in the money buying calls and push that out even to 90 you're getting paid better than 5 to 1. No, because nobody is long.
Nobody's long.
Looks like pretty great odds to me.
There is a point to be made about nobody being long bonds right now. According to the CFTC COT report, okay, and maybe the TFF would be better than this, but okay, we're going to just use the COT report here. Net short positioning is now at its weakest level since October 23. Ilya, I remember October 23 here very specifically because two things we did in October 23, three things, in fact, that kind of got the juices going. I went long size in S&P 500 at like 42.68 or something after the non-farm payrolls report. I went long gold in size right before October 7th. I just so happened to get long on October 6th because of the bullish reversal, the key reversal candle we had done there. And you and I were busy trying to call a bottom in the bond market, you, me, and Radigan.
Yeah.
Over time. So listen, if
fruitlessly.
Well, no, because from October
not
23,
fruitlessly. Ultimately fruitlessly.
Well, it hasn't. But over the next few months, ZB from the October
we did make money though,
like 110 up to 125 for the rest of the year. So I mean, like it worked out well. But I remember specifically looking to call the bottom in ZB here, and there's a few research notes on our news and insights tab from the September-October window that year that you can go and check this out to substantiate this claim. Yes. But regardless, if we get another swing to the downside here, because I think the market's going to test Besant. The market loves testing. Testing these.
Oh, sure.
I would be inclined to join you where like I'm trading this south right now, but looking at something that's a little bit further out of the money and even a longer duration, I could go to the end of the year here at 127 days and buying the 88, 89. Would I ever sell an 88, 89 call spread for 14 cents? Absolutely not. Not nearly enough in there, but buying it, that thing could go up in value. We could play the inflation game there. Ilya, we only have 2 minutes left, so I want to just pop over to some other futures here. Gold's taking a step back today. Silver taking a step back today. Have they broken anything just yet? I say no. This thing has been riding the rails of the 1 week moving average for several weeks now. And today we find a bounce at it here in gold, here in silver. Same thing. The moving average envelope is showing, nice strength. It's not going to go up in a straight line every day. Maybe it will, like fourth quarter, but that's not exactly how I think it's going to pan out. No. So I see oil down meaningfully again. It was off a little bit more today. Now it's off less, but Bitcoin's up. It's a bit of a breather.
It's a bit of a hodgepodge. Yeah.
And rate hike odds are up too, which may be one of the rationales behind this. I don't know why people are pumping hike odds up after the PCE report today, heading into Jackson Hole. They're up marginally, as we can see from the
honestly,
I
think the market is just looking for things to do to reposition. And there's really not like when you get this kind of absence of rhyme or reason, even between assets that ought to be intimately related. And it's not one of those things that holds over a period of time. And you go, oh, well, maybe I'm going to have some edge here because this is a mispricing that's not so much a mispricing because it's wrong, but a mispricing in the expected relationships that's illuminating. Like when gold wouldn't sell in July and you go, okay, hold on now. I'm going to load the boat. Well, this is not that. This is just dispersion and weirdness.
People are looking for something to do. People are waiting on NVIDIA. The top ticker on the platform traded today, Marty Vennett came on from live from the trade desk here. It was Meta. 133,000 contracts have traded just on the call side at the 580s. You go up to 585, it's 88,000 traded today. Nothing else is seeing this kind of volume at all. So when we say the market's in a holding pattern waiting for NVIDIA, we just got past 800,000 contracts here in ES. Oof.
Yeah.
All right, we're done here. Slope of Hope himself, Tim Knight's coming up next here on Tasty Live. He's going to guide you through the next 30 minutes. We're going to be going to last call then, getting ready for those NVIDIA earnings. Stick around. You're watching Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Hello. Well, we got about an hour and 18 minutes until NVIDIA does their announcement. And I don't mean to overstate this like it's like the second coming of Jesus or something like that. But, you know, it is kind of one of the few things going on this week of note, and it's a pretty big deal. It's the biggest company on the planet. And I had a couple of things to say, but I'm going to do a little trick here. And I'll explain why in a sec. Let's go to the spider chart. Let's just jump right into the SPY right now. Okay, now I've got you. Now you have to listen to my speech. I wanted to talk a bit about something I've been noticing before we actually get into the nitty-gritty of the charts, which is that, you know, a lot of folks are talking about the AI bubble, the AI bubble, the AI bubble. And I've noticed that to a person, they buttress it with, or they preface it by saying, I'm not a doomer and I'm not doom and gloom, but ... as if being a pessimist, being discerning, being cynical is negative. That's a horrible thing. So there's this sort of excuse, this apologia that comes forth to allow the person to say whatever they're saying. And from my own thing, and I know a lot of you think I'm a perm bear, and rightly so. But you know what? As far as like the doomer thing, I embrace that. I absolutely embrace that. I am a doomer. I have an exceptionally bleak view of what's coming ahead, but I'm an optimist, and I've been an optimist my whole life. I married the girl that first girl I met in California when I moved here when I was 13 years old. Moved out 13, September, saw her, like, wow, that's the one. And so we've been married to this day. That was longer ago than I care to admit. That takes an act of optimism, you know, to spend your life with the person you've seen in the 8th grade in the new state you just moved to. I've started multiple businesses, and I put my livelihood on the line by starting those. If I'm a pessimist, I'm going to get a W-2 job. Play it safe. Get a salary, get a 401k, get company benefits, come in at 9, leave at 5. That to me is pessimism. Well, there's kind of no hope. I'll just go with what everybody else is doing. It takes an act of insane optimism to be like, I have an idea and I can live off this idea, and off we go. I could give more examples, like having children. Having children is the ultimate act of optimism. Why would you want to bring a new life into this world if you were a pessimist? So it's a conundrum, I realize, but I just want to be very clear. I am doomer with a capital D. And it's funny because after crises or in the midst of crises, they all rush out and say, you know, I'm Dr. What was the guy, Dr. Doom, he would call himself? And he's like a permabull. So you want a Dr. Doom, you've got it. I'm as doomy as they get. I think things are going to get horrible. I'm not just talking about equities, but just overall. But I'm simultaneously a huge optimist. And I know it's weird to untangle, but I think that part of the good news and the good tidings that are forthcoming, a prerequisite to that is the nasty stuff. And that's the fourth turning we're in right now. So that's my speech, and it would have been cut out of YouTube if I hadn't had a chart on your screen. So there, gotcha. All right, now we can talk about the charts for real. Speaking of optimism, here's the spider with the 18-year bull market. We've been in the everything bubble since March of 2009. And uppity up we go. We are in the vicinity of the first line of resistance right here because we have over the past hour or so vaulted higher, I guess because of NVIDIA optimism. I'm not sure. It really doesn't matter too much. So we've got this level of resistance and then this next level of resistance like so. I have virtually no opinion about what NVIDIA is going to do. Also, if you saw me this morning, you know that I have no semiconductor exposure, which is something I may deeply regret because longer term viewers know that I was a big SMH puts guy, and I still believe those are going to turn out to be amazing. I don't own them anymore. But if NVIDIA blasts 10% higher after hours, yeah, that's a shame, but it's not really going to hurt me directly, at least. Of course, the market as a whole would celebrate that. If NVIDIA falls 10%, I'd actually be more upset with that because I know what it feels like. I know exactly what it feels like to have an opinion, to be in a trade, to lose faith in the trade, and later down the road, you were spot on. Absolutely nailed it. I know exactly what it feels like. That feeling is 100 times worse than any other feeling you're going to have because you were right in the first place and you didn't have whatever it took to stick with your conviction. So yeah, that sucks. And I could be there again if SMH falls to pieces, as it may well do. But I'll be watching with great interest, even though I have not just no NVIDIA exposure, but no semiconductor exposure. The ES itself, and this particular chart lags a little bit. It's more of a delayed feed, but the lines still count. We have been grinding around, going nowhere for days at this point. Absolutely going nowhere. I guess NVIDIA will help release that. I guess Jackson Hole will help release that. As it is now, this is kind of the zone we're in, so that if what the bulls want to see, obviously, is to conquer that minor resistance line, what the bears want to see, if I dare use the plural, is to sink below this support level, which, as I keep saying, would be a failed bullish breakout. But yeah, everyone has their thumbs stuck deeply in their pockets right now. It's just sitting there, and maybe NVIDIA will shake them up. The diamond is down a little bit. As I mentioned last week, we did crack for the first time this ascending trend line that goes back to the end of March. You know, it's a small victory, but a victory nonetheless. So this was the lifetime high, fell, cracked it. We've recovered about half that loss. And now we're starting to see a little bit of weakness again. And as far as the small caps go, IWM effectively unchanged right now. Once again, 1, 2, 3, 4, 5 days of absolutely nothing. After this price gap, just hanging out. Don't know what to do. Don't know whether to go up. Don't know whether to go down. No reason to buy, no reason to sell. Just everyone's staring at each other. Overseas, a little bit more action. Here's the EFA down almost 0.5%. We were closed pretty much, I think we closed at a lifetime high yesterday, just eyeballing this. So a lifetime high yesterday. We've given up yesterday's gains. These are small movements. FXI, which I'm very bearish on and which goes directly to the conviction I was talking about before. I was reminding myself today, don't get bored, don't get impatient. As long as it doesn't violate any key lines, you are going to leave this alone. with over 200 days left till expiration. So it's doing just a whole lot of nothing right now. It's basically unchanged, but still on the long term bearishly configured. I was glancing here to see, okay, well, I take this for example, how long did it take for this to play out after it fell and retraced? How long was it from the retracement to the bottom? It was a year. So it took some time. And this will probably take some time as well. As far as China itself, going a little bit more deeply, there are a couple of individual issues that are kind of interesting on the short side that are Chinese. PDD Holdings, which conveniently has the symbol PDD. This is a nice setup, like so. And another one is BIDU, BIDU, which is kind of a weird one because it's been in this range since, 15, 16 years back. It's just this, I don't know if it's going to be a top ultimately, but this has been a trapped zone for these prices for a very long time. But shorter term, we do have this cool little head and shoulders pattern. We broke hard. If it retraced to that neckline, it'd be a very interesting setup. As it is now, I'm not going to bother. And of course, South Korea, always worth a glance with semiconductors these days. The gap is still there. Put it this way. If this gap does not get sealed tomorrow, the overnight action hardly matters. I'm talking, this is day-to-day action. If this gap stays intact through tomorrow, this is a very interesting setup on the short side. You may not have no time. I mean, if this thing just breaks lower because of NVIDIA, I guess you already have to be in it. But it's a mildly interesting setup because of that price gap. A couple of individual stocks worth noting. Meta, META, they are up a little right now, but what's interesting about this one is they opened quite strong and they got quite low earlier today. They basically matched yesterday's low. And some of you may have been following the news about the big court case there, sort of their big tobacco moment. I haven't read the details, but from what I gather, what people were talking about in terms of like they could be on the hook for $1.2 trillion because of this social media addiction trials. I think they got off the hook for like 16 billion or something like that. Zuckerberg probably had that on him. So they're getting off for a pittance. And I think that news created a very strong opening because that overhang, that fear of some potential crazy award vanished. Again, I say, I don't know if this is just one case out of 50 or if this is, worldwide. My impression from a glance at the article was that it was a kind of a universal agreement, but it was very, very tiny compared to what they were worried about. So it's up some now, but not nearly as much as it was at the open. One nice thing in my own portfolio was Intuit. I shorted Intuit either here or here, I don't quite remember. And it was based upon, I'll just recycle this little fella. It was based upon this price gap. This was an amazing gap. So the gap itself was at 373 and a quarter. The peak on Monday was 372.98, so 27 cents away. So I shorted it on one of these 2 days. I don't remember. It doesn't really matter. It fell some yesterday, and it took a hard fall today. It opened quite weak post earnings because they did have earnings yesterday afternoon. I covered earlier today. I will say that it may be presenting itself as an even better short now because we're post earnings and we've got this nice price gap right there. So I took profits on this, but I probably won't do anything today with it. But that price gap represents, I think, another interesting short setup for Intuit. The PCE came out this morning. No surprise, it was 0.2%, just like they predicted. If you get to create the data, then it's kind of nice because this is what it is. I'll tell you this: if I go out for just a simple lunch, casual, just like a couple of burritos or something like that, it's $50 plus for me and my wife, easily. I'm not talking fancy. I'm talking like basic. I don't know how you get $50 lunches with 0.2% monthly inflation, but somehow it's happening. I imagine your experience is the same. Everything's very, very expensive these days. So I don't believe that inflation data one bit, but that's what it is. And the market sold off some based on that, which is weird because it's what they predicted. But the thing is that with TLT, with bonds, we are seeing some selling going on. This is kind of the wall of resistance right here. Besant's shenanigans haven't exactly cured anything yet. And the interest rates, of course, are absolutely essential to watch. With a $40 trillion debt growing all the time, it's rapidly becoming the nation's #1 expense, just handing out interest payments to the bondholders. So TLT is down somewhat. You could see, for example, by way of the mortgage, and this is monthly data. Actually, it might be weekly. That this did not break down as it did here and as it did here. Instead, it has pushed its way out of this potential topping pattern, and it may well strengthen away from that. It does seem to me that interest rates will keep strengthening, and you can see that reflected, for example, in this is new privately owned housing units complete, very long term. This goes back to the 60s, and quite plainly we have the whole series of major rounded reversal tops, which we're in the midst of right now. You can see just plunging away from that. This one goes back even farther, much farther, which is new privately owned housing units starts. And we have here, 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 and here, the reversals on that. So interest rates matter a lot, especially for the biggest ticket item most families face, which is their dwelling. Old SpaceX is continuing to do nicely. My home state of Louisiana has been blessed with their new Starbase project, where they're talking about, I think they said thousands of launches a year, or hundreds. I mean, be off by order of magnitude, at least hundreds. Something stunning. I mean, back in the day, you'd think that a launch pad would have 3 or 4 launches a year, but SpaceX is intending in Louisiana, because of its proximity to the water, I guess, is abundant natural gas resources, as well as a cooperative state government, is going to be the very large, much larger, I suppose, than the one in Texas, Starbase. So that's pretty cool. And for such a richly valued company, and as we all know, a company whose shares are becoming more and more available for insiders to sell, it's doing well. And it's got to get above 150 at some point to enter a new phase of strength. And how long that'll take, who knows? I will say, just throwing this out there, if the anticipation of Anthropic is a positive one, and certainly if Anthropic's IPO is positive, that will definitely help goose this, because AI is an important element of the SpaceX proposition. I would note that the renewed enthusiasm for pre-IPO companies seems kind of spent at this point. These two funds here, which engage in that, seem kind of tired. This is 21 Capital, XXI, and this is VCX, the Fundrise Innovation Fund. So both of these had a couple or 3 weeks of trimming their losses, but as I say, they look pretty weary. So I think that's in the rearview mirror. Now, as far as Bitcoin goes, finally it's showing a little bit of selling weakness. These are the long-term futures on it. And I would point out this line right here. This line is an interesting one. It's simply anchored to this price gap, which is way back in March. I'm sorry, in January. So there's a big price gap right there. And so we fell away hard, recovered, got a little above the line, fell hard again. And this is the basing I've been talking about, where it went bang, bang, and it would refuse to get much below 60,000. Much in the same way that gold refused to get much below 4,000. gold got to like 39.50, Bitcoin got to like 59,000 or something. But the floor was made clear by the market's refusal to let it go much lower than that. And then recently we've had this explosive move higher, which was $20,000 from here to here, and then more recently about $15,000+. But I think for now the move is done, and if we do fall, I think the next bullish opportunity would be to reach back down to around the $67,000 level. So short term, I do think there's a bearish opportunity here between present price levels and key support down at this zone, at the base of that breakout. Here's the cash itself, not the futures, which obviously goes back a lot farther. The futures weren't created until Bitcoin is a pretty big deal. And same setup, different drawings, because this does go back a lot farther. But this shooting star here, and the fact that its peak almost perfectly touched that broken trend line, was a really powerful signal, I think, as to the value of that trend line and its relevance as resistance. And we're starting to reverse away from that some. Big round number effect, the resistance of the trend line, it worked together, and it could be Jackson Hole that really sends this thing spinning down. But I do think that we've got about $13,000 of risk or opportunity, whichever way you see it, between now and principal support down here at the top of that base. Ethereum has enjoyed the same rally, of course. We differently shaped, but generally the same timetable. And we sprung from around 1900 up to around 2500. And you can see here that, 1, 2, 3, 4, 5 days in a row, just nothing, just sitting there. So yeah, short term, measured in weeks or days, definitely bearish on Bitcoin. Measured in months, the jury's still out. If we fall to 67,000 or so and stabilize and start to push higher, well, it's probably going to go a lot higher. A couple of other crypto-ish items here, both of them related to Michael Saylor. Strategy, MSTR, is down over 2.5% right now. I don't think the opportunity is as big here because it's a much tighter range. This has proved itself to be resistance. I think we've got support down here. So I'll be watching it from a safe distance, but this is the equivalent zone here of support because of its own basing action. And then as far as STRC, this is approaching 100, which is extraordinary since it was 70 just a couple months back. But lifetime highs on this is their high yield instrument. And I think the sharpness of the ascent and its price levels now also speak to the fact that this crypto rally is probably done for a little while. Changing gears, and I'm not going to spend much time on gold or silver. I just glance here at the GDX, which is the miners. Big green day on this today, but it sure didn't hold. We've got an inside day right now. We're down about 2.5%, interestingly, about what strategy's down. And the reason I'm not going to go through all the metal charts because the argument is almost chapter and verse what I just said with Bitcoin. I think that precious metals are overbought. I believe in the days and maybe even the weeks ahead they'll soften up. And I think a new, more potent buying opportunity is going to present itself if gold can get down to, say, 4,500, 4,400 maybe, but maybe not. So some selling needs to take place. Not a lot, not much at all. So $150 off of gold would put it back to a much more sensible area for acquisition. But I think today is representative of the kind of potential weakness you could see. The cubes they were red earlier. Now they're up a bit. And there's definitely room in the room here. If we get an NVIDIA rally, we could easily get all the way back up to this price gap without violating that gap. So there's this may well be on Monday a short-term bottom. So there's more upside than downside on this. We would need to crack this to really set things reeling. I'm still short, but not aggressively. As I said, no semiconductor exposure, and my commitment level, my exposure is at about 80%. No big positions at all, just a bunch of little ones, most of which are down today. Some of the things I continue to be short are Abbott Labs, ABT, which is down about 1.5% today. Beautiful setup here. Look at that price gap. We just did nothing but go up for months, and we hopefully have pooped out on that. We did not seal the gap, but we're turning away from that gap. That's ABT. EchoStar down a little, about 0.2%. This is one of those mini rocket and satellite companies that I've got a short position in. Another one, Planet Labs, PL. This one's down over 3 times as much, off 1.53%. And this is what, the 9th day in a row of a red bar, I think. So that's kind of cool in this market. Shake Shack, it's not a rocket company, and they're down about 1.5%. Massive top on this, enormous distribution top, all in pink there. And it's turning away from that a bit, just for fun. I should mark some other reversals here, or at least one. But yeah, this is just a massive amount of overhead supply that is slowing down any ability for it to push higher. Still haven't given up Carvana, and it's starting to behave itself for the day at least. It's a very volatile creature. Green one day, red the next, repeat. It's presently down over 3%. It's tough to lay down where this line should go. The highest I can imagine would be up here for a stop loss, but I'm not keeping things nearly that wide. It's more along those lines right now. But jury's still out on this one. This is a beautiful pattern right here. It started to break down. It sprung higher. It actually opened strong today. So it's a little frustrating, but we'll keep trying. We'll see if it behaves itself. And so that's Carvana. Oops, hello. Lost my place there. Let's go back to what I call Donkey Kong, which is DraftKings DKNG. This one's down about 3.25%. Beautiful rounded top here. Some sloppy price action all along here. A bit of a mess, but I've tightened up the stop like so, and we are turning away. So that one's down over 3%. So that's DraftKings. IonQ down over 4%. And we've got a whole series of tops here. This is the most recent one, and we're starting to slip away like so. Notice none of these are semiconductors. ServiceNow, NOW down just a little, about 0.5%, but a beautiful topping pattern up there. And there's the stop. And one last one, not to betray Elon, but I did short Tesla back on Friday, based upon the fact that at the time it was getting close to this price gap. So I shorted it on Friday with a stop up here. It fell nicely Monday, and it's falling a little bit more today. So I've greatly tightened up the stop loss. I'll just delete that price gap, and my stop loss is simply set to above yesterday's high. So that one's down about 1.33%. NVIDIA is not the only thing reporting. There are other items. There's CrowdStrike, no position, no particularly strong opinion. Dumb guess, I guess it'll probably go up. Salesforce CRM, I am short, and this one is off a little bit right now, and my stop is like so, but you can see pretty impressive top on that one. And of course, NVIDIA, which I'll just say for the umpteenth time, no position, but great interest in this. Enormous potential range. Resistance is way, way, way up here at the price gap. Support, forget about it. It's just, just nothing. So I can't wait for that. And that'll all, of course, drive right into this SMH, which is up a tiny, tiny bit right now. We've still got our diamond. And this tremendous range here, which on this level is the gap plus the midline of the channel. And down here is the base of the channel, the supporting trend line. Big range there. So excited, eager, not really no conviction in terms of direction for NVIDIA, but I know some of you do, so good luck out there, and I'll see you tomorrow after we're past all this and we can see what happened. Thanks for coming by. I'll see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We're back. You're watching Tasty Live. This is last call, final 30 minutes of the trading day, but not really today because NVIDIA earnings are due out after the bell. So an hour or so more of the session. While we get ready for those NVIDIA earning reports, we're going to talk a little bit with Terry Igioma here. She's the founder of Trade and Travel. And I think it's actually a good guest to have on for today. So many questions that you see and receive as someone working on my side of the business. Is NVIDIA going up? Is NVIDIA going down? How to make a quick dollar here or there? That's what most of the tweets are, believe it or not. Terry takes a little bit of a different approach, right? She's all about process and using the process to build a sustainable trading plan that ultimately helps people get towards financial independence. And that's what we try to do around here. We want people to take control of their financial destiny. You don't need to hire an advisor to place these stock trades for you. You can do it yourself with the right knowledge and skills that you can grow over time. So Terry, welcome to Last Call as we get ready for NVIDIA earnings.
Thanks so much for having me. It's a pleasure to be here.
NVIDIA is kind of the perfect teaching stock right now. Everyone knows its name. Everyone knows when it reports. Everyone has an opinion on it basically at any point in time. So, let's take a step back from this right now. When we're thinking about NVIDIA as a perfect stock to teach, it's exciting. There's a lot of liquidity in it. It's tied to the AI name right now. What does NVIDIA to you these days reveal about how beginner traders and retail traders are engaging with the market?
Actually, I want to teach from NVIDIA how to make risk management decisions. Today, I had to have so much discipline not to trade because we know that this is going to be a highly volatile day. We don't really know what's going to happen. We've seen NVIDIA have great earnings and then fall. We've also seen NVIDIA have great earnings and do well. It might even be a case of we have great earnings and because it's fallen so much in the past, today it has a pop. But all of those things we would be guessing. So as a retail investor, I actually would hope people would have more risk management today and maybe be more cautious.
So how do you decide then? How should a newer trader who's focused on risk management decide whether or not to participate in NVIDIA at all? If it's buying stock, selling options, combination of both, in between?
So in my risk management plan, there's a couple things I look at. Reward to risk is one. What's the reward versus the risk? And this one, we really don't know. Earnings is such a speculative event, you don't know whether your reward to risk is high and you can't calculate it. So for me, that means in my trading plan, I'm actually not trading because I can't calculate the reward to risk on earnings. On earnings days, I actually don't trade, but I look at all the competitors to the stock. So I'm looking at, okay, Palantir, Micron, all the other AI stocks. And I'm thinking about, okay, after earnings reports, I'm going to see what happens and then I make a trade. So I've looked at the chart, I've seen what's going on in those different companies. And then after the event happens, I'll look and say, okay, now do I want to get in or do I want to get out? If it falls, maybe that's a big opportunity. So as a trader, I'm thinking about, I'm not trading today. I actually sold out of some of I'm in Meta. I sold Meta, and we can talk about that too, because they had an event today with the settlement. I sold some of my Robinhood because I was up in that. And now I'm sitting on cash ready to deploy it, but after the event today.
Yeah, after the event today, I mean, you mentioned Meta here for a second, and before we get there, NVIDIA options themselves are pricing in a 5.5% move here right now. You seem to think that may be a little bit of a light pricing given how the stock has moved in the past, and staying away from this seems to be the better perspective from how you view things.
Well, so you're looking at the chart here.
Let's pull up NVIDIA. Yeah.
Let's look at NVIDIA's chart and So when I'm looking at NVIDIA's chart, so I'm seeing over here, there's from like a high of 225 to like 235 of where it could go up, it could pop and come here. Or if we're coming down in the way that I'm looking at charts, like there's something that could happen here around 205, but it could come all the way back down to this like 195 to 190 range. So to me, I'm thinking the reward to risk on that, on the upside, we might get 20 points up. On the downside, we might get 20 points down. That's like a 50-50 for me. And when
that's how I see it too. I'm going directionally neutral here for this, actually. I sold the put spread and call spread on either side of those levels that you just mentioned.
See, okay, and so that's the other part. So on your side, you're saying, well, then let's make a range. If it goes anywhere inside of that range, then I make money. If it goes out of there, then we'll see. But on my side, I'm thinking, okay, yes, you could make money because of the volatility. The options premiums are a little higher right now, so you could make money. But if I guess wrong, I could lose a lot. So I just rather not trade it and then say tomorrow, let's take the trade.
All right, so let's switch our attention here to Meta because it's been one of the top traded tickers on our platform today. In fact, when we did the midday update here on the show, it was the top traded ticker above NVIDIA, which is unusual on an NVIDIA earnings day. But there was that settlement here today, and there's all these new rules in place that Facebook or Instagram, Meta will enforce for its platforms for teenage and child use of their products, Instagram, what have you. Obviously, today the stock's up a little bit here. It isn't up as high as it was before. A lot of folks have been piling in, trying to chase this thing to the upside all day. 145,000 contracts traded in the 580. This is more than anything else on the board. You're seeing more options volume here in Meta today than anything else. So when you see a reaction like this to a piece of news, is this finally over? Is the albatross off of around Meta's neck? Can it finally be free and start to trade like a Mag 7 name again?
It can, however, we're still going to wait for NVIDIA's because that's going to impact Meta. So right before this news, it had popped up to around 600, a little above 600. And then we found out earlier this week, like on today is Tuesday, last week, we found out that they were having the settlement and then it dropped down to like 525 and it dropped right into, I see you on the chart here. It dropped right into this buyer's level where that U shape is. So around 520 to 540, it dropped into there. That was the buying point. Today is actually not the buying point. The buying point was when it dropped after the news a few days ago. So today, with the settlement being over, we can go back up into the 600s. But I still think, like, if you zoom out a little bit in this chart, zoom in. So you see how today it had this little pop up to 600, but it hit the seller's level. If you come back, like if your mouse comes back to maybe about a week ago, you see there's a bit of a U shape. Yes, there. So it hit that level and there's some selling activity here. That's the high for now. So after NVIDIA, we can see where the whole market goes for AI and the Mag 7s, and then see if we can go back up to all-time highs for Meta.
Yeah, there's a shelf there. Like 600 seems to be a bit of a ceiling right now in price, and couldn't get through it today, even with the good news that they're losing $16 billion or something.
Right. It went up this morning and then pulled back down again, but it couldn't push through. So for the way that I'm playing it is I was selling puts on it, and that's what I took profit on last week before this news. And when it came down to the 625, I was of the mindset of buying calls. But at this point, I have a feeling it's going to come back down before it goes up. So I'm waiting before I sell puts again.
So I want to take a step back here while we have you for just a few more minutes before we, flip over to Gus Downing. He's joining us here for the second half of the show today. I remember starting to trade early, and I was taking a lot of big swings, and some of them worked out. Famously, I had a really good Gilead trade over a decade ago when they developed their hepatitis C drug. But somewhere along the line, my process and mindset shifted from I need to go hit a home run to I just need to start hitting a bunch of singles. And if I get those runners on base, eventually the runs will come in. How do you help people flip the switch from thinking I need to make a lot of money on this particular trade to thinking about I need the next 100, 200, 500 trades to yield net positive results?
In my story, so I have trade and travel because I quit my job as an assistant principal and started traveling. And what I was using the money for was those small base hits. So how do I afford a hotel room with trading? How do I afford to buy my flight with trading? And I found when I did those small, consistent wins, my account started growing. My biggest loss at the time, I've had bigger losses now, but my biggest loss at the time was playing earnings. I had played earnings of a Pandora stock, and overnight ended up losing like $26,000. And as a teacher and educator at the time, I thought my road was going away. Like, oh my God, I'm dying. But when I tried to just make big wins, and I've had big ones, I've made $1 million in a day, I've done all the things. But when I try to make those big hits, I often lose. But when I try to make the small ones where, hey, I'm just buying, $200, $300 a day, that pays for my income or enough to pay for this flight or this thing that I want to do, that's when I actually surprise myself and make more than I was thinking.
So there's so much trading content online these days. I mean, we see it all the time. People refer us to videos like, is this true? Is this how you trade options? We're like, no, that's what? No, don't do any of that. How do you separate and how do you guide people towards content that's really educational versus, I'm going to call out our own industry here. There are a lot of folks who simply try to get people excited to trade, hand them fish, and don't actually teach them what they're doing. And ultimately, it leads to ruin.
Yeah. For me, anyone who's just calling out what they think you should buy and they're not teaching you how to do it is someone that I wouldn't want to follow. The ones I want to follow, which is like me, is someone who's teaching you their trading plan. So teaching you how to read charts so that you yourself can figure out when's the best time to enter and exit. People that are teaching you risk management. So when do you put in your stop losses? How do you calculate your risk to reward ratios? And then people that are talking about how to pick healthy companies. So not just chasing a trend or doing a penny stock, but how do you pick a healthy company that you probably would long-term invest, but we're going to trade in and out of it for income. So if they're talking about those things, then I think you can listen to them.
So let's turn one last question here. Let's make it practical for people. Someone wants to listen in today. They're listening in today. They want to learn how to trade. What's the first thing that you would be teaching them as someone fresh, green behind the ears? They've never seen a stock chart before.
First thing I would teach them is, one, I tell them go get my book, The Risk Worth Taking, because it'll teach you like a whole 7-step trading plan. But then the other part is how to pick healthy companies. I feel like a lot of people miss just from they pick the wrong companies. And then the second part is the risk management, how to put in a stop loss to protect yourself, and then also how to look at some reward to risk ratios ahead of time.
Right. Can't learn how to drive the car without learning how to buckle up first. Otherwise, even that first small bump could hurt a good deal. She's been Terry Igioma. She's of Trade and Travel. Very much on board with that financially independent, maybe not even retire early, just enjoy lifestyle. We'll be sure to have her back. Yeah, exactly. Enjoy yourself. Terry, thanks for coming on here on this NVIDIA earnings day. We'll be sure to have her back again in the future.
Thanks so much for having me.
Folks, we're about 15 minutes away from this close here. That was Terry Igioma. Go check her out, Trade and Travel. For the second half of the show, we're going to have our very own Gus Downing joining us here. Gus, welcome.
Thank you. Pleasure to be here.
I can see that this is a market that's kind of just meandering right now. into the close. I want to say limping there. We are up a touch, right? 7,700, 7.25 points. I guess when Ilya and I were speaking, we were down 2 points on Back to the Futures a little over an hour ago. So there is some improvement. Okay. Is this going to be the uncorking of the dam, right? We've clearly been held up by NVIDIA earnings. Are you looking for NVIDIA earnings themselves, or the fact that maybe the market may be able to breathe on the other side of it?
Yes, definitely the latter of the two. I'm mainly just frustrated with the holding pattern sort of thing that we've had going on this week. And to the market's credit, this last hour is what I expected for the full day today. We did get some volatility through this morning. Meta resolves their lawsuit. Abercrombie and Fitch makes a move like a tech company. It's there's been some tradable parts of the day today. But yeah, this last hour of stagnation is kind of what I was expecting, and I would say far more than NVIDIA earnings, regardless of results. I'm just excited to have everybody, have the uncertainty, the fear of this binary event be lifted out of the market and get back into a little bit of normalcy.
Abercrombie and Fitch, man. I mean, I followed the 2001 Live Twitter account. Yesterday was the day that Ilya died in 2011. And so I remember watching MTV wearing my branded Abercrombie and Fitch shirt because that was like the cool thing to wear when I was in 7th grade, watching that on MTV. So interesting. Odd chart. Yeah. Did they AI Abercrombie and Fitch? Maybe they changed their name here. Guys.
Yeah.
Okay. So outside of these, right, outside of this though, I'm curious what you think about the semiconductors on the other side of these NVIDIA earnings, because it feels like as much of this market cares about NVIDIA, we also care about the second order effects. Are their margins staying intact? Are their margins shrinking because they're paying an arm and a leg for the chips right now? If that happens, well, that's probably good news for Micron and SanDisk and what have you. But where are you looking beyond NVIDIA to see the true temperature reading of this if the market's actually going to enjoy the earnings results?
Sure. I think that's a great question. I will say something that just caught my eye about an hour and a half ago as I saw OpenAI came out and announced that they're rolling out an AI chip to compete with NVIDIA. Apparently, it is very competitive with NVIDIA's current Blackwell systems. So I highly, highly doubt we hear anything about that on this earnings report. The news is just too new, and they probably wouldn't want to acknowledge a competitor in any case anyway. But it does have me interested for future NVIDIA earnings reports and what may come with guidance if OpenAI is going to break into this. Not only, I mean, it's a double whammy there because OpenAI is also a giant revenue stream in for NVIDIA. So if they can become chip sufficient, self chip sufficient, so to speak, that would obviously put a dent in their balance sheet. But yeah, I mean, I think the memory names, I think you really hit it on the head. I'm particularly interested in what will happen with the SanDisks and Western Digitals of the world. We kind of, we had this parabolic run in SanDisk, Western Digital. Pick your favorite hard drive company. There's a few, Seagate, obviously, in that bucket as well, and Micron in that bucket as well, obviously. And things have kind of quieted down a little bit. We haven't been talking about these. You don't feel obligated to talk about these every day the way that we did for a month or two there during the big run up. So I'm curious about how NVIDIA's call may have bearing on these companies, and if it can ignite another bull run, or if we wind up completely indifferent. I don't think NVIDIA could hurt them too bad. But that's where I'm going to be looking to see how the broader market digest this, because obviously we are going to expect to see movement from just about every corner. I went to put on a position in get long in Dick's Sporting Goods yesterday. People were saying you got to wait till after the NVIDIA earnings call, and I don't know. I don't know about that one. I don't know if NVIDIA has the propensity to move Dick's any more than it has the propensity to move the entire market and Dick's along with it.
Probably not. That's why actually today when I was going out and looking for trade, we're doing our trade idea of the day here, Gus. I went into a slew of the defense contractors because the defense contractors are probably not going to be touched by NVIDIA's earnings in any substantial way. Bank of America, I'm seeing BA. Boeing is sitting down near lows. I put on a short iron condor, which sits below the 3-month range lows, sitting up just underneath the 3-month range highs here. I'm not too worried about this thing jumping up towards 240 in like a heartbeat without a specific catalyst in mind. So there's that. LTX, I have this little screen that I like to do, or I should say LMT for Lockheed Martin, where I like to look for buying opportunities in stocks that are below their 1 month, but sitting above their 50-day average. So maybe a pullback within a healthy trend. And if it has, a good story and a good balance sheet to it, then why not try to buy a dip? LNT here, looking a little bit long as well. 23 days to expiration. Did this as the short iron condor find some stability around the 1 month? Not necessarily going to scream higher. But then there was RTX Raytheon, which feeling a little bit better. This is a different chart. This is a chart where the 5-day moving average, the 1 week, has been above the 50 since June 12th. If you compare that to something like LMT, for example, it's only recently started to get a little bit more bullish posture, where on July 23rd is when you get your 5 over 50 crossover. So keeping that in mind with RTX, I went in there for the Super Bowl, the double bowl, short the 200, 202 and a half, long the, short call spread here, flipped into a long call spread because it's Super Bowl, 225 and a half, 225. That was in for a penny credit. So net, I'm viewing all three of these trades as kind of like a compendium, a little package here, a little under $4 in credit received for the 3 trades. So in 2 weeks' time, I'll check back in, and hopefully that's decayed down to about, at least $1.80 or so. I could take those all off, but I'm not worried about having these on right now going into the teeth of NVIDIA because, LMT, RTX, VA, they don't really move around NVIDIA headlines the way that a Micron, a SanDisk, a Western Digital, a Seagate does. There, Gus.
Yeah, absolutely. And yeah, I think trying to, there's certainly credence to the idea of trading these other companies around NVIDIA earnings if you feel that you have strong convictions. But if you don't have to force a trade just because the Super Bowl of the week is NVIDIA earnings. There are so many companies that aren't going to be in this affected bucket. And, sure, if NVIDIA crazy disappoints and goes twice the expected move and it's down 11%, we would expect to see the entire market down tomorrow, and perhaps there would be marginal implications that would trickle out to these companies. But there's plenty of meat on the bone that has nothing to do with NVIDIA. And another part of the reason I'm not really racing to get any exposure to these earnings is just because I have plenty already. When I sit here and look at my portfolio, I see Meta, Microsoft, Broadcom. I have long positions open in all three, and so it's IBM. I got a long position as well hanging out in here. So there's plenty of tech exposure here. I'm rooting for NVIDIA's earnings, even though I have not put on a trade with NVIDIA's earnings in mind this entire time.
No, and I haven't, like my IBM position right now, and that's down to 23 days. We had this bounce a little while back here in early August where we had recovered following that big 20% sell-off. They gave their pre-earnings warning. And then we got to the earnings report and the bad news was already priced in. So it bounced back to where there was a low on approach to the 50-day moving average. I love that when I get a horizontal level with a moving average here. So thinking that maybe the market would stay pinned below 240, 245, I went for the 245, 250 short call spread. It's now down to 89 cents. Let's just take a look for what that was in for, Gus, because that obviously matters a lot. It was in at 152. So in an ideal world, the decay is going to get you down to 76 cents or so, 50% profit target. Right now, we're 40-ish% of the way there. So a little bit more in an ideal world. Granted, if this doesn't work today, Gus, let's say IBM bounces, all of a sudden it's trading at 240 tomorrow. That probably means that NVIDIA did something that's going to have just so many domino effects through a Dell, through an Intel, through a Broadcom, as you know, Google, pick a name out of the hat. Yeah, it's going to be everywhere.
Yeah, absolutely. And that's exactly it is, am I if NVIDIA comes out here and says we're gonna buy $10 billion of SanDisk chips, am I upset that I didn't miss out on SanDisk, or that I missed out on that SanDisk long position? Probably not. I mean, yeah, it's gonna, these things have spillover effects all the way out into the broader market. So yeah, I just, as long as my tech exposure is on, and believe me, in this environment, it always is. I'm more than content to just sit on my hands and see what comes my way here. But tomorrow has the potential to be a day filled with management. Should NVIDIA not perform here, which I will say, if I had to trade these NVIDIA earnings directionally, I would feel inclined to get short. If for no other reason than it's clearly the contrarian stance. NVIDIA trading down a little bit today as well. Pretty much just giving back yesterday's gains, plus a little bit extra on the top, but. I have no convictions about NVIDIA at all here. The only time I ever really want direct NVIDIA exposure headed into earnings is if there has been some exaggerated run in one direction or the other into that earnings report. If everybody is hype, and we see things tick up for the entire week leading up to that report, I'm going to say, well, could NVIDIA really impress enough that they justify this? It would be very hard to do so, and vice versa. But on these days when it's just, normal market action, kind of just been consolidation out of NVIDIA yesterday and all of today, I'm more than content to sit on my hands.
Yeah, I mean, we're stuck at the midpoint of the range over the past 3 months. Go back to the beginning of May. We haven't been lower than 190 or above 236 or so. And we're currently trading at 209. So not quite the midpoint, but maybe $3 away from it. I'm very much with you. It doesn't even, to a certain extent, everyone expects NVIDIA to be good. we've had all the hyperscalers, we had the semiconductors, we've had the semi-caps. We know who their customers are, and we know what those customers are spending the money on. They've told us, hey, we're spending this much money on GPUs. Well, who are they buying the GPUs from? NVIDIA. Okay. NVIDIA has beat in each of its past 6 reports, 6 for 6 on EPS and revenue, down 5 of the past 6 reports. We ran this little quiz here, production team, on our YouTube channel earlier today. Over the last 8 earnings reports, how many times did the stock actually fall the day after? The correct answer was 6 out of 8. Hasn't disappointed you on the revs or EPS side across those numbers, across those 8 instances either. So for me, if this thing jiggles, wiggles, goes a little bit lower here, Glenn, it's going to crap out the Super Bowl that I put on a few weeks ago, which is 2 days ago. But at the 9 days for this particular earnings cycle, this is the trade here. And it basically means NVIDIA doesn't clear out the highs or clear out the lows as a result of this particular report. Yeah, and I'm comfortable with that.
Yeah, absolutely. And I think that's very reasonable. I mean, yeah, as we just discussed, I mean, imagine if somebody came to you at the end of that bull run at the end of April and said, you could go neutral NVIDIA right now for 4 months. You would have thought they were so crazy, but here we are. We bounced around and all this excitement and we wind up right back where we started. And I think you make a great point. I mean, you say it kind of casually, but it's totally true. Everybody does expect NVIDIA to be good. And it's why I love efficient markets and the brain game of all this. But if everybody expects NVIDIA to be good, that information is therefore priced in right now, and ergo NVIDIA must be great if they are to push shares higher, which is why we see the 6 out of 8 times, as you just mentioned, shares wind up coming lower because good is priced in. So when you come in pretty good, that actually hurts you, even though you are above the benchmark.
Is it even good? It's 99% EPS growth expected.
Yeah, yeah.
What more? It's like Wong at the end of Avengers Endgame. Like you wanted more. Like, what more can this company do for you?
Well,
it's
yeah,
doubling
exactly.
its earnings.
Well, yeah, and we've been talking about NVIDIA the way we do right now for over a year now. I mean, it's incredible. And yeah, we're talking about 100% year over year left and right. I mean, lots of metrics are pricing in greater than 100% year over year growth. And they can slightly exceed those, and it's not going to help shares because everybody's expecting them to slightly exceed those ridiculous price targets. So, yeah, it all just comes down to information and sentiment, and that sentiment will find its way into the market. So it's always something important to keep in mind. It's not, I mean, like you just said, if you had just said, if the past 8 earnings reports, you had said NVIDIA is going to beat earnings, so I'm going to get long, you would have been wrong 6 out of 8 times, even though you were correct that they were going to beat earnings every single time.
And that's not the bet. Exactly. You go to Polymarket. If you want to bet on NVIDIA beating earnings, it's not necessarily something you want to do directly in the market. Hey, we have the final 2 minutes of trading here. Look, if this was not an NVIDIA earnings day and the market wasn't sitting on tenterhooks waiting for this, S&P looks like it's consolidating above a former level that highs were reached, 76.50 or so. It's been a few days down here. The chart doesn't look terrible, the same way the Russell doesn't look terrible. But it also doesn't look great because it feels like a little top, below 3K in the Russell is going to be a problem, right? If the NASDAQ does not climb back through 29,400, 500 here in the futures market over the next, half an hour or so, that's a lot of time sitting below your 1 week, your 1 month, your 50-day. And it's a breakdown, consolidation after a breakdown, and everything else starts to look a little soft too. So I wouldn't be surprised if the indexes are really jumpy here because it's not just NVIDIA, right? NVIDIA is going to cause the semis to move, the semi-caps to move, the software names to move, IGV, all those in that basket of goods. Yeah. Watch the indexes. So what's the timing for all this here, folks? Let's just level set this quickly. Gus, we're very fortunate to have you here. After last call ends. Got it. We're going to be going over to Ilya for a quick, we'll call it abbreviated 15 minutes of overtime. 4:15 Eastern, 3:15 Central. Karsan is joining the show here today for the live NVIDIA reaction. NVIDIA earnings come out somewhere around 4:20 to 4:30-ish Eastern time, 3:20 to 3:30 Central or so. It's possible that they come out just as overtime would theoretically be ending. So in the event that NVIDIA earnings come out at 4:30 or later, I will be sticking around to guide us through that reaction, to talk through it and prep us for then what will be the earnings call, and then the futures market open at 6 p.m. Eastern here, Gus. So we're having me continuing for another half an hour, at least another half an hour. It could be longer than that, but we're going to have Ilya up next and then Karsan here to break down those NVIDIA earnings report and what it means now for a market on the other side of OPEX, on the other side of expiration, getting ready for Jackson Hole, because we have not cleared the major event risk for this week, even once we get through today's earnings report. Gus, last 10 seconds of the day, you get the final word.
I get the final word. I'll say this. I don't care. I don't really care about Jackson Hole at all. that's been my stance on the situation. Interested to see what Worst says, but he's told us he's not going to say anything. I think expectations are too high, and I'm expecting a nothing burger at Jackson Hole.
76.92. The market goes nowhere today. Absolutely flat. Did you do the short iron condor like TP? If so, nice job. If not, like me, tough luck. Otherwise, stick around because overtime's coming up next.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
It's finally here. It's Christmas morning. Oh, wait. Well, it's close enough. It's NVIDIA earnings day. We're watching overtime here on Tasty Live. Well, you're watching overtime here on Tasty Live. We're doing the show itself. Ilya, he's Ilya Spivak. I'm Chris Vecchio. We're here for the final 30 minutes of this trading day as we wind down this market, which has been waiting patiently, calmly, not really doing anything at all for a few sessions now, on approach to this NVIDIA earnings report, getting ready for Jackson Hole. Well, maybe not Gus, but everyone else seems to be waiting for NVIDIA earnings.
I'm pumped for Jackson Hole. Just let's just be clear.
We know. So, when will these earnings come out, though? Okay, earnings are due at around 4:20 to 4:30 Eastern. We have seen them in the past leak past 4:30 Eastern, about 28 minutes from now, when there was a minor reporting issue. Typically, they're at around 4:20. Now, how is this going to work for overtime today? Ilya, you're here for the next 12 or 13 minutes, so I'm going to keep it quiet in a moment. But after that, Karsan from Kai Volatility is joining the show for the final 15 to talk through the flows in the market, what's been going on post-OPEX, post-Vixpiration, and how the flows may unfold the next one or two sessions as we think about Worsh's speech on Friday morning, post-NVIDIA, pre-Jackson Hole here. So Ilya, when you and I were talking on Back to the Futures today, we found ourselves at a market that was 2 points underwater. Now we're 6 points above water here, rallying up a little bit as the market's going on. So we got a close of 76.92. We're up at 76.99 here or so. I'm going to keep an eye on NVIDIA to see if there's any early earnings release, which is always a distinct possibility in these markets. But Ilya, talk to me. This market today, is it as boring and dull as I think it is because we're just waiting for NVIDIA?
No, it is not. Mostly it is. I think if you were to look at almost anything, you would say digestion. And you'd see it in the metals. You'd see it in Bitcoin. You'd see it in the dollar. There's one place you wouldn't see it. And I noticed it today, and I went into trading it pretty much immediately. There's a disparity today between what we see as far as market conviction in ZB futures and in the ETF equivalent. We talked a little bit about this on Back to the Futures, but if you look at TLT here, and keep in mind, this is not the 30-year bond, it's the 30-year-ish bond because it's 20 years plus a blend of maturities.
And not even really. It has an effective duration now of under 16 years. So
right. So you're getting a little bit of a different sort of view. What you get in ZB doesn't quite look that convincing yet. You're kind of grinding through. You're trying to round the bottom. It's not really terribly convincing yet. Although since I bought the pop down there to the low, I'm actually in this because when I saw it test that bottom and it couldn't even hold it in today. I looked at this with just a chart analyst's eyes and said, positive divergence on the oscillators, can't hold a low, stuck inside the range. Let's see. So I'm a little bit long going into today. But then you look at what TLT is doing. And TLT has made this breakout.
Before we get to TLT, we need to talk about some of these earnings that have already come out here today. You're going to see Salesforce trading in at 221 now after 206 close because their EPS came in at 590 versus 327 expected. That's an 80% beat. Revs were basically in line at 11.345 billion versus 11.32 billion. So it is still a beat there, to be clear. But that is a nice little move. For me, that could be bad news because I'm in a short iron condor here, Ilya. We had seen a market, and I talked about this earlier today, but we had seen a market that had run up fairly quickly into former resistance up near 210 or so. So I figured, okay, we're up near 210. Let's put on a short iron condor. Maybe this thing keeps going up, but perhaps it takes a breather first. It's clearing that level right now. So up at 220, I'm still not in trouble because my short strike is up at 230. However, tomorrow morning, depending upon what's going on in this right now, if this thing is settling in here, the short put spread side of this, right, trading it at 165 right now. If we wake up tomorrow morning and this thing is trading for 80 cents, 50 cents, 30 cents, there's no reason to hold the short put spread side anymore, right? There's still 23 days to go, but why would I hold a $10 wide strike, which would I collect 80 cents in credit on a $10 wide strike ever? No. So time to get out of Dodge. So there may be a little bit of management going on tomorrow. The 230, 240 side could be tested. I may want to just get out of this and reset and see how this settles out. Okta is also out right now. OKTA. We're sitting in at $1.05 versus 96 cents expected. This closed at $134.87. It is now up at 150 here. Nuclear, energy, AI. We need more power, don't we, folks? We also had a report, by the way, right before the closing bell that the Trump administration approved plans, and I want to make sure I got this right. It is related to nuclear here. U.S. Army has awarded $2.2 billion to 5 companies to build and operate microreactor nuclear plants on 5 bases moving forward. It does appear that Okta did get one of those contracts. So again, 150, 151 here. That's a nice little bounce after closing at 134. Hey, if you're tuning in, watching us live right now, make sure that you like and subscribe. We're getting ready for those NVIDIA earnings. Do you think they're going to come out good? Tell us in the chat below. How are you trading them here? Ilya's not directly trading the NVIDIA earnings report himself. He has his smattering of, well, other trades out in the tech space, so to speak, and at the index level. I am trading it directly myself through that short iron condor, sitting out at 9 days to expiration because of the historical move that we've seen, where it's about just under 5% lower a week out over the past 6 reports. A good number here is not good enough for this stock right now, where we've seen it beat 6 reports in a row on both revs and EPS, and it is down in 5 of those 6 instances the next day here. So, Ilya, this obviously is going to be the big thing that guides the markets here the rest of the session. One last earnings, though, because actually I see a few more have just been released.
No, it's busier than you might expect going into a big announcement like this.
Synopsys is out here, 404 down from 410. They beat on both 391 versus 367 expected, a 2477 billion versus 244. Just taking a quick look at the 2 days to expiration, the implied move is bringing you down about $38, which would bring you to close to 370 or all the way up to about 450. So trading in at 402, if you played for the inside move, good on you. I tried myself, Ilya, SNPS here. I tried myself getting short a call spread a few days ago, the 425, 430. I could not get filled. That thing would be trading pretty nice right now. And it's one of the bummers when you try to go into these names that just don't have a ton of liquidity in them. Sometimes the spreads are too wide and no market maker meets you there, which is why if you're on our platform right now, and if you head up to the top right-hand side, you're going to notice a little arrow right here, Ilya. You see that little arrow right there? Folks should click on that arrow, because if they click on that arrow, out pops the overview tab here. There's a liquidity gauge. There are stars there. I personally try not to do anything with less than 3 stars if it's a single stock name, because you can Hotel California yourself into a position where all of a sudden you get filled, you want to get out. No one there is there to make the market for you. And what happens?
Well, and frankly, even if somebody is, the spreads on those things make the transaction costs high enough that the trade may not even make sense, even though the setup looks good. If it's too expensive to do, you keep doing those kinds of trades, you're going to end up losing money. So
fees, slippage, it's a nightmare.
I mean, we had a great conversation with you and Sinclair this morning from whole tactical asset allocation over in Chicago. He's been doing basically the theoretical physicist's approach to trading options for 25 years. He has a PhD in theoretical physics. And one of the points he raised was, look, if you nickel and dime illiquid things, you might end up making money on the trades and then not making money overall because the transaction costs eat all your edge.
There it is. And that's all there is to it. It's why when you're looking at some of these shorter dated things, is it worth to pick up 50 cents, on a $10 wide strike when you factor in fees and slippage and transaction costs? Like, I actually could only make like 10 cents on this. And do I really want to risk $10 to make 10 cents? Absolutely not. Let's move on. Agilent Technologies.
Why
they're out. $1.62 versus $1.49 expected. 155 here at the close, 160 here after hours. The expected move was not reflected through the end of the week. You talk about thinly traded stocks, this certainly being one of them, only 23 days to expiration. But the expected move basically brought you to 170 or down to 140 on your strikes. And so we're staying with inside that expected move. Lastly, that I see here, Everpure and Viva have both come out. These are really small companies. You're not going to see much trading volume in them overall, but we can go over to P for Everpure. Inside the expected move, yes, pinned 70 cents versus 58, closed at 108, now at 107-ish. Okay, and Vive, which is Viva Systems. I don't know anyone trading this. I'm not trading this, but those earnings are out 235 versus 222 expected. Shares are up to 251 from 244 here. So a little bit of a smattering, mostly good reactions here, Ilya. Salesforce is far and away the most interesting one thus far that we have on the board, not just because I'm in a position.
What a time to report earnings in the kind of small hours of anticipation for NVIDIA, where you go, hey, maybe let me just squeeze in here, and then I'll catch a little bit of the positive bid before the number, and who knows what happens thereafter.
And this is one of those stocks where, at least for me, because I already had an existing CRM position on, I wasn't inclined to trade around the expected move for it. It's testing the expected move for what it's worth. Going into today, if you did the 230, 2.5, 235 short call spread with the bracketed, we'll call it 180, 177.5, you may have collected around 35 cents of credit here. Before the close. That's not going to be the case tomorrow. So we will see what happens next. But
do take a look at TLT before we come out here,
sure,
so we can circle the story there. So there's that breakout that you didn't get in ZB. And if this is any kind of indicator, when you go to look at a call vertical on this today, it's paying 5-to-1, 6-to-1, 51 days out. So nobody is long this. They're giving it away.
No one's long this. And I think we should just reiterate the point that we raised on Back to the Futures earlier today. If you go to the CFTC's COT report right now, the Commitment of Traders report, and you were to look up positioning for commercial versus non-commercial positioning, right? Commercials are the folks who are hedging. Non-commercials are the folks who are not hedging. Speculators, traders are the non-hedging type, right? They are the non-commercials in this report. The commercials are the most net long that they've been since the October 23 lows. The speculators are the most net short they've been since the October 23 lows. So positioning is exceptionally stretched right now, at least at the long end of the curve. And it is something that we have to keep in mind. I know I'm
reminds me of
short
oil
bonds.
in January is what it does. Oil in January.
Oh, I hope not. Ilya, it was a quick 15 with you here today, but we do have these NVIDIA earnings coming up, and we promised the good folks that we be joined by Karsan here for the second half of the show. So we're going to bid adieu to you, and we're going to welcome Karsan here to talk a little bit of NVIDIA earnings in this post-OPEX, post-expiration world. Good to see you again.
Hey, Chris. Good to be back. Good to see you.
I'm certainly feeling on tilt. The Celsius, the caffeine, it's all working for me, and I'm excited. But before we get to the actual NVIDIA earnings themselves, those might be out in 5 minutes. Those could be out in 15 minutes time. Let's talk about how this market has calmed down the past few days, post-expiration and post-monthly OPEX. Is this still all part of the plan, or is NVIDIA basically like the little Dutch boy with his finger in the dike, and once the earnings come out, here come the flows again?
Yeah, it's the latter. And let me explain why. So what happens in vol world is when you have a big event coming up, that vol is much higher, right? That event vol. And in front, and we have several events coming up, right? We have NVIDIA right now coming out, and then we have, after that on Friday, we have Jackson Hole, right? And so when you have all these things sitting out there, the vol in front of it is incredibly cheap relative to those things. So it is natural for people to sell the high vol, buy the low vol. Not to mention just at baseline, so that you get vol compression there, but just at baseline, people don't want to make a big move before the news comes out. So this we see this a lot. Pre-event, you get massive vol compression. I would not read too much into it. We are coming out of the summer. Again, I still strongly believe we're at a basing of vol writ large that should work its way higher as we come out of the summer. Particularly, and I've said this before, post-election vol is way too cheap. There is not a big kink there. Usually would see a kink. And there's a tremendous amount of risk in vol for post midterms. We could get into a deep dive. We've talked about that somewhat already, of why and all the things that make that midterm vol cheap. But I'll start with the most obvious, which is if Trump loses, do you think there's going to be a recount? I think there's about 100 delta of a recount if that happens. And we've all just gotten completely immune to that reality. So just know that we could get a meaningful period of volatility at post, not to mention there's a big involvement of the administration, as all now know and see, in these markets and pushing these markets, and their plans, as I've talked about, this coming year or two are significant. They are integral to the action in these markets. And if you kind of neuter this administration by having them lose both houses, that is a major risk for the market, more than usual. So I think people are dramatically underestimating the risk to the markets of this midterm. And so I think as we get closer, people will begin to wake up a little bit to that vol will go higher. And a lot of that is because people, see no movement in the summer, see the placidity, get comfortable, and fear levels and, sentiment goes to a point where people are like, what me worry, in the words of Alfred E. Newman, we are actually, I think people are going to start waking up and the anxiety level should go higher as markets kind of free up a little bit. But that's big macro. And right now, I think is an important move that's likely to come out of NVIDIA.
So NVIDIA right now, about a 5.4% move, Preston, through the end of the week. Taking a look at the skew positioning, it doesn't feel like the market is a little complacent here. Even in the 0DT or the 1DTE NDX options, there's still a bit of call skew right now. What would be the worst case scenario here for the broader market so that some of this dispersion dissipates and all of a sudden the index is actually moving violently again? Is it going to be NVIDIA itself? Is it going to be like a second order effect where NVIDIA nukes semiconductors or semi-caps or the Mag 7? That's really where the flows will be.
Yeah, important to note, we've been pointing this momentum kind of factor for a while here. It has been breaking back down. This is the biggest reason why NVIDIA's results matter today is, what is the outcome for this will help determine what is going on with momentum writ large and in this kind of semi space where there has been quite a bit of pain throughout the summer. And even though there was a kind of a bit of a bounce here, that's that Leo Brenner kind of V bottom, it is clearly failing again. And this is something we talked about early in the summer. The initial drivers of that rotation are index vol compression and over move, call spike, high implied vols, high call positioning, followed by Vana charm flows pushing the other way. But now that there's pain in that area, there's been dramatic overweight in hedge fund positioning and across the board in these names on a fundamental view basis. And there's a decent amount of pain in that space. And if it continues to break lower, you're going to see more kind of pain. And so I would expect a little bit of pain in this NVIDIA number, which could, even if it's a neutral number, I expect a down move, which we have seen the last 2.5 years on average on these moves. And again, that's to a great extent because of the call skew that you highlighted.
So going into this NVIDIA earnings report, it should be out any second, and it just flashed in front of me. 222 on the EPS versus 209 expected. So EPS not up 99% over the year, Jem. It's only up 111% now. That's a beat of 6%. The revs are higher as well here. The expected move, though, for today's report was about 5.4%. And so if you're looking at the 0 DTEs, for example, that brought you down to about 197 up to 222.5. This market reaction so far is very much contained here.
Yeah. Which is what I would have expected, by the way. I think a down muted move is the most likely move.
Down muted, and the NASDAQ here, 29,340. Obviously, what Jensen Huang has to say here, the CEO of NVIDIA, after hours, and his guidance, his discussion on their gross margins, which, if the numbers I see are correct, their gross margins are down to 75%. So even the great NVIDIA can't stave off the amount of money it costs to buy these chips, Jem. The semiconductor companies are still charging an arm and a leg and getting away with it here. Okay,
at some point, it's all about this CapEx, right? And so any read through on that CapEx is the key. But again, I want to be clear. My view is that as long as these numbers aren't way out of line, it's hard nowadays for numbers to be way out of line, especially for somebody as big as NVIDIA, where all the channel checks and all the things are going on. As long as it's not way out of line, the call skew decays. Vol compression means call skew decays, which means dealers who are short those calls have to sell their long stock. That's how this works. So the pressure at baseline with vol down in NVIDIA is a sale in stock. And so the highest likelihood is low, small move down, not guaranteed, but generally that's why it's been small down or down in general. And this time people are starting to pick up on that. Vol has gotten more compressed going into this with a downside bias.
Okay, so even so, Jem, 76.92 here on ES. I mean, I'm looking at the immediate move in NVIDIA, and it's down a little bit now, just under 205 or so. But seeking the broader market, there's not much movement whatsoever. Okay, so if outright, go ahead.
Which is what I would expect. Again, they priced in a much smaller move this time for good reason. And it's not just good reason. The more that vol is compressed, the less likely there's to be a move. That implied vol compression here, they beat every time. It's gone down every time, right? Same reasons. It's flows. It's not really about the number here. We know the numbers are going to be good. Broadly, it's a matter of can they outprice what those calls are priced on. And that's really hard to do.
Jem, we were looking at this from the 9 days to go expiration cycle yesterday when we were thinking about our NVIDIA trade. And it looks like for those that were operating on the same time horizon as me, staying a little bit beyond the expected move, but still collecting around $1.77 credit on those $5 wide strikes. We're in at 207, so pinned right in the middle of the range. Working out swimmingly so far. We'll see if we can keep this going, though. Jem, you and I spoke a week ago, and we were both reacting to what Scott Bessent did with this Treasury intervention. And we arrived at the same conclusion, perhaps for different reasons, which was own scarce assets. Since the start of August, gold's up about 14% right now, despite its pullback today. Bitcoin is up around 28% over the past 11 trading days. I know that we've been right in the short term, but how right are we going to be? And is this going to keep running?
This is my surprise face. We've been talking about this for years. Gold is a secular trade. There are structural inflationary pressures. We've talked about it at length for years. For anybody who's following us, they know this. But those that aren't, populism at its core is causing fiscal spending. Druckenmiller writes about austerity. Good luck. We're not about to do austerity, and he knows it. That is a straw man if I've ever seen one. The reality is Populism drives spending, increased spending. We were already at deficits. That's not coming back. That's the first thing. Second thing, importantly, everybody refinanced in 2021, 5 to 7 year duration. What does that mean? That means everyone, not just human beings in real estate, but corporations, venture capital, private equity, sovereign countries. Everybody has to refinance, and that is supply on the long end of the curve. Okay, that is who's going to buy that debt. That's the question you have to ask yourself. So that's two. That's the wave. There's actually four things. I said three. We're alienating all our buyers. China's selling our debt. Everybody is. We're moving to gold because of all these things. 3, that's supply. Lastly, we have global conflict, and I've been talking about it since 2021. If you put up borders and we start trying to compete with China and stop their ascent, what happens? Global conflict. Iran is about maintaining the exorbitant privilege of the dollar and putting a moat around it. That's not ending anytime soon. I've been very vocal about this. That's not ending. That's inflationary as well and pushes pressure on the long end of the curve. These pressures have been at play for a while. Some come in fits and spurts, and by the time people start giving up on gold is when you want to start buying it again, and here we are. And now it's starting to go, you want to own calls, not just the underlying. You want to own calls. You want leverage to this move. Much like I said at the beginning of this move in 2021, I was very vocal about it then, before this all started, before anybody even said the word gold, had talked about it for years. Maybe just me and Schiff. The reality is that in 2021, nobody's talking about it. And the more everybody talked about it after a 3X, the more it had to digest. And that's what that move early this year was. But here it goes again. Buckle up. This is going for another 2 to 3X in the next couple of years.
Schiff has taken a lot of crap over the years, including from people like myself publicly on Twitter.
And he deserved it, by the way, because he was long gold for 25 years. I got long it in 2021. I wasn't long it for 2020.
I will say he did post a video at the start of last year. You can go check my Twitter feed about this, where it was him partying in Miami and like gloating about how Bitcoin was so much better than, or gold was so much better than Bitcoin. I think in the following 2 weeks, Bitcoin gained like 20% on gold. So he's an interesting sentiment check, just like I can be at sometimes. Jem, before we wrap this up, you mentioned this. What's the Greek phrase I'm thinking of? The Thucydides trap, right? A rising power is ultimately going to challenge the empire, and the empire, because of its concern of decline, is going to make mistakes that make conflict between the rising power and the old power inevitable. Please, someone pronounce me my pronunciation. I'm Italian, not Greek. Jem, is that
I'm not going to try and correct you. That is my view is a little bit nuance there. I don't think that this had to be inevitable in our confrontation per se. I think the U.S. had an ability 10, 20 years ago to proactively do a lot of the things that it's now a little bit tardy to doing, which is trying to put up some walls and protect kind of our internal manufacturing, our internal production, our people. Unfortunately, we allowed kind of the free market economics, what our founding fathers actually argued against, just the corruption of money and power to enter the system, and so all we've done is favor all the systems, the Federal Reserve, monetary policy, Reaganomics. All of this is supply side economics. We sold the people of America a lie, which was trickle down economics. And now we have to pay for it. And the reality is, when you let the pendulum swing that far, it's never just going to swing towards the middle. It's going to overextend the other way. And we're still just far from the middle. So buckle up. Again, I've been talking about this for years.
Yes.
This is a decade to 20-year thing that you need to be preparing for. And people are starting to catch up. People
can go to our YouTube channel and look at the conversations that you, me, and Victor Jones were having in 2023 and 2024, and check the scoreboard. Here we are now. Interestingly enough, amongst all this, I feel like now that we're heading into Jackson Hole, before we get you out the door here, what's your take now in the markets heading into what's obviously going to be the next big catalyst, and perhaps the last big catalyst of the summer, because we get through next week, And then we're heading into Labor Day. And then, it's a normal month again. Kids are back in school. Camp's over. Mom and dad are back at work.
Don't sleep on Jackson Hole. And the reason I say that is I don't think this Drunken Miller op-ed is a coincidence. I don't think it's a coincidence that it rhymes with everything you've heard from Warsh, but that Warsh has not acted on. I think, they are setting up for a defense of the dollar, a broad commentary expect a commentary from Warsh coming out that might surprise the markets a little bit about really talking about a need for, against austerity, cutting Social Security, or doing calling for less spending, and also hinting, although I don't believe they'll follow through with it for 1 second, of potential, a stronger dollar in defense of currency. That will be the opposite of what we're hearing from Besant, so that'll be surprise the market. I want to be clear: this is a good cop, bad cop routine. Okay, the market will eventually learn this, but it is on one side of the policy debate, and is not watching for this. And the whole goal here is to do what Besant is doing. That is the thrust of what we're doing. But to argue that it is only doing it because it has to, and we are going to point the finger at Congress and tell the world it's Congress's fault. And force a narrative that also allows us to cut Social Security in the coming crisis. This is not a coincidence. Drunken Miller doesn't just come on the stage, pick a fight with Besant without them talking for media. This is not what you think it is. I'm telling you, they are preparing a good cop, bad cop routine, and it is a hint, in my opinion, for what you're going to hear at Jackson Hole from Warsh.
We are pawns in someone else's game. Jem, great way to end the program here. You and I will pick this up again next week. We'll check back in to see if we get that vol expansion coming out of the summer. More importantly, where the flows are going. Now that we've made our way through Jackson Hole, NVIDIA, OPEX expiration. Folks, we're going to keep overtime going here, though. Jem, thanks for joining us.
Wonderful being here. Thanks for having me. Always fun.
Folks, we're going to keep this going for a little bit longer. Over time today, dare we say? We have a lot to recap around here because this obviously is a very big session right now. NVIDIA is trading in at 206 here after hours, after their earnings report where they blew everything out of the water, and yet the stock is still down. No surprise there. We can go to that earnings report card, by the way, if we have that up ready for the screen here, just so the good folks can see what the numbers actually are. Tick tock, tick tock. There we go. $2.22 of EPS versus the street estimate of 209. So that's a beat. 19% quarter over quarter. It's also up 111% year over year. Revenues are up 106% year over year. It's all good. It's fantastic. But you know what? The stock is doing what it's done historically in recent quarters. If you heard us yesterday or today, or at least me over the past 2 days talking about this on air, the past 6 quarters, NVIDIA has fallen 5 of the past 6 quarters one day after its earnings report, despite beating on both EPS and revenue 6 out of 6 occasions. The 1 week expected move thereafter, on average, has been 4.8% to the downside here. So for those of us that were necessarily thinking maybe this thing goes down, but it's inside and down, 195, 190 short call spread, short put spread. 225, 230 short call spread. There's your short iron condor. We're still pinned close to the midpoint of this range. So it's working out. Inside is working out. What's not working out for me is CRM. CRM just had a fantastic set of earnings here where they beat across the board on everything. EPS was way higher than anticipated in the 5s versus the 3s. And what do you have here? A stock that goes from 205 to 230. It's outside the expected move for what it's worth. So if you were sitting short the 232.5, 235 call spread going into today, you're right up against it right now. If you had put this on the short iron condor, by the way, you were collecting 35 cents of credit here. Okay. On the short call spread side, it was 13 cents. So the break even is 232 and 63 cents. I mean, we're right there. So that could be problematic. For me, problematic because I'm sitting out at 23 days. Now, this has a little bit different level of extrinsic value, so I'm not going to be in as much trouble. But if this does open up at 230, 232, I'm going to be testing the short call spread side of my 230, 240, 175, 185 short iron condor there. Other than that, I did not have anything in CrowdStrike, although CrowdStrike is out here after hours, and it's another banger. At least that's what the stock's saying. Trading up to 211 from 189 here, as it were. What did CrowdStrike do? 31 cents of EPS versus 29 expected, 147 on revs versus 144. Up all around operating income, expenses, cash flow. Okay, so we made it through. I hope you survived NVIDIA earnings day. We did here, 76.94 in ES. Did you play a day for the market not to move whatsoever for the fourth day in a row? If so, congrats. I know TP did, and if you followed him, he did a pretty well job today because this market just got totally pinned throughout the session. What will tomorrow bring? You can find out tomorrow morning, 8:30 Eastern, 7:30 Central Time, when Jermal and Mike, and then myself a few minutes later, join the show to kick off your trading day. We're getting into the teeth of it, though. Jackson Hole is coming up. This is a big catalyst. Warsh will speak. Will he try to cap the long end of the curve with Besant? Who knows? But now we've got through NVIDIA. We've got through VIX expiration. We're on the other side of monthly OPEX. The flows can resume, and this market may start to get unstuck. So let's keep an eye on that NVIDIA earnings call later. Futures market opens up in 1 hour and 25 minutes for the Wednesday session. And Tasty Live programming resumes on Wednesday, 8:30 a.m. Eastern, 7:30 a.m. Central Time. So we will see you there. Good luck trading. And if you're joining us for the first time today, like and subscribe for more videos.
What's up, everyone? Happy Wednesday. It is a beautiful day in the markets here. E-minis down 8, Nasdaq down 100. We got some numbers that just came out, some PCE numbers that came out. Kind of chopping around this market, but nothing too crazy. My name is Mike Butler. I'm here with Jermal Chandler. Join us on the YouTube chat. We're going to be streaming live all day. We'll check out your questions, trade ideas throughout the morning. But it is NVIDIA day, and that's, I think, what a lot of people will be focusing on this morning.
It does seem that way. It is an NVIDIA day, and I imagine it's going to be quiet heading into it, right? You know, the still quiet market heading into NVIDIA, but we'll see what we end up getting here. It's been fairly quiet the last few days. I mean, I think yesterday was under 1 million contracts as far as the ES. So we'll see what we get, but a lot of the themes still remain. I mean, AI is still a big theme in the market, where yields are. 30-year yields still being elevated is a big theme in the market. And then, of course, after NVIDIA, we got Friday. We will have the Jackson Hole meeting. We'll hear Chairman Warsh sort of set expectations for what we can expect for rates going forward.
Yeah. And from the CME FedWatch tool, it looks like it's going to be another hold for now, but maybe a 25 basis point hike in later half of the year, but I doubt it. I don't see it.
Yeah, I know.
Like, prove it. This is just last year over again. Just prove it to me.
Yeah.
Actually move the rate.
Yeah.
But some key events happening after the close. NVIDIA, of course, and then there are some other earnings that are interesting too. But I would imagine the majority of the market's going to be focusing on NVIDIA. We got Salesforce, CrowdStrike after the close as well, and then tomorrow morning you've got your dollars, the Dollar General, Dollar Tree.
The dollars.
Yeah.
The dollars. The Dollar Brothers.
Mm-hmm. The Dollar.
Yeah, somebody actually asked us about a CrowdStrike calendar in the chat, so maybe we'll look at that at some point when we get to the platform.
Cool. Yeah, NVIDIA's going to be interesting. We'll get into that a little bit later today, but why don't we lay out the schedule?
Let's do that for the people here. On this lovely Wednesday, August 26th, we do have trading charts with Tim Knight. I mean, I know we have some stuff before that, but that's at 9:20 a.m. We got 9:30 a.m. Tasty Research with Julia Spina. We got Confirm and Send with Chris and TP at 10 a.m. Central. And then Risk and Reward with Gus and E at 10:30 Central. Don't forget about Trade Ideas of the Day. A lot of people seem to love that segment. I actually think I figured out what I'm going to do for my trade of the day. Those kick off at 11:30 a.m. But in the meantime, we will have Tom Preston join us at 8:45 a.m. for live trades. We do, of course, have the opening bell at 8:30 Central Time. We have Morning Movers with Gus Downing at 8 a.m. But right now, It's 7:35 a.m. and we'll be seeing Chris Vecchio in just a second here.
Yes, we will. And he's got some things he's got on his mind for sure. But I think when we look at the futures moving today, at least in the morning session here, you've got some things chopping. But like Jermal said, it's probably going to be an inside day until after the close, unless there's something that happens kind of just on a whim here. But crude oil down 2.5%. This is a continuation of yesterday's move. And I would say you kind of see it coming, or you saw it coming yesterday, because you had the backwardation getting zapped out of there and the tail end of the curve dropping as well to like 72, 73. Let's see where we're at right now. Yeah, 72 in these later two cycles now, 73, 74. So yeah, we are almost at a point of backwardation here between the 22 and 50 days. So that's telling. But the rest of the futures moving to the downside, you've got live cattle, lean hogs moving down about 1%. Everything else that's within 1%, it's kind of just your average move. XRP futures down almost 5%. This one was leading the charge to the upside a few days ago. So a little relief sell-off there. And then to the upside, you got natty gas up 2%. You got wheat, corn, soybeans. That's interesting. All those are up. Wheat is up 2%. Corn's up 1%, and soybeans up 0.5%. But seeing all three of those move at the same time tells me there must be some ags numbers that came out recently.
Well, yeah, it is the end of the month. Maybe that might have come out or is coming out soon.
Yeah.
Yeah. Let me see here, actually.
And then silver moving to the upside. But why don't we bring on Chris Vecchio and see what's on his mind this morning? Chris, how you doing?
I'm doing well. What's grinding my gears today?
Is that what this segment turned into?
Yeah,
a little bit.
The old
maybe?
Family Guy sketch.
Yeah,
I think that's Family Guy before it was canceled and then brought back on the air.
Yeah,
so that's like OG Family Guy.
I think that's great.
Either way, though, yeah. What's grinding my gears? Yeah. We can go into oil. You know what's really grinding my gears here today? How come oil's down another 2% and stocks don't care? We're down from 90 to 88 down to 80 over the span of 3 or 4 trading sessions. Stocks just could not care less right now. And all the more reason to be paying attention to this earnings report that we have this afternoon in NVIDIA, which I know we're going to be covering extensively here and talking about almost ad nauseum today. But oil, to me, is the most interesting part of today's move so far. Iran, Oman, they're talking about opening up new shipping lanes. The U.S. is clearing the Middle Passage. Oil apparently is moving through the Southern Passage. We had footage yesterday of 15 tanker-to-tanker transfers, over 20 million barrels of oil that were exchanged just outside Gulf of Oman. So clearly some oil starting to move, some. But Mike, the number one thing that you've been pointing to, which I think underscores all this, is the backwardation in the curve is just dissipating. So the market's telling you that a supply issue is becoming less of a risk near term right now. I suppose that's the good news. But oil is different than all the refined products, and all that oil needs to make it to the refinery so we can start rebuilding those refined products. Gas futures, distillates, heating oil, all that stuff is still fairly lofty. So yeah, oil down is great, but the market understands we're going to get the inflation no matter what. Let's see how everything else does before we can get too excited about this.
Yeah, I think that's it. You said the market understands it's going to get the inflation no matter what. And this speaks to something that as traders we've often said. Everything works until it doesn't. This oil trade is not the same oil trade as it was earlier this year. So that's one of the reasons why I'm not interested. I'm like, if I'm going to trade it, I want to trade it where it's high volatility, where it's actually moving regularly on a day-to-day basis. And right now, I don't necessarily. Right now, the only thing you do is just speculate on the move and what direction. And we have no idea what directions that's going to be at the moment, especially at 80. I don't know where it's going from here. I don't know if it's going to 70. I don't know if it's going back to 90.
No, and listen, there was a short iron condor that I put on earlier this week, 72, 73, 92, 93. I say earlier this week, last week. It's now 22 days to expiration. And at 29 cents, it's currently trading for 24. I'd love to see a little bit more decay here, but the fact that it's come down so hard and volatility has come down with it. The IVRs were in the mid-20s. It's now 18.7. And I've only cleaned out 4 cents, 5 cents now. It doesn't feel right. So I may want to just get out of this reset, go out a little bit further in time. But yeah, I mean, right now, selling the call spread side out, that maybe you break this down into individual trades if you're doing something similar. You, the viewer, right? If the call spread side was in for 20 cents and now it's trading at 3 cents, you wouldn't do that on its own anyway, right? So get rid of that. Let's see what happens with the short put spread side. I'm thinking that's how I'm going to manage it here. But yeah, oil down big. Some of these positions are paying very lightly with this collapse. At least you've been directionally short. But now we're back to the midpoint of recent trading ranges. So not a bad place if you're willing to set aside maybe a longer term bit of capital. I know folks have become more and more short-term focused, 0 DT, 1 to 3 DT. But if you're willing to put something in an oil in that 50 odd days, then this could be a good spot to do it. And quite frankly, that's what I'm going to be doing when I kick out this short iron condor. Oil at the midpoint of a multi-month trading range. Not a bad place to take a lick.
Yeah. And I think with the implied volatility cross, you can see it here. If you layer on implied volatility on the lower half of the chart with the indicators tab up here, you can see the raw implied volatility cross. Like just 2 weeks ago, this was trading around the 70s, 80s in implied volatility, and now we're at 55. So there has been a big vol crush there, and that is to be expected with the flattening of the curve and the reduction in price for sure.
Those two things have gone hand in hand. Curve gets steeper, volatility goes up, volatility's in, backwardation disappears.
Yep. Intuit had a pretty big downside move, down about 35 points after earnings yesterday. Was that a blow in the horn?
Mm-hmm. Yeah, we're blowing the horn on that one.
I like that.
For sure.
Chris, what do you think about this move?
I believe when we were looking at this yesterday, Intuit was looking at an expected range up to about 400 and down to about 315 or so. It's still trading within the expected move, technically speaking, but it's been a really bad decline here right now. And it's just another one of these companies where, like, are you able to monetize AI properly? And the answer here is no, you have not. Zoom, it's a little bit of a lighter move, but very similarly. And unfortunately, this was something we were trying to get filled on last call yesterday. The 89.90, 111, 112 short iron condor did not get filled on that. But for those that did, we're trading it at 94. So, the short put spread side may be getting tested slightly here, but you're still not above or beyond either of the short strikes. So if I were in that, I would take that off right here at the open. I mean, look, guys, these software companies, they've been part of a really nice little bounce that we've had, generally speaking, in recent weeks, where they've outperformed semiconductors substantially, right? You go to the beginning of July, software has been killing it compared to semis, and they've been mirror images of the same trade. Semis up, hyperscalers down, software down, semis down, hyperscalers up, software up, because the better that the semiconductor companies are doing, the more AI there is, and the more AI there is, the bigger threat of a risk there is to the software model of, seats and recurring revenue and yada, yada, yada. So I'm leading into some of these names right now, looking for directional neutrality. CRM, I have now a short iron condor on 230, 240, the 175, 185. It's at 23 days to expiration. I'm liking the fact that we're getting a reset here after this recent run up. I think that's the takeaway right now. You're getting enough of a drag in some of the names that matter in the software space that if you're looking for directional neutrality in a CRM, a Salesforce, this is giving the market a chance to pull back and reset and calm down when it was trying to break out previously. So for me, you don't need to be in the Zooms or the Intuits today, but there are opportunities, plenty of opportunity in software. Just keep in mind that NVIDIA coming up, that's going to knock around this entire market. It's going to domino through everything. So if you're trading CRM like I am, I'm not doing it through the end of this week. I have a different time horizon, so it's a little bit insulated from what NVIDIA might rot.
Yeah, I play this one to the downside. I mean, a couple of these software names, minus Microsoft, of course, didn't perform well on earnings. I was wondering if this one, I felt like this one would not. And so that's why I did it to the downside. There's no other way to say it other than that. I did some calendars. That's why we were talking about blowing the horn earlier. When Mike said it, I was like, yes, we got one, baby. Exactly. 330, 325, 320, classic setup, just layered into it. And it's sitting right at this nice price right now. So, usually when it's sitting here, it's like, I'm going to have to be active immediately, I think, because those 330s can easily go from making some money to worthless if this thing keeps tanking or if it bounces back hard. I guess we'll see what we get, but I'm going to have to be active on the bell here.
Yeah, I think it's I think it makes sense. Totally. Downside move to or right at the expected move. I think it'll be a nice trade for sure.
Been sitting here all night, so
yeah,
that's a good thing for the trade.
Indeed.
No continued bleed out.
Right. How about some housing data, which is this out of left field? Maybe
housing data.
Yeah, I mean, guys, looking for opportunities away from the AI space, I think it's worth taking a look at what's been going on here. Rates go up, mortgage rates go up. I've been harping for the past several weeks that if you were to take the spreads that we had back during the Biden inflation era, now we're in Trumpflation era, mortgage rates would be above 8%. Okay, so the fact that they're still hanging out in the high sixes is somewhat of a miracle. But I suppose it does make sense, because why do you have those spreads in 21, 22, 23 to begin with? Because rates are on their way up from very low levels. And so prepayment risk is high. Lenders are effectively saying, yeah, if rates go back down, people are probably going to refinance right away. So we're on a little bit more here now, right? Like no one's disillusioned that rates are going back down into the mortgage rates are going back into the 2 or 3 range. So prepayment risk is lower. Okay, spreads have come in a little bit here. Nevertheless, you're looking at this data. The data is just horrific right now. New home sales in particular, they're plummeting. And when you have interest rates sitting at these levels, it brings up major questions for some of these names like Pulte Homes, Toll Brothers, things that you would find in ITB, for example. So when I'm looking at this market right now, I already have enough rate sensitive stuff in the books because I'm trading ZN in ZB. And with the rally over the past 2 days, I used an opportunity to short more of the curve because I think this is all asinine what Beston's doing. And oh, by the way, we just got a 10% decline in oil and all we could get was 1 point higher in ZB. Okay. I guess we'll see what Warsh has to say. And oh yeah, Warsh now doesn't need to be so hawkish this week because oil's 10% lower on the week. How has that been doing for the long bend of the curve? So if bond yields are spiking up here again because of Warsh and Jackson Hole, the home builders, they don't have a strong backdrop for them right now. And so maybe trade of the day later today, we'll be looking at some short call spreads in some of these names. Ilya keeps telling me that no, bond yields are going to come down because of recession. Recession isn't good for home builders. So what's the play here then? They're kind of stuck between a rock and a hard place where the economy is going to be experiencing too high inflation, too high interest rates, or we're cutting rates for the wrong reasons because people are losing their jobs. So I think we should be looking at the home builders with a more discerning eye here. And yes, the data's in the background, but this is a train that's not stopping right now.
I mean, 100%. I agree with you. I just don't know which way to trade it. For a couple of reasons. There are a lot of different vehicles, but some of these vehicles, like they're kind of wide, the options wide, and that makes me feel like we're early to the trade. Like there's not a whole lot of volume in them yet, right? But I completely agree with you, man. And then I also, how much higher do yields go from here? Like you said, I got a bunch of rate sensitive stuff in the portfolio too, and I'm curious, like, where are we going from here? I mean, are we going to see like a 7% 30-year yield, or is there something that does bring it down? But to your point, I mean, even if we do have a recession, that's also not good for this housing market. So I've been grappling with this myself, like which way I want to do it. And do I do it now or do I kind of wait till we get a little more confirmation here? So I've been thinking about this. This was one of my ideas too last week. And I was like, I'm going to do a trade of the day in one of the home builders. And then I just couldn't find anything I wanted to do. So yeah, I mean, it's literally stream of consciousness here right now, but I've been kind of confused about this trade on what I want to do. I do think there's something there though.
Yeah, I mean, obviously the chain's thin right now, but if you're going over to Toll Brothers or Pulte, you're seeing that there's pretty wide spreads in some of these names. ITB is DR Horton, Pulte, Lennar, NVR, Sherwin-Williams, Toll Brothers, Home Depot, Lowe's, Masco.
That's Lennox. Why I did the Home Depot trade, by the way, as you mentioned, that Home Depot and Lowe's. That's why I traded them. It was like it was the off way to trade them, right? But I want direct exposure, kind of like you're talking about.
Right. But that does, we're looking at Home Depot and Lowe's in the wake of their earnings here, and neither has really had a substantial run. And Lowe's is actually lower than where it was after its earnings right now. So if it's not going to be something like a short call spread in ITB or XHB, which you're looking at those options chains, they're pretty thin.
ITB is better than XHB.
Yeah, well, and they both kind of suck.
I know.
We're going to be frank about it. Then you probably have to go over to some sort of proxy to express this view. So for me, Jermal, I love, you always put it on my radar. What are your beta weighted deltas in your portfolio? We're going into the teeth of some very significant event risk here, right? Would doing a trade like this bring down the beta weighted deltas and the correlation of trades that I have in the portfolio at present time? And for me, the answer was yes, because I've looked at it. So that's why I'm interested in doing this. Now, there are other ways to bring down your beta weighted deltas. You could reduce your position size. You could just take positions off entirely altogether. But putting on a ton of short dated risk heading into the teeth of this event, if it's NVIDIA or Warsh, and you're like, oh yeah, I'm just going to be short puts in the S&P 500, brother, you are rolling the dice. And that is not something I would be doing with your money. So everything risk defined, everything in a reasonable fashion, not to put too many eggs in one basket here.
No, I like the idea of the short call spread. I mean, for a lot of reasons, but also too, it kind of helps you keep an eye on the position because something is about to go. Something has to go down in here in the next few months. I mean, just the way that things are going with rates, and I just feel like I think you're right, man. This home builder situation is something to keep an eye on.
Well, just like work with Mike. Tell me a situation. Lowe's blows through the short strikes and a short call spread here. What is going on in the broader market where Lowe's is trading north of like 225? Because we just saw its earnings. Mm-hmm. So what's the catalyst that's going to have Lowe's or do something of that nature? I would think has to be good, broadly speaking, for the entire market. Rising tide lifts all boats, including this one that's been sinking top left to bottom right for the past year.
I got one. All of a sudden, Trump, they create some type of way to stimulate the housing market. I don't even know what that may be.
It's the 50-year mortgage, baby.
Yeah.
100-year mortgage.
It's something like that. That's it.
When that came out,
please stop stimulating demand.
Did you see him roll his eyes?
When that came out, my good friend that is like one of the top mortgage brokers in Chicago, he works at Wintrust. He was like, "This is the worst product I've ever seen in my life. I can't believe they're actually talking about this. It's just all interest."
It's all interest.
It's all interest. Like if you think about the amortization schedule of a loan, it's all interest in the front. So if you have a 100-year mortgage or a 50-year mortgage, you're paying interest, 90% interest for how many years?
You're never going to own that home.
Yeah.
Ever. Your kids might not either. But Chris, you asked what would be the catalyst. That's the only one I could think of. A person who has always been interested in real estate, creating a situation that stimulates the housing market, even if it's a way that doesn't seemingly make sense to us.
Yeah.
That's the only thing I can think of.
That's pretty, the list is very small, and I think that's on the list.
Nobody had oil going to $90, and somehow that happened. All these other things.
I'm going to take the under on this. Trump's been saying about housing that he wants to make sure that the people who own their homes, they deserve to have their home prices high. So be it. But if home prices are going to stay high, and you're going to do things to stimulate demand, what's actually bringing new customers into the market to drive an expanded aggregate demand there that would force, like Jermal, if they do something that it makes loan access more accessible or brings new buyers into the market with better credit, that pushes up our home values. It does nothing for you and me as existing home buyers to want to go to Lowe's and repaint our house and buy stuff. Mm-hmm. And it doesn't do anything for the people who are coming in, by the way, because the market's going to say, oh, we now have a new 5% more people are coming into the market to buy homes because they have better access to credit and there's no additional supply. Prices go up. But that doesn't do anything for the people who want to buy those homes and buy the stuff from Lowe's because they have no home to buy yet. And the folks who are already living in the homes were like, Jesus Christ, how come these prices keep going up? I guess I better take out a HELOC loan and just milk this and cash out or refi or whatever. But no, I don't see a scenario in the short term where this administration is doing anything because they haven't, but they're not going to be doing anything to really boost supply dramatically beyond the regulatory cuts and cutting the tape, which they just did. They passed a big housing bill, to their credit. Best housing bill that we've seen come out of Congress in decades, right? But that's it. End of the road now. Where's the next thing? Stimulating more demand? Okay.
Yeah, I think really, if there were to be a change that makes a lot of sense across the board, I think you got to just juice up the incentives for first-time home buyers. Because if you're a first-time home buyer, you're moving out of the rental market and you're moving into the housing market. And once you're in the housing market, you're probably not leaving that unless there's some crazy scenario that you're dealing with personally. Because you like really, you buy a house, you're building equity. You sell your house, you move somewhere else, you're going to buy another house, most likely.
Most likely.
So I think if you increase the incentives for first-time home buyers, that could be something interesting, and it's beneficial to the overall economy too.
Just build more housing, because when we build more housing, Mike, we add jobs. When you create new loan conditions, you just add demand, and you're not creating more jobs. You're just adding inflation to the system.
Well,
so
that's
for the love of God, let's just build more housing.
Well, that's another thing. A friend of mine who's in construction is talking about how this is just clearly it's like a nirvana time for those in construction. You're talking about the build out for AI. You're talking about a lot of the roads and infrastructure that we've had are very old, and so you're making a case for that at that point for things like Caterpillar. Honestly, we've seen the way Caterpillar stock has moved. It's moved along with the AI trade, but it's bigger than that. When you talk about the infrastructure and roads, you talk about building more housing. So there's that. Could look at construction as well. Yeah.
Electricians are.
IBEW is going hard for all these data centers. They just put one of their policy folks just put an op-ed in the New York Times, I think it was, or Washington Post, about how in recent years IBEW would aggregate all of the hours for work booked, right, for the year ahead, and it was usually sat, I think, in like the low 20 million, mid 20 million range. This year, I think they have 48 million work hours booked as a union. I think next year it's in the 66 million range. 2028, it's going to be closer to 74 million. Like, they're able to book tens of millions of work hours now out into the future. The amount of work hours they're going to be doing next year will be more than like the previous 2 years combined. The amount that they did this year is more than the previous 2 years combined. So, this is a really interesting topic for me, just like philosophically. Data centers right now are less popular than coal plants, which that's how cooked the population's brain is on this actual conversation. Coal plants. You'd rather have a coal plant in your backyard than a data center? The thing that's noisier, pollutes more, uses more groundwater, puts more wastewater out, kills basically everything in its immediate vicinity. The polls are showing this right now. So we've clearly reached a point of insanity about this. But the bigger, the wonderful thing that a tweet that I came across yesterday. Everyone's saying that these AI companies, too bad they just weren't nicer about this when they were building this product. People wouldn't be giving them such backlash. They'd be looked upon a little bit more favorably. Guys, Andrew Carnegie built how many libraries, public libraries in this country? Thousands, right? Spread his wealth around. People learned how to read thanks to him. He's still called a robber baron. History has not treated him kindly. So what should the AI data center people do? Plow ahead. Keep going. At least that's their attitude.
I mean, that's what's going to happen to Ken Griffin. That dude has his name all kind of museums here. But I don't know if that's what he'll be remembered for.
I mean, you can try.
Doesn't he own a piece of the Constitution or like a copy of the Constitution?
I think I did hear that once, yeah.
There was like the Constitution
money, right? Like, you
DAO.
definitely do that.
Yeah, folks don't remember this.
It's either that or you buy a chimp and call him Bubbles, like.
That's some national treasure money. He just wants Nick Cage to break through his door and grab that thing.
That's a great movie. Those are great movies. Yeah.
Which Nick Cage, one of the underrated actors, unappreciated. Right? No, he got deep in debt. The reason why he's done all movies recently is because he's like, I've got to work to get out of debt.
Right. No, I remember. But at one point in time, he did own a bunch of crazy stuff.
Well, yeah, that's why he got into debt, because he's like, I'll buy that, I want this and this and this. Give me two of those. Right? So.
Crazy times. Can't do that when you're making snake eyes. Can't do that. No.
Absolutely not.
No, but he just did. Hey, listen, he Face Off is fantastic.
I love it. Yes. Castor Troy, one of the greatest people of all time. Family Man. I love that movie too. Yeah.
He has a great deep library.
Literally.
And Con Air. Who could forget Con Air? It's the best one he's done.
Gotta love him.
All right, boys.
Gotta love him. All right, Chris. Appreciate you. We'll see you a little bit later.
See you when I see you.
Adios. E-minis down 12. NASDAQ down 125, down 130 now. Bitcoin saw off a little bit. But yeah, it feels like it's going to be kind of a choppy market. It almost feels like a little SPX Iron Condor for SPX Global Trading Hours here, because I think it could be just a neutral day. But we're going to take a quick 90-second break here. We'll be back with some more content on the other side of it, but join us on the YouTube chat if you haven't already. We'll be scanning through it for some trade ideas. Let us know how you're going to trade NVIDIA after the close today. But yeah, we'll be back in about 90 seconds. What's up, everyone? Welcome back to the show. We got E-minis down 10, NASDAQ down 118, but we have a very special person in the room, Mr. Gus Downing, with some morning movers. Gus, how you doing this morning?
Good. What a kind intro. I could be better. Bonds are opening down a little bit, but at least we got some interesting stories on the board. It's the first 2 days of this week were slow ones. Felt like I had to scrape the bottom of the barrel to find some good stuff. Today, some good stuff has presented itself. So excited to get into all of it.
Love it. What do you got?
Well, first story of the day, and this is a unique one, a new one for me, but Boston Scientific has just come out and said that they are actively undergoing a cyber attack right now. They do not have a timeline on when this will be fixed. It is completely preventing them from shipping is the biggest part of the issue here. Shares obviously set to open down today after this announcement. It is disrupting their access to company information systems and applications, primarily shipment services. They submitted an SEC filing this morning to basically say, hey, guys, we're trying our best. This is not in bad taste. We would love to ship things. We just cannot. Quote, while the company is working diligently to restore affected functions and systems access, the timeline for a full restoration is not yet known, end quote, per the filing. Boston Scientific, I don't know. We see cyber attacks all the time, but I don't know if I've ever heard a company come out and say, we're being cyber attacked right now. And we're trying our best. We can't figure it out. So also, Boston Scientific always a funny one because they're a medical device manufacturer by any serious metric. I think of them as a company that makes the cool robots. They were kind of first to making the robots that could, run around, do flips, all that good stuff.
Yeah, crazy world. And what if this cyber attack is non-human attack?
It certainly could be.
That would be something.
These AI agents keep breaking containment and trying to do these things, and I don't know how
Breaking
much Boston
containment. I
Scientific
like that.
has their hands in AI, but yeah, absolutely could be. I'm sure that AI is being deployed to stop whatever the cyber attack is on the back end as well. But yeah, Boston Scientific, BSX, interesting spot in a trading context as well, because depending on how long this goes on, like this isn't a move you can just auto fade and say, oh, well, they'll get this figured out and everything will be fine. I mean, should this continue for 2 more weeks and they wind up 2 weeks delayed on shipments, that's going to mess up everything down the line for them. Obviously not on the greatest run we've ever seen right now in the first place. Bad time for it for Boston Scientific. So yeah, really interesting spot to trade. You could, if you think it's going to continue, if you don't think Boston Scientific has it in them to get out this rat, you could you could get short and hope that things continue. Or you could play the opposite and assume that this giant scientific company can surely weed out a cyber attack and get long if you want to do that as well.
Yeah, stock's gotten smoked, man.
Oh yeah.
Wow.
Yeah, crazy move to the downside here this year. Basically cut in half, but still pretty low implied volatility, all things considered. Like IV rank of 53, you would think that this IV, the raw IV, would be higher, but it's not the case. Yeah, it was in the 50s. The actual implied volatility was in the 50s. Now it's in the 30s. So I think if you're playing in either direction, there is some opportunity with these cheaper options, relatively speaking. Anytime you have an equity in the 30s or 20s, it's you can do undefined risks for sure. But I think debit side is the reward relative to risk is pretty high in the low IV environment of the 30 implied volatility.
Yeah, in this case, I mean, this is one where, vol is so low. I mean, this is one where you probably buy a leap call, you stick it in your back pocket, and you don't look at it if you want to take a stab at it.
Yeah.
Because vol is pretty low. That means it's not moving in a big way anytime soon.
Yeah, and even if you played if you did let's get halfway through this range back to 65 or 70, this is just where we came from March. These options are $500. Like this feels like a Nike trade when we put that Nike trade on, when we just bought the call just long term, just to be like, I think it'll eventually get back up to a certain level. Like this is an option that can multiply in price. If you just look at the option in a chart, we're probably going to see just a few months ago, this option was trading for twice as much. Yeah.
You go to Jan 2028 right now, sell the 35 put, buy the 90, 120 call spread. You collect the credit. So if you want to do it. Worst thing that happens, you take delivery at stock at what? 34 and change, 33 and change, 33.75.
The old Super Bowl setup.
There's reasonable liquidity at some of these strikes as well, relative.
And it doesn't even cost that much money. It's $495 in buying power.
Yeah. I dig
now,
it.
Of course, if you take delivery, it's more than that. Just understand, but
yeah,
on a margin account right now.
The asymmetry is nice and high. And yeah, if you get a move up to 70, 60, like you're looking at a $500 winner on your $1.25 credit on entry, because your short put loses value, call spread gains value. And yeah, that's a huge return on buying power. I like it.
But again, just so folks understand, this is an effective buying price. If you get assigned on that put, it's effective buying price of $33.75. So
yeah,
you need to have $3,300 available, $3,375 available.
Yeah.
Shit, I might do that trade. Why not?
That's the reason for the segment. Much to consider. Okay, next thing I have on the docket here. HP has partnered with Huawei, the Chinese super technology company. Huawei is blacklisted from doing business in the US. They have been since 2019. HP has gotten a special workaround here because before that blacklisting began, HP and Huawei were 2 of 6 companies to enter into super specific Wi-Fi patents that use lots of words that I do not understand. But they had a patent dispute and now have turned this into just a shared licensing agreement. HP is going to borrow some Wi-Fi tech. This is a real Huawei Wi-Fi router, by the way. We're lagging behind.
I'm glad you said what it is. I had no idea what that was.
We're losing.
It's a router. Okay.
We're losing the tech race. But sure. Yeah, they're trading off some wireless internet information back and forth. The Huawei representative said the agreement includes valuable reciprocal patent rights from HP, in addition to the patent rights that Huawei are giving up in return. So We are seeing some partnership with Huawei, which is generally a big no-no in the U.S. tech space. As far as HP shares, market doesn't really seem to care. Pretty much pretty close to unched here. HP and HPQ are two different companies after a spinoff. What was that, 3-4 years ago now? So HPQ hurting a little bit more than HP off the news this morning.
Interesting. I like it.
I don't know why either would be down, really. I mean, I maybe bad PR, but clearly a good thing to secure this licensing agreement.
Yeah.
Mm-hmm.
I think it's and this is one where you've had, the further you zoom out, you see higher highs. This thing was trading $10 higher in 2024. So yeah, could be an interesting play for sure. And these options markets, this has earnings in 2 days, or no, today. Sorry, I can't see anything.
Yeah, I was going to say it's either today or tomorrow. Yeah.
Yeah. Implied volatility, $2.50, which is pretty high. $29 stock is about 10%, just under 10% of the notional value. So that is a pretty high earnings report. And then if you look at September and October, you've got a high ratio for $2.50 for the 2 days, $3.40 over 23 days, just a little bit more implied volatility over 10 times the amount of time. So big implied volatility here. Could be interesting for even just like a short put in the 2 day with the intention to roll it if it goes down. Would be a nice return on capital.
Mm-hmm.
Cool.
Lots could be done here. And yeah, like I said, I think this is a bullish move. This is one, I mean, as you said, that I may look to fade into the open today. If they're going to give me a 1% discount, I will take it.
Yeah.
Last two things for the day today. Got a couple of earnings reports, both of them very poor. Intuit leading things, worse than Zoom, which is the second one that I'll discuss. Intuit, you can see the core numbers on screen here. It was beat lower sort of situation. We had let's see, yeah, it's guidance for 2027 is disappointing. So despite the great numbers that you see on screen here, obviously a lot of that already winds up priced in the tech space right now. And I would put into it there software as a service tech. It's it's guidance. Guidance is king. Your core numbers do not matter if you give poor guidance. So disappointing guidance for the fiscal year 2027. They said that they also go to the third decimal on their revenue projections. By the way, I'm not going to do that. They expect $23.3 to $23.5 billion in the next fiscal year. Analyst expectation was 23.7. So range coming in lower than analyst estimates on that one. Intuit set to open much lower, dragging down the entire SaaS sector along with it. ServiceNow, Workday, Salesforce, all down. IGV coming down as well.
Yeah, going to be a big move to the downside. Continues to slide here over the last 30, 45 minutes or so, down to 316. But yeah, that's the story. And I think it's going to be interesting. It kind of tees up NVIDIA in the same sense of like, they're going to crush their numbers, no doubt. But what is the guidance and how is that digested by the market? And I don't know. It feels like it could be a downside move in NVIDIA, but I just blindly play it to the upside every single time. But I do have that NDX butterfly that expires on Friday, which is a hedge against that NVIDIA position. And that's how I'm thinking about it. Because obviously the NASDAQ will sell off if NVIDIA sells off.
Absolutely. And then, yeah, there's a similar story with the next one, but Zoom, this is third quarter guidance, fell short of analyst expectations. Once again, you see good numbers here, came in at or above on both revenue and EPS. But the market cares not for frivolous things such as present performance. It cares how you're going to do in the future. They gave a estimate of EPS for the third quarter at $1.46 to $1.48, which falls just short of the $1.50 per share that analysts were expecting there. So same story here. Tech software company, good earnings, bad guidance, shares fall.
Yeah, that's the MO.
Yeah.
I want to shout you out, man, for